We're good. I think we're good. I think we're good. Seems like it. We're good. I think we're. Oh, I thought it wasn't. Actually, it wasn't good for a second. That was really delayed. Let's get the linkity link for this time. New day, new juice. Boom, ba ba boom, ba bum, 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 boom. Um, what should we call this? Triangle busted? Sure. Triangle busted. In terms of these charts, in terms of all this goodness, right? Quite the day, quite the day. Kind of just up only for the most part of the day. Ended up breaking out of this thing and going. Oh, and we kind of talked about this potential long, right? Like we were kind of saying this kind of thing. We were a little bit iffy about it. If we did take it, right, you would have got like filled on this move, and then either you would either stop loss break even, or you would have just kind of here waiting to see if it started going to the higher fib levels, right? Depending on how you trade, right? Taking this value area low trade, and would have ended up sending. Personally, I did not do anything. I have like no operation needed on my trades currently, but yeah, right. Interesting little scalp opportunity presented itself here. The truth is, I did not look at this stuff most of the day. Like, I was not feeling too good, and I ended up just going to sleep more. So we need to get a little bit caught up on what happened with everything else. Let's update our levels first and foremost. Then we'll kind of continue with yesterday's interview. 8-9 outside day. 8-9-1-6-9. I should have deleted that purple line first. Delete this. What's the POC at? 86850. Eight six two six one. I'll get rid of this, yeah. Leave this thing marked out. No, we were talking about Dell yesterday. I know Dell had quite the move today. leave that like that. This thing is still free falling, holy shit. Interesting. It didn't seem like we missed a whole lot, to be honest. Also, in terms of this thing on Soul, potentially breaking out. The Soul ETF flows have been pretty interesting, actually. I don't think there's been like there's barely been any outflows. Quite interesting in that regard. I wonder if they've added it to the ETF tracker. Oh, they have. I don't know if this is a comprehensive list, but yeah, so far there's not no outflows on this thing. Let's look at the rest of this data and then we'll get to going. Curious to see how the rest of the week goes, right? Tomorrow's a holiday, Friday's a half day. God damn, god damn. What the hell?
Yeah, Marcos. Lights low, charts glow. Lowered in the air, my finger control. Yeah. I puff that fire, then load that size. I trust the line, they trust in lies. Low in the wick, I optimize. You feeling hope, I strategize. Charts on mute, no need for chat. They guessing moves, I place exact. Spread it real tight, just like the rap. I trade, I flex, I ghost, I stack. Smoke in my chest, plan in my mind. Numbers align, I move on time. Stop loss, clean that edge, be prime. You trade emotion, I trade design. Them want vibes, I want fit. Them want pump, I want grit. Them buy high, I flip it. Now them stops get slit. Slow burning, slow earning. Every candle I've been learning. Charts whisper, price confirm it. Entry goes, they ain't this. I puff that fire, then load that size. I trust the line, they trust in lies. Low in a wick, I optimize. You feeling hope, I strategize. Charts on mute, no need for chat. They guessing moves, I place exact. Spread real tight, just like the rap. I trade, I flex, I ghost, I stack. Midnight screen light on my face. Price low creeping, I hold grace. They want breakout, I want base. Me and risk, we never race. Smoke curl up like liquidation. I wait my time, no imitation. They short the low, I hit rotation. Run, they stops, pure elevation. I puff that fire, then load that size. I trust the line, they trust in lies. Low in a wick, I optimize. You feeling hope, I strategize. Charts on mute, no need for chat. They guessing moves, I place exact. Spread it real tight, just like the rap. I trade, I flex, I ghost, I stash. She a liar. Marcos. Fire loud. My math louder. Shh. You got. I don't hope, I don't wait. I mark, they move, Mark goes. Ciao. Yo. Imaginary to you, but not the price. Drawn 2 weeks back, still hit twice. No confluence, no fib, no hype. Line too clean, like the math got sliced. Chart slow down when it near my zone. Wig tap like the momentum gone. They thought breakout, I thought fade. I was 10 pips deep in a palisade. No reaction, I just reload. Pit clean like a fingerprint code. Line invisible, weight still known. Yo, hold these has died on a level I own. Imaginary line still print real. Price hit once and sealed the deal. You press buttons, I press steel. Chart show chaos, I just feel. Imaginary marks, no glow, no sound. Came through soft, but broke that round. They never saw, but it came back down. You call that random, I call that crown. Imaginary locks, no glow, no sound. Came through soft, but broke that round. They never saw, but it came back down. You call that random, I call that crown. But I got hit at the edge of space. Line held firm like a golden brace. You saw noise, I saw math. You chase trend, I trap path. Set that level on a wine stain napkin. Price curve back like it owed me action. Whole move dive when the wick got clipped. Mad don't lie, it just flips. I don't move fast, I just set fate. Market bend, I'm a silent wait. Chart don't fake when the edge get close. And I don't speak, just post that ghost. Imaginary line still print no sound. Came through soft but broke that round. They never saw but it came back down. You call that random, I call that crown. Imaginary marks, no glow, no sound. Came through soft but broke that round. They never saw but it came back down. You call that random, I call that crown. Don't lie, chart don't ask. They think I predict, but I don't. I remember Marcos. Marcos.
Tap the line, no guessing. Chart so clean, it's a weapon. You buy hype, I'm testing. You chase green, I'm resting. Pull up, slow, then vanish. Fizz mapped out so lavish. 618, I vanish. You get clapped, I planned it. Body count high in the order book.
Wait, that's the other thing I did fucking never mentioned about today. The perps order book, someone's walking the price up. There's like thousands and thousands of Bitcoin being moved up as the price goes up. Still there now. Over 4,000 Bitcoin. Two of them haven't moved though. One of them got walked up more to 8,900, but the other ones have been left behind. At like 87. Which is what? Valerie higher still, right? Lower. Interesting. But we are starting to see some of these shorts finally get squeezed out, right? Also, a lot of them just open on Binance right on this most recent candle. Interesting. Bum, 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 bum. And we kind of talked about this on the daily too, right? But it seems like we are getting it so far. Can we rotate now out of this zone up to the next one or not? This 94 zone will be very interesting, right? This will be like the first real test on the way back up. Yeah. Okay, let's watch some more of these things. Where is my browser?
Trade divine. I don't chase them, make them come to me. Pixel perfect, this ain't luck, it's key. Calculated, cold blooded, clean. Fibs on screen, bad bitch rolling green. Deep field hit, then reverse insane. Rip through highs, can't tame this lane. You trade vibes, I trade domains. Blueprint built, I run this game. Stack like coke in a high rise suite. Buy so low, I resell peaks. Shroomed out star roof in the race. Marco stack size, why they chase? 618, get the light dip. 6-6, little more grip. 702, airway quick. 75 hit, I'm locked in rich. 786, that's the trap door zone. Biggest I'm still crying about illusion. Marcos just ran up a revolution.
Wednesday, November 26, 2025, day before Thanksgiving. I'm Jason Shapiro, trying to figure it out. So, really another good day for risk assets today. Nasdaq actually right back that the high that we've been watching. Good sign, got right back to it. S&P already through that. Dow was already through that, and the Russell was. So those are good signs. The fact that the Nasdaq performed today, I think, is a helpful sign. Well, one day, but whatever. But listen, the liquidity trade is back on. I mean, look, gold up a lot today, silver basically back up to highs, and you can't triple top or double top, Lloyd. So that one looks good. Interestingly enough, here, but as the COT is being released, still old. But the latest one is as of the October 14th, which is here. We were seeing quite a bit of tech selling into silver. So that the possibility of higher is good because we have people that sold it and liquidity buy it back. So that's sort of a positive sign. Even our friend Bitcoin found a bid today. It was late to the party. Wasn't bid.
Yeah, that was interesting, right?
Around midday here, 30ish, it did take off. So our last bastion of where the hell is the liquidity leaders that have been failing. A nice bid today. So that's good. Fixed income didn't really do anything. So that's fine. So Russell was kind of the monster all day today, and then at the end, last sort of half hour for whatever reason, off pretty hard. But so we traded well. Is it going to continue? Is it not going to continue? If I'm going to guess, the whole seasonality thing I still think is a little bit of a problem. The mini seasonality thing, if everybody knows that the day before Thanksgiving into the day after Thanksgiving is always a very bullish thing, I wouldn't be surprised that today was people buying in front of that Friday move, and to see that fail on Friday, I wouldn't be surprised to see that happen because that's the kind of market we're in now. It's a pretty whippy market. It's kind of screwing everybody around. So that would be the screw around, I think, for Friday. But it's not going to be that big a deal. It's going to be a low volume day. It's half a day. So I don't think it's going to be that big a deal. Crazy happens, but I don't think it's going to. So that's it. Markets are kind of acting as they should. This is why we really, even though we have seen signs in recent weeks that I've spoken about that have shown lack of strength, let's say, in these risk assets, we don't want to be short because the liquidity comes back real quick, and it's pretty much always going to come back. I'll say it again, until we actually fail in some positive liquidity news, it's going to be very, very tough to be. You don't have to be long, you don't have to buy whatever, but to be short is going to be not intraday, do whatever you want, but position trade to be short, I think, continues to be tough until we see some kind of failure on some sort of liquidity news. That's my main thought. All right, and always remember there's upward drift, now more than ever. So keep that in mind. All right, and that's about it. I hope everybody has a good Thanksgiving. Let's not forget what is important: family. Maybe fight with them or whatever. Love fight. Right. So be good with that. Give them a hug. Remember what's important in this time that you spend on this rock, and we'll catch up again. Well, Friday we're going to do a COT thing. The COT is coming out, and if it's delayed, there were some interesting movements that I'd like to talk about with our people. So we're going to do a COT call Friday afternoon. And don't forget, during this weekend, we do our only promotion that we do all year for people who are looking to involve either from membership or charts membership or whatever membership that may interest you. We do a 20% discount. This would be the time if you were waiting and you want to save some money and you want to see what we were about. Then this is financially the best time to check out. Right. So we hope to see you there. And so I hope everybody.
When there is mass euphoria or mass panic or pain in the market, this is usually a very aggressive or very obvious trend. So how do you, now you're reversing what you're catching a falling knife in this case, how do you do that from a smart way, or a way that is like, okay, I've got technicals backing me, I've got something backing me, not just like throwing it in hoping for the best? What would you look for in this kind of scenario of extremes?
Okay, that's a good question. So I'll give you kind of a real life example right now. So April this year, the S&P it dropped to 4,800, right? And now we just touched 6,700. So we've had over 40% gain, I believe, in 5 months, right? The Nasdaq is up 50%, almost 50% in 5 months. And if you look at the history of the stock market, anytime you've seen a gain that big in a short period of time, it's a pullback is coming. So from a macro standpoint, you have to understand that 50% gain in an index, at least you'll see a 10% pullback, right? And then you dive into the technicals. Okay, what are the levels? Where are we at? And you have one level where this year, before the tariffs were announced, SPX was at 61.50, right? So right now we're up almost between 40 and 50% between S&P and the Nasdaq. How much more can we go? Right? And we're starting to see some weakness the past 2 days. So if the round numbers break, the market loves these psychological numbers, these levels, where 6,600 is a level, 6,700 is a level. And if it starts to break with a catalyst, right, meaning what type of news is coming? Does anyone know what the news is? No one knows. But you'll see the market act much different. Meaning you might see 100, 150 point red day in the S&P, and that's your first sign. Okay, the trend has changed with a catalyst, which is the news. And once that occurs, if you try to catch that knife, you're gonna get smoked. So that's how I would look at the market: is look at it from the macro, understand the technicals, and then the very last one is when you see very normal trade, like retail traders, average traders, all on the same side. Meaning, okay, it's very bullish, it's gonna keep going higher, You have to fade the public. You have to go contrary to what everyone else is thinking.
I spoke to a trader, a market wizard, not too long ago, and he had exactly the strategy. He was like, he's always technically counter-trending because he's countering the masses, but he gave this analogy of, when something is at all-time highs, who's going to keep buying to keep pushing it? If like 90% of the buyers are in through the COT report, if there's all of this lopsided behavior, for it to keep going, more people need to get in. And where are those people? So he was like, at some point it's got to break. And he did the same thing. He was like, ironically, on positive news, you might have that break, and then he has maybe his technical structures, but I was like, oh, that's a pretty non-contrarian, but it works. He's like, then you have all the risk reward, then you have the momentum on your side because people can't get out. And yeah, it was an interesting view, and he's been doing it for multiple decades. Is this your bread and butter strategy, or is this
Talking about Jason Shapiro, we just watched his video.
I would say it's one of my biggest ones, yeah. Like I would say 80% of the profit I make is from these type of trades. And the way I try to look at the market is it's kind of like like soccer or baseball, where you have a regular season and then you have the playoffs and the championship. Normal days are the regular season. You're not going to swing for the fences every day. But in certain markets, in certain market conditions, there's going to be this big opportunity, and you have to be ready for it. And during the regular season, you're prepping for that, right? You're taking what you can from the market. Okay. Might win and lose a little here and there. But when this holy grail is presented to you, most people aren't ready because they don't know what to look for. But seasoned traders are waiting and waiting and waiting for this. And if you're an aggressive trader, that's where you make most of your money.
So would you say that over your 14-year career that you would have majority of your gains in a year from a small window of time?
Yeah. I would say in a given year there's probably about 8 to 10 weeks, 8 to 12 weeks of really good market conditions. All the other weeks are just you take what you can, maybe 1 or 2 stocks run during the week, but strong momentum. I'd say between 8 and 12 weeks, and that's where most of the money is going to be made.
So I guess the hard part is knowing when are those weeks going to be. So what are the telltale signature signs? Is it just mass euphoria, mass pain?
That's one category. Another one is based around news, like different catalysts, right? So obviously you have the Fed meetings, right? They don't happen every single month, but the months that they do, you're always going to trade around those. Meaning you let Powell, you let the interest rate decision happen, let Powell talk, wait for the reaction, and then you trade it. Versus most people will place a bet before and hope that it goes in that direction, but the real money is made afterwards, where that will set the trend for the next week or 2 weeks. So
super interesting. And from a technical perspective, are you using indicators? Are you using market structure? What are the telltale signs for your strategy?
So I don't use any indicators. When I first started, I did, but as I got more experience, I kind of leaned a lot more into support and resistance.
Oh.
Yeah, just simple horizontal lines on the chart.
Are you doing anything different to identify your key levels that maybe others wouldn't be, or is it the typical support and resistance people are used to?
It's very simple levels. Like there's no secret behind it. It's anyone can find it on a chart, but the hard part about it is just waiting for it.
So why keep it super basic? Why is your technical super basic when most people would be looking for the answers, looking to make it as, well, not necessarily complicated, but in their opinion, educated and stack the odds in their favor? Is like, if I had this and this and this, I've got so many things, so surely I'm going to be at a better position or better edge. But you kind of to get back to basics.
Yeah.
What's the benefit of doing so?
Trading alone is complicated enough, and having all these different moving averages and RSI and all these different Fibonacci retracements, sometimes it can create a bias, and it can create a lot of noise when you're actually trading. Versus just having 1 or 2 levels for the week and understanding that, okay, we're in this range. If either these levels break, then I'll consider taking a trade. And to me, that's the easiest and most simple way to view the market. And using that along with the catalyst, right?
The news.
What data comes out or news is. There's no easier way to trade.
So it's kind of like you have your key levels. There's probably a few of them. Can you break down what they would be? Is it just 2 touches qualifies? Is it like many touches? Is it around key numbers, round numbers? What are we doing to kind of give better odds to more relevant support and resistance levels?
Yeah, so I would say for resistance, the longer a stock or an index stays under that level, the more significant the level is. And same thing with support. The longer it stays above this level, the more significant that support is. So let's use Tesla for example. So Tesla this year, right, from February to the bottom, I think it dipped from in the 400s down to under or near 200, and it tested 368 once in May. And it couldn't get through, and so pretty much from February until September, it stayed under this 368 level. And that's 5 months of resistance level that it couldn't get through. And I think last week or week and a half ago,
it broke, yeah.
it broke through it, and it broke through with news. Elon bought I think $1 billion worth of shares, which is very bullish, right? So you line up that with the technical level, the 368, and the stock went from 368 to it touched 449 after hours today or yesterday. So waiting for that. If you waited for that level, I mean, you're catching 1,000% gain or trading options, right? So
I caught the same move, but I did it with the boring stock way. So I'm maybe 20% up, and you'll be 100% up in the hula move.
yeah.
It's super interesting. When you are now, so we spoke about the risk side and kind of sizing for zero. So this is kind of in a controlled way, giving your bias time to play out as opposed to just restricted validations. What about on the flip side, in the profit taking side? Is it now to the next key level, and then you wait for a similar fashion, or is it partially along the way?
So this is how I think most people should sell their options on the way up: is always sell half between 40 and 50%. And the reason why you do that is so. If the option goes back to break even, you're still up. If it goes down 50%, you're break even. So psychologically, it protects you from just getting out all at once too early. And the sizing for zero helps with that. And then selling half at 50% will completely remove the emotion, and you'll be able to hold the other half and sell much higher.
And is this just a fixed rule? No matter what technicals are saying on news, it's just 50% take off.
Always, yeah.
Okay.
Always.
When did you start doing that?
I started doing that probably 4 or 5 years ago. I'd say 5 years ago, yeah.
And in doing these two things of sizing for zero and 50% at 50%, what did that do to your trajectory in your career?
Yeah, so it allowed me to, number one, be a lot more consistent, and it allowed me to actually hold the rest of it a lot higher. So I'm never really selling 1,000%. It's very rare, but it at least lets me hold to like 200-300% gain.
Okay.
Yeah.
Walk me through a big loss, because although there's parameters in place, it is still a rather aggressive strategy of philosophy that you have in the market, which has worked in your favor. But I'm sure at some point it's backfired.
Yeah. Actually, there's a lot of losses.
Okay. Anything that stands out, not necessarily the biggest one in terms of dollar amount, although it could be, but I mean something that taught you something specific.
Yeah. So let's see. I would say probably about a month ago, I lost probably about 600,000 trading SPX. So we all break rules. I never told the story, but we all break rules. And I was in an SPX 3 DTE, so I bought on Monday, expires on Thursday, and I was very confident in the move that the market would break higher, and it didn't. And the option dropped about 20%, and then I'm just buying a little bit more, and then it dropped 50%, and I kept buying a little bit more on top of that, and
Doubling down.
It just all went to zero.
As in you're adding to a loser, and then everything.
Yeah.
So it's super interesting, because these kind of things that a year 1 trader, year 2, year 5 trader, many people have the same thing even at the 10, 15, 20 year mark, where it will be less frequent, but it still reappears. Walk me through this kind of idea of like you've got 14 years of experience, you made a huge amount of money, but then these basic seeming mistakes will still creep in. What was your reaction like after?
For me, it's a situation where people think that once you get to a certain year that you never make a mistake again.
Yeah.
But that situation, I was up a lot leading into that trade. So it's a situation where I felt invincible. I'm like, okay, here we go. Let's run it up again. Let's hit another good trade. And after hitting that big of a loss in a day, pretty much like 2 days, I had to really reassess and make sure I didn't do that again anytime soon, because you're going to do it again. You're going to make a mistake again. But I had to make sure I didn't get into that scale trading options.
What did you do after that loss? Was it more rules in place? Was it just reflecting on it? Was it just journaling and breaking it down? What kind of things assist you, especially at this part? Because you probably don't know the easy stuff back in year 5. What are you doing now that maybe you didn't do before?
So I withdrew a lot out of the account. So brought it down to $1 million in the account.
After the loss?
After the loss,
Why is
yeah. Well, the thing is, like, for example, let's say you have 10 million in an account, right? And you take a loss, $500,000 loss. You tell yourself, well, I have 9.5 million with leverage to make it.
So try and get it back right away.
Yeah, because like when you take a loss, you have the ability to trade futures or just buy shares. Right? You don't have to necessarily make it back trading options, and like that's a whole another rabbit hole where I buy 200,000 shares. Okay, I just need a 3-point bounce on this like $10 stock or $15 stock, and I'll make it back. But sometimes it can balloon to $1 million loss. Yeah.
So I guess you remove the option to do so. It's like, let me bring my account all the way down, and it helps you, I guess, eradicate the loss idea or the pain of it. Oh, it's an interesting framework. There's a lot of unique things that I'm hearing from you of ideas, and again, I've done 100+ episodes, so some of these things I've never heard being done. Where are you getting these ideas or tools or techniques from? Do you have mentors or guidance, or is it just trial and error and experimenting?
It was all trial and error. Like when I first started, so I started in 2010, and even at that time, trading wasn't like day trading wasn't really considered to be a way to make money. It was just like gambling. So just watching kind of random YouTube videos and just kind of reading things on the internet, but it was a lot of just buy and sell. Like try this, try that.
Okay.
This works, that doesn't work, and just trying to pivot from there.
You mentioned like people think that you've crossed 10 years, 15 years, or whatever, and you start to think, okay, now I'm gonna figure it out. But then still things will happen that would happen to a younger trader too. This makes me kind of feel, what is confidence in trading? Like, is it something that builds over time, or is it just temporary momentum and then you can go back to baseline? What is your experience with, let's say, confidence and maybe even ego, which is kind of intertwined there?
Yeah, so I would say confidence, it can come and go, but fundamentally, the more experience you have, the more confidence you have for the long term. But in the short term, when you are taking losses, you can lose all of it. And you can even question yourself whether you should continue trading. For example, like in April, when the market, from February to April, when the market took a big hit, I mean, at the lows, across all my accounts, I think I was down about $12 million. So
from the tariff drop?
Yeah, yeah.
Wow, okay.
Because I own shares and I'm trading options. And at the bottom, I'm down 12 million.
Wow.
And for me, I question myself, right, where I ask myself, well, how did you let that happen, number one? And should you just quit while you're ahead?
It's super interesting. I spoke to a guy who's had 40+ years of experience, and it's a question I asked for these veterans. It's like, imposter syndrome, does that ever go away? And I guess even in your case, 15 years and $millions later, you still will reach a point where you're like, was it all luck? Has my time come to an end? What did you do after that? I need to hear what the hell went on when you're 12 million in unrealized hole to climb back out.
Yeah, that's a good question. So I'll tell you a quick story. So my mom called me. So my mom called me on April 7th, the day the market bottom. Right. So she gave me. I'll tell you a story. So she gave me 600 grand.
Your mom?
My mom.
Wow,
Well,
okay.
she retired. She's like, hey, I have 600 grand, and I want you to trade it for me. Right. So I got it to about 850, and by April 7th, my mom called me. She said, "What's the account at?" I said, "It's at 630,000." So in her head, she said, "Oh my God, I'm down 220,000 from what you told me before." She said, "Take the money out and just send it back to me." And I told my mom, I said, "If you sell right now, you're gonna regret it." I said, "If you sell what I own in this brokerage, you're gonna regret it." And she said, "Okay, we'll give it another week." Week goes by, market starts to bounce, and I said, "Okay, just hold it for a little longer." Right. And today the account is over 2 million.
Wow.
Yeah. So I told my mom, I said, if you sell today, you're going to regret what happened. And I told myself the same thing. I said, if you sell everything that you own, you're going to regret selling on this day too. And I ended up just kept buying more, like buying Robinhood, Tesla, Nvidia, all these different stocks as the market kept going down. Because there's a part of me where I was stubborn, and there's a part of me where I told myself, well, if I'm panicking too, then the market must be bottoming at sometime soon. So fortunately, luckily, market bottomed, and made it all back, and we're doing much better now.
The first question that comes to mind,
That's a
how's
really
the
good point,
Yeah,
right?
you
Like,
gotta
because
go,
there's been a few times where even I'm like, the market's dumping, I'm like, damn. And I feel like whenever I start to feel some of that, the market bottoms, right? So like, it really tests like everyone at some point. Very
Exactly.
interesting that he
You know
says
what's going on.
that.
But if you tell your mom, I was at 800, now I'm kind of at 600, the natural thing is going to be, well, yeah, let's fix this. And the same thing is when you're up a large amount, you must be thinking, okay, we've been lucky here, let's call it a day. Why even choose to tell her, like, these are the numbers and what's going on, as opposed to sheltering from, and then even protecting yourself, your own, whether you doubt yourself or questioning her based on her opinions?
Yeah. Well, like she'll like periodically just like ask me, okay, how's the account doing, this and that.
Okay.
And on the way down, I was like, oh, no, account's fine. But like April 4th happened, like the market took a big dump, and then like when the 7th came, like that was a big, it really took a big hit. So I felt like I had to tell her like what the account was at. But I really emphasized, like, if you sell today, like you're really gonna regret it. And it's crazy too, because that was the day the market bottomed. The 7th,
And now that we have reached kind of a massive point, things are a crazy amount up, how are you positioning yourself where you've not only rode it all the way up, but now positioning yourself to reverse what happened? Because the key levels of resistance, kind of that contrarian strategy that you have, it works when there's stuff on the left to look at, but when there's all-time highs across the board, there's nothing on the left. How do you then break down that same idea of asymmetrical gain when there's nothing technically there?
Yeah. So the thing that my advice to anyone listening is you have to wait for the news. Because the market right now, even today, the dips are still getting bought up on every time the market tries to break lower. So on a technical side, there's traders and there's people trying to go short. But without the catalyst, it will never be a sustained move. It might be a 3-day pullback like right now, 5 days, it could be 7 days, but it doesn't necessarily mean you're going to see a 10% pullback in the market. You have to wait for that catalyst, and that's the only way to swing puts and to really protect yourself.
Everyone has a number. I think when they start out, it was like, okay, if I reach 10 million, I can throw that all into the S&P, I can live a good life, make $1 million a year, pull out half, I'm financially free. And I'm sure you had that number too at the beginning, but I guess as you approached it, the goalpost moved. What keeps you going now, where you could just like de-risk everything and put it into bonds and gold and super low risk things, and the small yield will be massively meaningful and you can sustain the lifestyle that you have?
Yeah. So I would say, like, when I was young, I had a financial goal, and there's a lot of materials like I wanted to own. And once I got that, I realized that life is actually much bigger than just myself. Meaning there's a lot more responsibility to others and to helping people, whether it's your wife, your family, your friends.
True.
If you can get to a level where you're making millions of dollars, the way I see it, you have an obligation to help others, whether it's through teaching them or just giving back. And that's how I live now. I've made enough money. I don't necessarily need any more money, but you have to have a high purpose. You cannot just work for money when an extra $1 million won't change your life. If you, let's say, if you have 30, an extra $1 million, you're not going to move any differently.
Yes.
So you have to find another reason to live other than just financial goal.
You have quite unique just positions of mindset where you were very risky in the beginning and you were very detached from money even when you had none, and that allowed you to be in the position that you are. But it's kind of like the less you needed the money, the more you made, and now you made a lot. You still have the mindset of I don't need it, and you probably continue to do so, which is quite ironic. The problem is most traders are completely the opposite, where they come in for money and they see the lifestyle on social media. It's a very money-centric endeavor in its entirety through and through, and there'll be every step by step of like the funded accounts because it's going to help you make more money and the leverage, and it's all centered around this. What is a sensible way someone can start to break this down and try and be less detached? Because that's what's been the biggest assistance for you.
Yeah. So I would say you have to look at money as just a tool. And if it's a tool, then what are you using it for, right? So for me, even early on, I use the money to help my family and help other people. So when you look at money that way, you're not gaining it, attaining it to just buy things and look cool, buy watches and cars. If that's your goal, sure, you could do it. But long-term success, I don't think it's possible. Like not just financially, but just from a psychological standpoint and just like spiritually too. So yeah, you have to understand it's just a tool. It's just a number on a screen. And if you can understand that, which is not easy. But if you can see it that way, you can really level up.
We've spoken about some big losses, and elsewhere I've also heard about a big loss you've had, 1.5 million, for example. And then the process after that, we've spoken about, you've spoken about, and I think a lot of people are familiar with sharing that experience of a painful loss, probably with just less zeros. But what about the other side, which is a massive win? Because probably that's just as dangerous. And from their perspective, the audience, it might be a case of a 10k payout. So, okay, I got phase 1, I got phase 2, I got funded, and I made a payout, and I can pay off some debts. And it's a really successful triumph for moments. And usually the stats show the next month people on the account. And that is a very widespread stat amongst the prop space. Meaning to say, a massive loss can be just as dangerous as a massive win. Can we share a moment in your career where you had a massive win, and maybe if it led to a demise, or what you did to stop you leading to a demise?
Okay, I'll tell you about the big win. I never shared the story,
Cool.
and then we can go from there. So it had this position wasn't options; it was me buying shares. So 2021, late 2021, the market topped out, and by the end of 2022, a lot of stocks were down 78%. Right. So at the beginning of 2023, I bought 20,000 shares of Nvidia, around $180 before they split.
Okay.
Right. So it's about close to a $4 million position.
Oh,
right?
wow.
So I told myself I will hold this stock until it goes over 1,000. Right. So in about a year and 3-4 months, Nvidia reported earnings in May 2024. The stock gapped through 1,000. I sold everything at 1,040. So I made 17 million on one trade.
My goodness, wow.
So that was my biggest trade ever. And that trade alone, I made more money on that one trade than I did probably my first 10, 11 years of trading. So that's a testament that everything that you do during your whole trading journey, it will set you up for one potentially massive win that can set you up for the rest of your life. So that's why I say, size for zero, when that puts you in a mindset to where you can hold things much longer. And even when I was in that trade, I mean, you're up 5 million, you're up 7 million, you're up 10 million, I still held it. And that was even harder. That was harder than selling at 17 because I got lucky, it just gapped through. It was at like 9 something, it just gapped 100 something points. But holding from 10 million until the 17 was the hardest thing.
Walk me through your day, that day where it gapped through, and how you woke up, and the moment till you closing it out, and all the feelings and everything that you went through. Because there's not many people on earth that have experienced this.
Yeah, so I would say it's a big sense of relief. Because I'll be honest, it's hard to sleep at night knowing you have such a huge P&L, an open P&L where news could come at any moment. But the thing that made me hold so long is a very simple idea. Is okay, well, the whole market's down. Stocks are down 80%, 90%. And if you had to choose two companies to buy, what would you buy? Well, Nvidia's down 80%. It's the leading chip company in the world. The CEO is a rock star, right? So I bought that. I bought Amazon too. It wasn't as big of a trade. But Amazon's one of the biggest companies in the world. It's down 70%. And do you think it's going to come back? The answer is very simple. It's yes. How far it goes, nobody knows. But when a market makes a major crash over a long period of time, took a year and a half for the market to come back, that's what made me hold the trade. But yeah, so.
When you close out all the positions and it's secure now, the relief, I can understand the feeling. But did it come with a lot of celebration, just happiness? The idea of money buys happiness kind of analogy that people throw.
Yeah.
This is the peak of your career.
No way,
What did
right?
that day feel like that moment?
I'll be honest
Big
with
trades
you,
never hit like that.
it was more of a sense of like, you earned it. Like I
It
wasn't
builds
necessarily
up over
excited
time so
because
long.
what are you gonna do with that
Just, like,
money?
numb to
You
it.
can't spend it all. Like I had no like financial like things to buy. Like I think I bought a watch, but other than that, it was just more of like, okay, you got to stay grounded because your next trade you could give it back if you don't think straight, because the game never ends, right? Whether you secure $1,000 trade, 10,000, $1 million trade, you're always going to be in a position where if you have a lapse of judgment, you could lose it all. And even at my level, like I try not to think about money think about money from the sense of it makes me happy because I secured a win. It's more of okay, well, I have more capital to work to do this and that. So
I've spoken to a variety of guests on the show, and a unanimous common denominator between all of them is the emphasis they put on data and actually
Guys,
knowing
is it me
insights
or
and
have I
data
been
on performance.
preaching
That's
all
why I'm
this
proud
shit
of the
since
show,
we started
Tradezilla. The number one
streaming,
journal
right?
accessing an all-in-one insight
Is it
experience
just
created by traders for
fucking
traders.
me
What
or
Tradezilla really
what?
gives you is deep insight about your trading that would ordinarily not be visible, whether it's through understanding your trade types and playbooks, or even insights powered by artificial intelligence through Zella AI. Whether you trade
Been
forex,
giving
futures,
y'all
cryptos, the stock
free
market, it all seamlessly
game.
connects to Tradezilla, so there's no additional work. You've seen me reference it dozens of times, and all of the benefits I've had in my trading from the insights I found from my
Right,
Tradezilla.
skip
So join
this
myself
shit.
and thousands of other viewers of the show. You'll get the best discount using, relatively speaking. And the behavior after that is just it slowly goes back to where it began, and then another big win, and it slowly goes back. And when you see people that blow an account, it's rarely just like
What is
go straight
that?
down.
Interesting. Need some more alarms on this stuff. Already got one up here. Yeah, until we get to this red box and then this poor high on ETH, we're really not touching these things. Kind of trying to let them juice, right? Juice for fucking real. We'll kind of reassess from there.
Down to the drawdown limit. It's like it's a slow trickle, and
Do
then
we have our alarms below? We do, right? Yes. Yes. Okay.
and a big jump, and then a trickle and jump. Meaning to say, after a big win, the behavior after that is usually worse than prior. And you're aware of this, which what you just mentioned. What did you do after such a big win? Did you take time off? Did you change your rules a bit to not give it back? Because I think that's the main issue that traders have. A winning trade is guaranteed. It's the losses that give all back. That's the real issue.
I'll be honest, I just traded like I just
really?
maintained like normal, yeah. Just nothing really changed.
Okay.
That situation was very unique. Like the market crashing like that, it happens lately every couple of years, like 2020, 2022, 2025.
Yep.
And I was just ready for it. Like it happened in 2020, I capitalized on it. Thank God. 2025 I was ready too. I mean, it hurt on the way down, but like I was buying more and more. But yeah, so.
Really interesting. I want to talk about some trading stats, KPIs, in the sense of what is a typical win rate that you hold, and does it fluctuate over time? Do you target it anywhere? Like this is a win rate I need to maintain, or you take what you're given from the market?
Yeah, so I would say win rate isn't really that important. Like mine is probably around like 65 to 70%, but the win rate isn't important because it's all about your net P&L. Meaning I know traders that have their win rates probably 20, 30%, but they're crushing it because their winning trades outperform their losing trades by a wide margin. They don't trade like me where I don't do the stop loss, but they cut their losers quickly and they allow their winners to just keep running. So I would say the net P&L is what is the most important thing.
And how often are you taking a position in the market?
Which kind?
Like, how often would you take a trade, let's say?
Okay. I would say I'm probably taking between 8 to 14 trades a week.
Oh, it's pretty active.
Yeah, yeah.
Okay. How do you keep an eye across the market and make so many decisions per day, technically, and still kind of be knowing that these are all A+ setups? Because if you're maintaining a rather high win rates, can that many good opportunities come around that often?
Certain environments you have to adjust your strategy. Meaning like there's A+ setups. Some I guess are better than others, but you have to adapt to what's being offered to you. So in a certain environment, this might be the A+ setup versus in another environment where let's say there's a big inflection point. There's also an A+ setup for that specific environment. So for me, you have to take what's given, and I try to take the best opportunity with whatever the market is telling me. So
And because you said kind of the hot period of the year is 8 to 12 weeks, that means for like 40 weeks of the year, you're taking what you can get and probably a little bit flat, maybe some good periods, maybe some drawdown, but not a whole lot of action. How do you exercise, I guess, what is patience? Is there any rituals or routines, meditations you do, or is it just having a good life, having a busy life to know when to walk away from the screen?
yeah, so I would say I meditate every day to just force myself to sit still. Because when you're on a
Interesting.
computer and you have access to capital, you see the market moving, you get very tempted to just see what happens, right? That's usually the start of the downfall. Is
Yeah.
you enter a trade and you say, okay, let's just see what happens. So I try to meditate in the morning, about 30 minutes in the morning and then 30 minutes at night, just to force myself to just sit there and do nothing. And I found over the years it helps me be able to sit at the computer and just do nothing too.
30
So
minutes
it's
in the
like you're training
morning
yourself to
and at
one
night,
action.
a
The
whole
meditation
hour
is
a
like going to the gym,
day.
and then a game day is being in front of the screen.
Exactly. Yeah.
Is there any specific types you will do, or is it just sitting there and kind of being silent?
Just sitting there, yeah. No, there's no real technique to it other than just you sit Indian style and you close your eyes and you just try not to think about anything.
And how, have you been practicing this for the majority of your career?
I would say yeah, pretty much almost since the beginning. Yeah.
Do you ever feel like, 'cause I've dabbled with meditation, but I would do it for like 10 minutes, maybe 15. I think it's really rough, to be honest, because thoughts fly around. But hey, you're writing off an hour a day, every day towards meditation. Does it ever creep to your mind and say, like, I could be doing a lot with this time?
That's what
I
I'm
could do other
saying.
things with this 1 hour a day, whether it's money related or business related or just family and friends and socializing. But you yet to keep out of 24 hours a day, 1 hour every single day towards meditation.
Yeah, so I would look at it as like going to the gym. Like you go to the gym to build muscle, to stay physically in shape. The meditation is a mental exercise,
Cool.
right? It keeps your mind sharp. It keeps your thoughts compartmentalized to where you know what you're thinking and you're not controlled by your thoughts. And that's part of what meditation does. Is most people when a thought comes into their mind, they act on it, right? Versus when you meditate, you're aware of what you're thinking about and you're able to analyze it, and that helps me when I'm actually trading.
It's very interesting because as humans, as smart as we may think we are very simple in the sense of we have an animalistic brain. And one of that is like your thoughts today are 90% the same as your thoughts yesterday, and they will just fly up in your head. And another thing is like your inputs create your outputs. Where if you are just watching, doom scrolling on TikTok versus always reading books, you'll have different inputs, you'll have different emotions, different thoughts, different behaviors, different outcomes. So it's really inputs to outputs. But what happens in the middle is what you're trying to control here. But I want to speak about this inputs portion where, whenever I go on X and I look at things related to the stock market, there's strong opinions for both sides. It's very easy to get skewed from one way or the other. How do you try and stick to your own bias and not get too influenced by political commentaries and people on X that are experts and so forth? Do not cloud your judgment, or do you use it as a sentiment gauge?
Oh, that's a good question. So I would say day to day, especially while you're trading, I wouldn't look at any social media. Meaning
Okay.
you might follow people on X, but if you're in a live trade and you're losing the trade, you're gonna start looking on X for that bias of why it will
Yeah.
work, right? And vice versa, right? If you're on the opposite side of the trade and you start reading, what people are saying, you might get out of it because people are starting to get bullish. So I would say for myself, I don't watch anyone on X. Like I don't ever start reading people's opinions because it creates bias,
Yeah.
right? And yeah.
Cool. But I want to refer to some of your tweets because your X is obviously a very big platform that you've built for yourself, but also you have a lot of thoughts and it's a treasure trove. And I don't usually have the luxury to really explore someone's mind from a day-to-day perspective. So I'll pick some tweets that you put out. I've got 6% battery left, so I'll try and make the best that I can. But one of them that stood out to me was, I don't think people understand how meditation before the open change my edge. Kind of what we're referring to. 5 minutes of silence erases impulses and reactions. The charts don't change, no strategy, but I did. Mental clarity is a trading asset you can't buy. You must build it. So off the back of what we're saying here about meditation, I want you to kind of explore this erasing of impulses and reactions. Have you had days where you haven't done the meditation? And it's led to a negative outcome? It's almost a reactive kind of thing where if you do it for a day, it's a better day. If you don't do it, it's not a good day. Or is it something that builds over time, that you build this muscle and resilience?
I would say it builds over time, but it can work, I would say, fairly quickly. Like I would say if you can do 5 minutes a day for a month, it's pretty impressive. It's not
Okay.
easy to do. Even 5 minutes is not easy for a lot of people.
Yep.
But over time, if you build like 10 minutes, 15 minutes, 20 minutes, 30 minutes, when you sit at the computer, you feel like you can do anything. Like I could sit here for 3 days and not take a trade. That's the mindset you get into, and it stops you from jumping into these impulsive trades where
Yes.
there's no trade there.
Okay, the next tweet that I have from you was an interesting one. It says, everything you knew about trading is wrong. Nice hook. Being right is overrated and unnecessary. You can have a 30% win rate, and as long as your wins outweigh your losses, you're in a good position. I went from chasing win rate to hunting expectancy. This is what I want to focus on, hunting expectancy. The results, my P&L became steadier whilst I slept. Change the metrics, change your life. So what is first of all expectancy, and how do you focus on that as opposed to win rate, which is a very obvious, clear thing, and you can also link it to your confidence. Your confidence kind of follows your equity curve. So steadier equity curve through hunting expectancy. What does that mean?
So basically, with the win rate, people are almost chasing something that doesn't exist. Meaning you're looking for trades that aren't there just to get your percent up. Versus hunting expectancy, you're actually waiting. Number one, you're waiting for the right trades, and you're ready for every outcome. So you're always looking for positive expectancy for the trade. So that's basically what it is. I was actually blanked out.
So can we first of all explore what is expectancy? How are you referring to as this term expectancy?
So basically, it's the outcome of the trade, right? Regardless of whether it's a win or loss, you're ready for every outcome.
Okay.
So
Interesting, because I think a lot of people do focus on the win rate only.
Yeah.
This one is a big tweet, and it's if I died tomorrow, here's everything I would like you to know about my trading. Protect capital, size for zero, live outside P&L. Trading gave me freedom, but only because I treated it like a business. And then you go on to say a few other things. So I'll focus on first of all the 3 things, your 3 biggest philosophies in the market, which we touched on all of them, but not necessarily the last one, living outside P&L, and then connecting later to treating it like a business. If we could explore and elaborate on these things.
yeah, so living outside the P&L, right? If most people when they have a bad day, you know they have a bad day, and when they have a good day, they're very excited, they're in a good mood. But you have to be better than that. Meaning, in order for you to continue to level up, there can be no emotions tied to how much money you make or how much you lose. And once you detach from that, that's how you get better, and that's how you trade more objectively.
Mhm.
Because even when I first started out, like when I would have a big day, I would be very happy. You go out, you spend the money, but then when you have a bad day, you don't want to talk to anybody. So
Yep.
so once you can detach from that, that's how you basically.
Yeah,
become a
that
trader.
was very true
I finally
too.
have a special offer to share with all of you from the US on
Very
my futures
true,
trading, which is
when
only 20% of the listeners
started.
of the show, and that is Alpha Futures, a leading futures prop firm that is working with Trader 8 and NinjaTrader that are compliant with
Even to
full
this day, it's
regulations. So the
somewhat
largest
true,
end of the balance
honestly.
drawdown in the
Like,
industry,
the
90%
losses
profit split
always
and
rub me
same-day
the
payouts,
wrong
and the
way.
most
I feel like I
competitive
just
pricing in the
fucked
industry,
something
with
up.
accounts starting at just $79. On top of that, just by being a viewer of the show, you get up to 40% off all evaluations. So why not get started with an evaluation right away, trading $50,000, $100,000, and you already know the power of prop firms and large capital. So go ahead and use the link in the description or code TOT for the best prices in the industry, plus the best discounts in the industry to make this a home run offer if you are a futures trader. What I want to explore with this one is, you know, when you have treating trading like a business, the first thing that comes to my mind is, okay, you have your monthly profit, your quarterly profit, and then you have your annual profit. And different companies will take profit out of their business in different ways. Whereas trading is very quicker feedback loops, because you can have a big win that lasted 2 days, or if you have a 3-day expiry, so you got a huge chunk of revenue, but the week or the month or the quarter is not over. So what is today's profit in the market can pay for future losses. So as you kind of grow an account, how do you know how to correctly pull out to be profit that you can spend freely versus, okay, I got to keep building a buffer and grow this account for future opportunities? Because it's a position, at least myself, I'm always toying with them. Like, if I take it out and spend it, well, I'm no longer growing the account. And if I do this too often, then my account won't be as big as it could be, and then those bigger wins won't come in the future. So it's kind of like a chicken and egg situation. But you got to treat it like a business nonetheless, which what your advice is. How do you scale out and take profits?
That's a good question. So I would say when you hit a certain threshold, let's say you start with 10,000 and you get to 50, I would take out 30,000 and put it into a different account. And the reason why you want to do that is because you're not familiar with how to trade a $50,000 account, and you will start making trades that you wouldn't normally do. Meaning, to get from 10 to 50, you had a system in place where you're taking $500 trades, $1,000 trades, but all of a sudden you have 30,000 profit. You might take a $10,000 trade that you would never normally do because this is so unfamiliar to you. So to keep yourself grounded and
That's not
systematic
true.
with the way that
That's
you're
just
trading, you
being
have to
an
take some out
idiot.
and put it into another account and trade it differently.
So
So
you have different accounts with different strategies.
exactly, yeah.
And why not do all of it in one account?
Because even at any level, you will hit numbers you are not familiar with, and the emotion gets tied to that,
Yes.
and it clouds your judgment. Because once you get to 50, you tell yourself, I'm gonna get to 100. And
It's all
it takes
percentage
100
based, right?
to
Everything's
$1,000,
percentage
position
based.
size.
10%
That's
is
the trade that you're
10%. Doesn't
The
matter
last
what
one
the
I have a long
actual
tweet, showing
nominal
briefly the main
value
portion
is.
of it. But you're basically referring to how the market earlier on humbled you. The market humbled me with a red week that felt catastrophic. I could quit instead. I built a set of rules: incremental size only after X consecutive clean months, and strict drawdown limits. The rule felt conservative and even boring, but 5 years later, it's the reason my account survived blowouts while others didn't. So the main portion of this tweet is incremental size increases only after X consecutive clean months. So usually when people, let's say, trading a proper account with their own capital, let's say you've got a rule of 1% risk per trade. As your account grows, you're 10% up. Your risk per trade is going to increase over time. So it's always growing risk. Whereas you're doing incremental based on performance. Why is that the route to size up as opposed to just, I got more money to play with, I'm always doing 1%, let me grow my risk accordingly?
So with sizing up, you have to size up in a way where you don't get more anxious and more emotion attached. Meaning, if you're trading 10 contracts and you jump to 20 after 2 months of consistency, most times people don't know how to handle that. And what I try to teach is, okay, if you go from 10 contracts to 12 and you feel nothing, then you're sizing up properly. If you go from 10 to 13 after 3 months, then that's okay too. But if you jump from 10 to 20, you will stop out of that trade 9 times out of 10.
Okay.
So it needs to feel like you're not sizing up. That's the way to do it in the beginning. And over time, once you get more experience and more bankroll, you'll know what that number is. Everyone, like I said, like with losing, everyone has that threshold of where once you hit this number, you can't trade anymore. And it's the same thing with sizing up. Everyone knows that number to where if you get beyond this number, you can't think straight. So just be very slow with the way you're sizing positions.
To wrap up the episode, I want to focus on 2 areas. Number one is the prop space in general. Now, I guess you have no need for it, but it also wasn't a tool around back in your day when you were first starting out. But now it's a tool that every trader turns towards for the sake of outsized gains from small capital, which is kind of your philosophy of like you got to bet on yourself and you got to go big because you don't have another option. With that philosophy in mind, do you think the prop arena is the best way to deploy it, or is it kind of because most people do lose in the end, so is it kind of a scam that you can avoid?
My opinion, I would say most people should avoid it because they treat it like a casino.
Right.
They say, okay, well, I could pay $5,000 for this course and learn the right way, or I put $500 in this prop firm account, and all I gotta do is pass these tests, and I'll get funded. But by the end of the year, I mean, they bought 15 accounts, 20 accounts, and they learned nothing.
Yeah.
So I would say no. Yeah, the prop firm spaces came after my time. I didn't have an opportunity to try it, but from what I've heard from a lot of people, it's like a casino kind of.
Yeah, I mean, to be honest, it encourages people to gamify it because you have this reset button. So it's kind of how you said earlier on of how you protect yourself because you don't want to be in a situation where you have access to the money in your account and you just take random trades and just see how it goes. I think that see how it goes mentality goes for prop firm trades where you just buy an account quickly, blow it, buy another one just to see how it goes. It just encourages bad behavior because now let's say you do make big payouts and you want to go to another space, deposit it and use your own capital. You don't have that reset button anymore. You got bad habits on your side, and more importantly, you never climb out of drawdown because you blew the account and bought another one. Where in real life, the drawdown you got to climb out of. So it's interesting. And the last question I always ask, and I wanted to give you the opportunity also is you got 14 years of experience and multi-8 figures behind you, and you got a trader that's maybe watching that's maybe 6 months in, and there's a big bridge that I want to try and gap. What would be some major advice you'd like to pass on to them?
So I would say you have to give yourself time to develop. Don't have such high goals in the beginning financially to where if you don't hit this number by a certain day, then you will disappoint yourself and you'll quit. So focus on learning, focus on the process first, and don't be so outcome oriented because we're all on different journeys. Our timelines of reaching success, it's different for every single person, and you have to understand that. We're all different people, and just be patient with yourself.
Beautiful stuff, man. Yeah, I think that's a beautiful way to end it because we spoke about big numbers and a lot of triumph, but a sense of grounding yourself connected to reality, a wonderful way. Brandon, thank you very much for being here right now from Vegas to Arizona to be here for us today, and a wonderful opportunity. Thank you, man.
I think we're having
Pretty good interview, right? Pretty good. Don't agree with the whole sizing thing, but right, each to their own. We have our own opinions. What should we watch next? We saw this. We saw this. We saw this. Let's watch a prop firm CEO yap away.
Introducing the man behind one of the largest prop firms in the industry, and with nearly 2 decades of market experience, he has walked the walk as a trader.
The way I approach the market is I divide my entry into different small trades, and then I manage all those trades as a wholesale. So that gives me flexibility, and that active trade management, adding to wins, adding to losses, you can make the wholesale a more profitable one. And that's what allows me to keep a very high win rate.
Introducing Saul Lokian, the CEO of the Fibers and a seasoned scalper in the markets. In this episode, Saul unveils not only his trading strategy, but also reveals the leading mistake that causes most traders to blow accounts.
Oh, this is
and
the
simple
prop
solution
firm
that
that
goes
Herschel
into cash.
uses.
It's becoming easier with AI and machine learning to understand if a trader is
Interesting.
going to make for a payout or not.
And just out of curiosity, which ones have you found to be more consistent?
That's very clear to spot and to see and to explain, because a profitable long-term scalper requires more management, patience, discipline. Most of the traders are not there yet. So most of the traders I see making payouts and getting into larger accounts are swing traders, which just requires a good signal, a good entry, and then let the trade go in your favor.
Only 20 or 30% of the guests I've had on the show speak bad on prop firms. I'm a big fan of prop firms. I think they're a great tool. Yes, there's been high payouts. Yes, there's people that got scammed, rug pulled. I'm not denying that. But at the same time, there is people that are 18 years old, made $30,000, life-changing money. There is wins and there's losses in this space. But overall, I think it's a net positive. For someone that is watching, what would you say to them? So let's get into, first of all, the 2010 era. So this is before even I came across trading. I started in 2015. But as you said, the social media presence wasn't there, the marketing wasn't there. Like, it was probably harder. But at the same time, someone can look at the industry now with the mess that it is, with its pros and cons, and say it's hard now. So now that you've seen the industry navigate for more than a decade, how do you view the social media elements and just the ability to learn and find correct guidance compared to your era where it wasn't the same?
Yeah, so I think the same problems we have with social media today are the same we had back in the day, which is creating unrealistic expectations on traders to what's achievable.
Actually, I'm gonna take a
you
piss
see Flash.
first. So let's look at these charts. What's going on in the book? Interesting. You know what I love about watching these videos is that it's funny, not funny, but just like interesting that regardless of the path anyone takes, it seems like all of us have arrived at the same conclusion on like 70% of these things.
You see the cars, you see the Lambos, you see all of that, and it always looks like it's easily achievable, and it's not.
It's
Reality,
very clear that the game teaches you how to play when you play it. The question is, are you paying attention, right? Are you learning when you play the game or not? The lessons
trading,
it gives you.
It takes time until you understand what you're really doing and your strategies inside out. And if you don't have that mentor to really guide you on the blind spots of being a trader, sometimes you win money and you don't understand why you're winning, and you lose money and you don't understand why you're losing money, because the strategy, you perform the same signals, the same strategy, and you don't understand why sometimes works and something doesn't. So I think those are the blind spots that takes a lot of time for traders to even understand they exist. The FOMO and the overtrading, and am I using the right strategy to my profile as a trader? Am I using the right strategy at the right time? Maybe I don't have, maybe my profile is not being a swing trader.
You mean based on personality?
Yeah, personality
Okay.
and psychology.
How do you connect these dots of personality type or psychology type to how someone should trade to their own strengths?
That's the question. Everyone's different. Everyone's reality is different. So you might have a different trading session. If a forex trader, you have all the available for trading, but maybe you have a job or something, so you have little screen time, or you have the whole day for trading. So if you're gonna be scalping, you better have more time to trade, right? If you're gonna be just doing position trading, you might not be doing forex. You should be maybe trading stocks. The forex market is very rangy. So understand which market, what time frame, what if you're gonna be position trading or scalping, that takes a lot of time.
These bots are back again.
There's no one there to.
These fucking bots.
Guide you on what's your individual situation, what's your individual reality.
They even left a comment on the video yesterday. Where is this thing? Like a whole thread of comments just shilling some fucking garbage. Some lady. Where is this thing? terms of the juice box, though, lower that. Hey, look at this. This fucking Melanie and Carnavaz. And every comment just mentioning this fucking lady. And they're all the same account. Like some name, dash, and then like letter, number, letter. Order flow's going crazy right now. God damn, god damn. God damn. Before we continue this, actually, let's just get a good look. Because that's the other thing is like this move up right here, this like second candle, this ding got most of the liquidity up here. So we're interesting to see if we start continuing, right? There's a little bit left, but most of it has been got. It really ends at like 917 at the snake point of control 886. Be mindful of that. So we have our alarm here. How's everything else doing? So we just got some 30-minute candles. Let's check these things out. Just coiling up, coiling up. Okay. Also curious, like, is this thing like double topping on the higher time frame or what? Or what? Right at the bottom of this value area. Or what? Or what? Is this thing gonna work or no? Oh, there's no volume on this. I'm stupid. Interesting. God damn. Okay, what should we leave open? We'll leave open the order flow here. We need our notes though. We'll get back to it. Where were we?
You overcome those, it takes a lot of time to figure that out by yourself, right?
And what worked for you in the end? Which approach?
So I was there, and I was, you know, I discovered a guy who used to thought trading pin bars on the daily charts, and you were supposed to hold your trades for days until you know the daily candles open and close. You would hold your trades
Pin
for
bar.
weeks. And I couldn't sleep at night. You know, just think on the P&L, and as you grow your account, you have $1,000 floating or $100 floating. I couldn't sleep properly, and at some point I understood that wasn't working for me. Okay, I used to close the profits early, or I used to leave the the losses run more than needed, and slowly I understood I need to go to lower time frames, and slowly I went into scalping. You know, today I scalp the tick chart. You know, I hold there's a trading room for the company, and I join the trading room every 2 weeks or every week, and I show what I do there, and I trade the one chart.
Went from the opposite end.
The opposite end.
Okay,
And I'm aware it's not the most efficient way of trading. When you scalp, you pay a lot of commissions and you pay a lot of spread, and you work harder. You know, and you take little profits every time. So you work hard in order to build your account up. But it's just the way it suits my personality, because I can open a session, manage my trades, and end the session. I don't need to leave them open for longer. I need to go to sleep with a trade open. I don't need to do that. So even if that's not the best way to trade or the most efficient way of trading, it's the best way for me, and I'm successful.
It's interesting because, of course, there's pros and cons to swing, and we can call it hyper scalping even. But there is, for example, personality driven. So in your case, you probably felt the weight of, I enter a trade on the daily time frame, and for 3 days it's consolidating on my entry, and that's thoughts every day. Oh, then maybe it goes towards your profits, and you're like, great, I'm seeing big numbers now, but then a healthy 50% retracement. This is normal. But then you see the numbers going down, and I guess there's roller coaster so was not something for you. When it comes into the lower time frame scalping, I get what you mean by it's more work because there's more decisions to make in a shorter amount of time. But on the flip side, there's also you can gain the same risk reward instead of days or weeks, it can be done in minutes. So you have quicker feedback. You have depending on your beliefs, more clarity on the lower time frame. Now that you've had a taste of both sides, apart from your personality or your preferences there, from a technical perspective, from a trader watching, what would you say are the pros and cons from someone who is daily time frame swing trading down to M1 scalping?
Again, I think there's pros and cons for all styles and all timeframes. As long as you understand what are the statistics behind each one of the styles, and you understand them and you embrace them and you're willing to work with those stats, you're good. For example, I scalp and I know my strategy or my style of trading has a break-even, slightly negative risk reward rate.
NASCAR all out. Market still slow for me. Spent the day updating Think scripts. What is a Think script? ThinkScript is the #1 community of stock market investors and indicators. Other tools to power their trading strategies. Oh no, I'm reading the wrong thing. It's a built-in programming language that gives you the capability of creating your own analysis tools. Interesting. Seems like it's like the PineScript version of Thinkorswim. Like the PineScript equivalent. TradingView. Interesting. Yeah, I haven't been following the low caps too much, so I don't really know what's going on in that realm of trading.
Blessings, I let it all play. Wrote this in code, made a plan every day. Mama, don't worry, we finally okay. Math did the work, now we counting LA. Hey.
Have there been no runners? That's true. I guess I never really gave that thought. Like, I guess like if there's like a fear in the market of like a prolonged drawdown, you like see less of like people trying to trade those. I can't imagine that would be the case, right? There have been some runners, but they're all grinders. That's them starting midday now. Hard to trade them for me. I see. I see. I see. But like you said that, what, because like you're busy at the time? Is that what you mean by harder? Word off, word off. Oh, the documentation for this ThinkScript stuff is terrible. Such a pain in the ass to look through this. Noticed SMX ran pretty good after hours. Crazy how diluted the stock is yet. Still has had 11 intraday doubles over the past 2 years. Hmm.
Step the wave, I surf, I move it. Whales get clipped when the math too ruthless. Trenches cold, but the wrist on stupid. Size get dumped, they pray.
What a chart. What a chart.
I hunt depths, they don't know the cost. Wick get tapped, that's blood in the sea. I got feels with a pressure peak B.
Oh, this thing is ancient too.
Zone get drawn, well steps regret it. 618 like teeth embedded. I bite back when the sea look hectic. I'm in stealth, no sonar blip. Got size so big it'll flip they ship. Lick map blink, that's bay to grip. I just
Oh, it's a fucking.
Set I chart the swell. Pulse of the tide, I rid that well. They just swim where I cast that spell. Every reversal, I ring that bell. The wave on surf, I move it. Whales get clipped when the math too ruthless. Trenches cold, but the wrist on stupid. Size get dumped, they pray, I prove it. I'm the
Surprised you haven't been trading some of this, like these bio companies, biotech and whatnot. Those things have been having like 20% moves a day.
slide, I front run trends, they chased and cry. No clout moves, I just set the tone. This the ocean math on a platinum phone. Whole crew fed on precision zone.
Pretty insane shit.
The wave on surf, I move it. Whales get clipped when the math too ruthless. Trenches cold, but the wrist on stupid. Size get thumped, they pray, I prove it. I'm the current, they just floating lost. I hunt depths, they don't know the cost. Wick get tapped, that's blood in the sea. I got feels where the pressure peak be. It ain't luck when the ocean bends. It's pressure, math, and patience. Marcos.
It's pretty wild. There are about 500 trading days over the past 2 years, and 11 times has that at least doubled, 2% of the time. Yeah, it is quite the interesting chart.
Yes, sir. Didn't believe it, huh?
But is there like a reason? Like, why does it just keep pumping and dumping like that?
Man made millionaires. Back then,
I don't even know what they do.
now my whole fam in the air. Private flights, no stare. Golden fibs, I swear. 6-1 lounge truck, 2-tone glare. TP hit, I stare. Money talk loud, they scared. They laughed at the plan, I sports with the fam. Used to run, stop, lost, now run the land. Back
Especially given how old it is, right? Weird that there's some like 30-year-old stock just continually pumps and dumps like that. A little odd.
price move once, I advance. Soon, I don't miss sniper mode. Money. Wick through high, that's overload. Move. Risk to reward, I drove the code. Now I'm ice while they the code. Man made millionaires. Blink. Back then they ain't care. Nah. Now my whole fam in the air. Private flights, no stairs. Golden fibs, I swear. 6-1 lamb truck, 2-tone glare. TP hit, I stare. Locked in. Money talk loud, they scared. Plotted in silence, counted the ticks. Late night with charts, no clicks. They mock the math, now I'm rich. Ops got wrecked, I ain't flinch. I ain't flex, just showed the path. Kept it tight, I played the math. Now my circle living like grass. Up and to the right, no cap. Fibonacci. Out of my math. They ain't believe it, now they made to read it. Marco. We fed the fam with a math.
Hmm.
Marcos. They see the wins now, but they ain't see me in the red. Late night pain. No help. Just
Oh man.
can't allow me to sleep. No tears on the keys, just me and the heat. Price ran wild, I ain't retreat. Midnight lows made the high so sweet. They talk racks, I bled for this. Charles got scars, yeah, I thread that stitch. Used to be pain, now it's profit ticks. But they ain't dead when the soul got hit. Dark room 3 AM, heart sunk deep. No lights on, but I V-walk beam. Snipe from lost turned into scheme. Now every trade got a hornet gleam. I tweet, I just flipped the zone. Marked up levels with a cracked out phone. Smoking a year blunt to the dome. Wasn't no help, I was all alone. They cheer now,
is this? 820. I am hungry. Hold up a little bit longer. What a weird function they have in this Thinkorswim. The crosses function tell you if one value crosses another. What is the purpose of that? You can use like any basic comparison function, like primitive. And what is with these fucking bots in the chat? What the fuck is what is this shit they're shilling too? AIX 2049? AIX 2049. Seems like the biggest fucking scam. Oh, they're saying it's an XAI token. They're trying to show like it's Elon Musk company. Oh my gosh. I wonder how much money they make. These people that run these like scams make from this. Because like, they have to be paying for all these bots to be functioning, right? And I see all the time, whenever I watch any trading related crypto video and you go look at the comment section on YouTube of like the bigger channels, it's just spammed non-stop with like the chat bot or like botted comments. I just go find one and see it. They're all shilling the Grok thing. Oh, they delete them or something? Oh yeah, and nowadays it's this exovum thing. It's the same kind of bots too. If you look at it, it's the same kind of names. Like some name dash letter number letter. The same shit as these people in the chat. I've seen this one a lot on like the Cryptoverse guy channel, like Benjamin Cohen. The Jason Pizzino, the Pizzino brothers, like their comments are being spammed by it. So it's pretty widespread, right? It's quite the widespread spam issue going on here. Interesting. Other than SMX, HCTI is one of the most in-trade doubles over the past year. Yeah, but like, what are these things pumping on? So I don't get it. Right, just like literally pumping randomly. Cause I remember one of my friends was like, he bought some like low cap oil company a while ago, and he was showing me the stock chart. And I'm pretty sure there's like some manipulation going on in this thing, right? Because it really just every once in a while just fucking pump a shit ton and then just dump again, and pump a shit ton, dump again. And I could not find any news, anything. So I have no clue what was going on with that thing. Healthcare triangle. Damn. Oh, so is this thing slowing down yet, or what? Yeah, we missed such a clean trade on this. This is such an easy juicer, right? Broke over the range. It even gave you the retest and go. Would have been an easy 30% juicer, right? How are we not paying attention to that? Especially after like undercutting and reclaiming this thing and then bouncing on it, and like damn. Just like SMX HCTI down 89% for the past year. As you said, pump them over again. Yeah, but like, do these things have stories related to it? Cause like, how are you even trading? Like, cause that oil one, like, I have no clue how you'd be trading that unless you were like tracking the volume. And I don't even know if you could have even like, I don't remember looking at the chart now. I don't know what the ticker was. But it seemed like the pump came out of nowhere. So it's like if you miss the initial move on the 5-minute, like that's it. You're just out of it. No, I suspect there was a lot of fuckery with that thing. Like somebody controlled a lot of the float and just kind of played it from there. Interesting. Oh, this thing's recovering a lot. Juice. You know, it's funny. I was watching this like what's a crypto trader guy named with a thick neck? Trader Main. I was watching a video of him giving his thoughts on Bitcoin, and you saying how there's like, so it's why I'm convinced that a lot of these crypto traders, like, as time progresses in the market, they're gonna become like worse and worse and just not make it. Cause like he was talking about this downwards move, and he was saying how there's like no viable trade set up here right now. Meanwhile, we've sat here planning multiple different entries down at the zone in advance and took these trades, and so did everybody fucking else. I don't know, man. I don't know about these crypto traders. I think a lot of them just got lucky buying Bitcoin and ETH when it was like fucking $500 Bitcoin, like $20 ETH, and they're just riding out that. But as the game changes, I don't think they're gonna make it. Unless they change. At least from what I'm hearing when they talk. And I've seen it too, like a lot of the big accounts that like I followed at first when I first made Twitter. I've seen them all tweeting how like, oh, I gave back so many of my games this year, like the market conditions aren't suiting me, like blah blah. It's coping, right? Coping for not knowing how to trade. Basically. Funding flipping negative again, spot market sending again. Okay. Interesting. Oh, my legs are so sore. I had the most ridiculous leg workout today. I did like low weight, but just maxed out everything. To the point I couldn't even do another rep. Burning like crazy. God damn. Oh yeah. Should we continue this interview? Shall we continue? What did I need to do? Oh yeah. pause this. Put this thing at thang
Sure,
back
for example.
on.
But I keep a very high win rate, 80 plus win
So
rate.
your a good trade is 1-to-1, or maybe even less.
Yeah,
Ah,
correct.
interesting. Okay.
So I win, I win a lot of trades,
Okay.
a lot of trades, dozens, hundreds of trades. But when I lose, I might end up losing, the whole setup might end up losing more than my wins.
Very
So I'm fine with that. I live that reality, and I know as long as I'm keeping my high win rate, I'm good. If you were, if you when you just open YouTube and you listen to someone, you will always hear try to keep both high, right? High win rate, high risk reward ratio. I've seen very few traders, and from my position today, I scan thousands of traders. Very few traders that can keep both ratios high consistently in long term. So there's always a trade-off on the trading style you're using. As long as you understand the reality and the real long-term stats of both, and you can keep to them, and filtering out bad setups and just sticking to the A+ setups and performing well. I think the pros and cons, they just come down to screen time, efficiency on trading costs, decision making speed, all of that. But again, it all comes down to what's best for you.
Let's take a moment to talk about part of the show, a leading prop firm that is funded next. It's important for me to listen to our community to see who are you working with and how can we make your experience better. And the main feedback I heard is trusted payouts, quick payouts, ability to scale, and affordable prices. And Funded Next has ticked all of those boxes. Not only being a top 3 prop firm in the industry, also having on-demand payouts, and every 10% you gain on your account, you will double your capital for free. And because in this industry, trust and reliable trader. Because I'm sure you've seen people that are consistent for 2 weeks, 3 weeks, and then blow an account, or others that are consistent for months and then somehow blow an account. Which approach in terms of high risk reward, high win rates, do you think preserves consistency in the market to stop somebody hitting a spiral of negative emotions and end up blowing the account and denying themselves of their own payouts?
I think in prop firm era, the profile of traders and the behavior of traders have changed from back in the day when we used to trade only brokerage accounts. The fact that traders are developing the skill of getting paid and not necessarily the skill of trading. Okay.
Gamifying the prop firm industry.
And they counting if they're profitable or not profitable depending on how much they're investing on challenges against how much they're getting paid of trading companies, and not necessarily on their P&L. Because we have a lot of traders, we pay to traders who are negative on the P&L. You know what I mean? On the overall P&L, because you may pay them a payout of, let's say, 2K, and then they lose 5K or 10K. So the trader is profitable, on his payout to investment in challenges, but on his P&L he's negative. So going back to your question, I think I know traders in fibers who make the most money and who get to the highest accounts. They're not scalping, they're holding trades for longer, and they tend to aim for larger risk rewards against win rates. So they focus more on large risk rewards and not so much on win rates.
With regards to your own approach, which I'm very curious about, because you said some things that I've actually never spoken to someone. First of all, is someone in the lower time frame, M1. I think a very widespread misbelief is M1 is noise, and lower time frame you cannot find clarity. You're going to end up either taking too many losses, too many decisions, and too many emotions. Whereas for you found on M1 more clarity, more information, and a very high win rate. So completely the opposite of what people would expect.
Yeah.
What is it in M1 that you like, and how are you able to sustain high win rates when there is more decisions to make per day?
I think that's a great question. When I'm trading, I think I'm more focused on the trade management than on the entry and exit of the trades. And I'm more focused on the trade management than on the direction of the trades. Okay, I believe I trade Forex, that's my bread and butter, Euro USD, dollar, JPY. So the Forex market by essence is a range market. You don't want your currency going 10% up and down against any other currency. Okay, that's not the purpose of currencies on countries. So I will find a setup, and then I will find key levels. For me, supply and demand, that's what I trade. I find key levels where strong movements were initiated, either to the upside or to the downside. And around these areas, I'll try to make my entries. So the way I approach markets is I divide my entry into different small trades. Okay, so instead of going, let's say, one lot, I go with 10 mini lots. Okay, so I divide my entry into better and more precise entry points, and then I manage all those trades as a whole setup.
Interesting.
Okay, so then I'm not so engaged into one of these trades. I'm more focusing on the whole setup. Okay, so the whole lots, the whole 10 mini lot, and not each one of those mini lots. So that gives me flexibility and that active trade management, which is also a pivot point in my career as a trader, going from passive management into active management. That was an aha moment, because when you just passively managing your trades, you're just letting the market stats to play themselves. But if you actively manage your trades, so if you add into trades or adding to wins, adding to losses, scale out of wins or scale out of losses, then you can make the whole setup a more profitable one, and that's what allows me to keep a very high win rate.
Changing my mindset from like this, I'm entering the trade at this level, my stop here, TP here, to scaling in and out of trades. It takes the whole binary thing out of your mind, right? Same thing with buying spot. Even long-term holds, oh, should I buy now, should I wait? It's better off just doing some kind of pyramid, right? It takes all the thought process of that just out of the equation.
There's a lot of things I can explore here. So number one, let's say your initial point of interest,
So
supply and demand,
big agree on that.
entries. How are you qualifying the supply and demand? On what time frame, what size, what criteria inside the point of interest, just so I know what are your key levels.
Okay, it's always challenging to explain all of this without showing the charts. Okay, but I'll try to make it as clear as possible. So I start off the daily charts, and I try to get my bias from there. I'm trying to understand if today's day has more chances to go bullish or bearish depending on the overall trend on the dailies. So that gives me a bias for the day. Then I go into the hourly time frame, and I just mark the key levels, those supply and demand areas. And an ideal setup is when I have an entry either on the 5-minute chart or the 1-minute chart, on a supply demand area from the hourly charts that aligns to the daily bias. So if I have my bias from the dailies, my levels from the hourlies, and my setup all in the same direction, either bullish or bearish, that's a winner, right? That's an A plus setup for me. If something's not aligned on direction, then I know I need to reduce my risk or reduce the lot size I'm using. So that's kind of what I'm looking in market every day. And then my management happens on the 1 minute chart.
So when you have, let's say, a bullish daily bias, a 1 hour demand area aligned with that bias, and then you mentioned 5 and 1 minute, are you taking that 1 hour zone and refining it on M1, or
Yeah.
are you watching reactions in the zone?
So I refine on the 1 minute chart to have a more precise entry point, and then I look for the setup. It could be a breakout, or it could be a retest, a reaction on the area, and then the retest of the 1 hour chart, and then I manage everything on the 1 minute chart.
And you mentioned you distribute your, let's say, $100,000 account, 1% risk, you're distributing $1,000 entry of risk across this demand area. Refined.
Are you averaging in when the trade is going with you or against you? Averaging into a loser can be a scary game. No, I don't agree. Because I'm not averaging in more than I plan to lose. Like, let's say I had this zone in mind for a short. Which I did. Like, I was getting filled in the short here previously, and now we're already out of it. And I planned to lose, like, I don't know, 10k here. If it hits my invalidation. If I get all my orders hit, then I'm losing 10k. And if I don't get them all hit, then I'm, like, losing less. Or, like, the trade went in my favor, because, like, I never got all my orders filled. I'm not like planning to lose 10k and then it goes against me and I'm like, fuck it, let's add another 10. Fuck it, let's add another 10. And the thing about that too as well is that, like, suppose you're in a scenario where you add to the trade. So let's say I got like this order hit here, this order hit here, and this order hit. So now I have like 3 out of 5 orders filled. So I didn't get fulfilled. And the trade starts to go in my favor. And then it bounces and starts to break lower. Then I can like add more size to bring my average price down to here. So like I think you're adding risk free, right? Because I can add as much as I want while making sure that if I get stopped out, I don't lose any money. So I can just add until my average price is like right where I want it, without being able to go into the red. You feel me? You feel me? Same with when trades are running, right? I got into a long down here, and at one point, like, we TP'd on it. And then once it started to bounce and go again, then I added back to the trade with like that same logic. It's much easier that way, right? Because I'm basically taking one trade that was profitable and turning it into like potentially multiple profitable winning trades, where each follow-up trade is a risk-free trade. So I'm always able to like manage a trade in a manner such that I add, but if I get stopped out, I don't lose money. Need to get better averaging in. I do have a very binary mindset, not flexible enough. Yeah, I found it to be like a huge difference. Huge difference. Because like, first of all, if the trade starts going against you, like you don't even care, right? You're like, okay, perfect. I'm just gonna get more of my orders hit. And like the way you can also choose how you scale in, right? Like a lot of times I'm not doing like okay, there's lots of ways you can do it. You can do like 25%, 25%, 25%, 25%. You can do like 10, 20, 30, 40. Do like 20, 20, 30, 30. It doesn't matter, right? You can do it however you want, and you can use more levels. You can use it all 6 levels. You can even do more here and more here, so you can account for the sweep. So sometimes I'll like do this with my stop like behind here. This is a lot rarer. I usually this is very rare I do this, but it is possible. But like when you do like this way, for example, like where each order gets bigger and bigger. Like if you do 10, 20, like 30, 40, if you get fulfilled doing this method, your average entry is like right here. So if you get any bounce that goes below this level, like you're boom, break even. And if it never reaches these higher levels, then it means that you had a winning position with the lower one. Obviously, that trade's not going to be as juicy in terms of the gain because you didn't get like nearly your position fully filled. But it doesn't matter, right? If you think about it on a long enough time frame, your count's growing regardless. And you have the option of doing what I said earlier, where once it starts going in your favor, and then it does like a pullback and then confirms and continues going, you can start adding more. Or you can even add more even before the pullback. If you think it's gonna just like really run away on you, you can start adding in as the move starts printing. Which I typically don't do. It's like very aggressive to me, and I find that when I did used to do that, a lot of times it would fuck up the trade. So I'd be like adding, and then the pullback happens. Fuck, I guess I'll break even, and then it just goes anyways. So I'd much rather just wait for it to like confirm the structure change and then start adding, not be as greedy with it. But it depends, because that only happens when I'm taking a trade using a fib. If I'm like on the very low time frame, like looking for something to like enter, if I'm sitting here on like the 1 minute, like waiting to see if we do some kind of like failed auction, like let's say the price is down here and we're starting to do like one of these on the low time frame, and I wasn't using a fib on this pullback, then I'm just like marketing in positions where I'm like marketing in on this pullback, just like ding and then boom, go. Or marketing in there. It depends, right? It depends on the setup. But like that's how most people trade. It's not too often. I mean, people like take one exact entry and then like that's it. At least the traders that I've seen. Like when they post their execution charts, they have like 50 different like execution triangles because they're like taking a small position, and when it starts going, they're like add. A lot of my entries are within a minute or two of the PR drop. Trying to jump in within 10% of the prior day's close. Even then, it can dip below the prior day's close. Yeah, it's a bit harder for yours because like, you're like like when you're trading stuff like Beyond Meat, for example, like you're not gonna get some like golden bucket pullback, right? It's just drill into the low time frames of this thing. And quite likely they're all gonna be like 382 balances and go kind of thing. So like you can't just use them. Like I mean, obviously you can like use these higher levels to do it, but the risk and reward can get a bit wonky at that point, because you have to be expecting quite the move back up to like account for putting a stop down here. I need to be super excited about taking those dip trades, as it can easily run up from 10 up to 250. Yeah, it depends. It depends, right? It depends on like the style of trading you're doing. Because like if you're like doing breakout trading, I'm like what I'm saying doesn't really apply, right? Like you're not breakout trading like using fibs. You're just like entering on the breakout and then adding on confirmation. Like this is more for like if you're trying to pick a counter trend reversal point. You're trying to get in here where like this is like the larger price action, and you have some like fib like this kind of thing going. Or you're trying to get in on a pullback of like a trending move, like this kind of thing. And you're trying to get filled like in here before it continues higher. But yeah, I found that pretty useful, especially for like spot buys, right? Like if you're like looking at like, mm, anything, any chart doesn't matter, right? Just throw on like Nvidia or something, whatever. Like instead of sitting here looking at this chart and thinking to myself like, oh my god, do I buy now or do I wait for it to go lower? Or like, what do I do? And you have like $10,000 to like that you want to spend on it. Just buy like 1,000 now. Fuck it, right? Just put in 1,000. And if it starts going up, then amazing, right? You're in the game. And if it goes lower, then you have $9,000 to like add more. So you don't have that. At least for me, like it removed that whole like aspect of like analysis paralysis. In this market, another story's low floats have been tough this month. Yeah, it's a different style of trading, right? Because like, a lot of these low floats, like what are you doing essentially when you're trading low caps? Just like you and all the other traders are grouping up and like forcing momentum to occur on the chart. Whereas like when you're trading these like extremely massive large caps, like you're doing like more math-based trading. Also, out of curiosity. Interesting. Plus, the thing about like using fibs like this to scale in, like the probability of like of you having a pyramid like this and having the entire thing blown through all the way to your stop. The larger of a time frame of a fib that you're drawing, the less probable this is, right? Like almost certainly you're gonna get a bounce at some point to at least get break even. But if you're like on the 1 minute doing a little like fib, then like yeah, your level might get swept pretty quickly. So I wouldn't recommend it as much in the very low time frames. Like one thing I like to do a lot is like I draw a fib where this zone, so for instance like this level, whoops, at the golden pocket will be like at a pretty major key zone, and then like the 75786 will be at another pretty major key zone on a higher time frame, and then the 886 is at another major key zone. So for you to take the loss on a trade scaling in when your fib is like that, it means that like your team has to lose 3 key zones back to back to back without ever getting a pullback for you to get break even, which is pretty uncommon. But that said, it does happen, right? No guarantees. It does happen. Another pretty interesting stats: about 80% of the biggest intraday runners in the market are within 2 times of 2-week low prior to the big run. I mean, yeah, but like, so a ticker with a $2 52-week low, it would be very likely have a prior day's close below $4, below 4 big intraday 1. I don't know. The thing is, like, some of the data points you collect, like, it just seems like just random data, right? Like, it's not actionable. It's like, for instance, like that data point is like, okay, sure, it's interesting, but then the day, like, it's useless. It's like either something has news the day of that leads to like the pump, or there's like a volume spike. So whether it's near a 52-week low or not, whatever. So okay, if you're scanning for those things anyways, then you're going to be scanning this list regardless. Like you're scanning for like 100% of the potential movers based on like news or the volume. And then like you getting that data point, it just takes this thing and like subdivides it into 80%. But regardless, you're already scanning this whole thing anyways, so like what does it matter if you know this thing or not? I agree in a sense, but if ticker has just 5x from its recent low, maybe the news PR is more likely to be a rug pull. But you don't short anything, do you? I thought you only went long on this stuff. If you're shorting stuff, then like that's a lot more interesting way to approach the data, then, right? Like, there's definitely some kind of edge you can derive from that. Because that seems a lot more interesting to me. If you know that like 80% of these things that are 52-week low and pump end up reverting. Especially if you have a number of how much they pump before reverting. I only go long, but it keeps me out dangerous trades potentially. No, I think we should follow some of these short sellers on Twitter and observe what they do. Because there are a lot of people out here that are doing just the shorting stuff, and they do it very well. And it's very lucrative. I don't know if it's correct to be scared of it, right? As long as you're like managing risk. So I've always told you this. To me, like, trying to play the long side of the stuff you're doing seems so much harder. It's just like you're making it difficult on yourself. Eris Kamal, hey Mark Bose, hello. Eris Kamal. Shorts do have more win, it's just the 1 or 2 big losses they take throughout the year. You don't focus on those, or they don't mention them. Depends who you follow, Because there are people that definitely just talk about both. And it's like if I make $2 million in a year shorting stocks, do you really care that much if you took one loss for like 100K in that time span? Not really, right? Not really. At the end of the day, you still made a shit ton. The thing is, I don't know. I don't know. Like I haven't done this stuff, so I don't know with these low caps. Like what's the probability of you getting trapped in a low cap and you can't get out and it just giga gaps on you into some massive loss? Assuming like you size correctly to be prepared for that situation. Cause that stuff that you were saying about like the locates is pretty interesting, right? Ross Cameron made $6 million in a year. It's all tax free in his Roth IRA. With a Roth, you can't short. It's huge tax savings by trading long in a Roth. Yeah, I'm not sure. It's like tax like implications are different from country to country, right? Like we don't have that here, so yeah, I think that is a fair point. Even then, I wouldn't avoid it, cause like think about it. You're basically ignoring half the game, right? Stocks don't just go up; they go up and down. So you're just like actively ignoring half of the game. So like you can make the tax-free money going up, and then you can make the taxed money going down, instead of just isolating yourself to one half. But yeah, a lot of these short sellers, at least like my one friend that does it, like he's from Canada, but he got residency in Dubai, so he does all his trading through like his Dubai entity. So yeah, different implications. It is a huge deal, right? Being tax-free trading is a massive deal. Like I get fucking rinsed on taxes. It's just fucking robbery. Doesn't matter though, right? Doesn't matter. Fuck it. It's charity. That's what it is. Helping out the people. I don't want to move though. It's been a thought on my mind for months at this point. The only thing is, all my family and friends are here. There was an interesting IPO coming out, Dubai, UAE. That's the name of the IPO. What is I feel like there's nothing gonna come up on Google. Also, how's this stuff doing? Seems like we're still going. Okay. I'm not sure. You need to send me something. I feel like I'm not gonna be able to Google whatever you're talking about. Dubai is in the UAE. Yeah, it is. Or like you're mentioning a company that's IPOing in the UAE. DT IPO. What the fuck is this? A Cayman Islands exempted company with operations in the UAE and Hong Kong. It primarily provides corporate consultancy services focusing on environmental, social, and governance aspects to enterprises and corporations. As a part of its services, it also offers travel-related services for leisure travelers into the UAE. Can't say that seems particularly interesting to me. The company leverages AI-driven, cloud-based software in its operations. What's interesting about this? Or maybe I'm missing something here. Seems like a pretty low cap though. We'll say that. How did everything else close on this 30-minute, 2-hour candle? What's up is down. Wait, what? What's up is down in the IPO market sometimes. The crappier the company, the higher to the moon it would squeeze. It's like the insiders wanted to debut companies no retailer would want to touch. And they'd run it like 50x within a month of the debut. Not sure, I'm not too familiar with... I'm not an IPO expert. Speaking of IPOs and ICOs, how's Monad coming along? Oops. Going back to the 2020-2022 time frame, the whole game has changed now. You don't really see huge runs right at the debut anymore. You have to be more salty about it. And they usually seem like dumps at the start, right? Like, what are some like notable ones? There was like ARM. Where's ARM? ARM nuked off at first. Same with like Reddit. Was another one Circle? Circle had like Gigapump and then just nuked afterwards. To me, it seems like it's very company dependent, right? I'm curious actually, because another thing about it, I don't see too many... Pretty rare you see people talking about IPO trading. At least I haven't come across it too much. Are there people that like specialize in trading IPOs specifically? That's true actually, now I think about it. Like, I've never seen an interview with somebody that does that. Never seen anybody like on Twitter that like shows up in the feed who does that. Interesting thought. The only person I ever heard mention it was like Lance Brightstein, and he was like referring to somebody in his like, old fund who would do it. And if I recall correctly, he was basically saying that it was like hit or miss. The guy that was trading it, he was reviewing the guy's IPO trading data, and he was saying that it's like very hit or miss from the data analysis he did. Like I would make like a shit ton on one IPO and then like give it back in the next 3, and then just like kind of repeat. There was a guy known as IPO Warrior. Fitting name. Specialized in trading IPOs and de-SPACs, specifically low-flow IPOs. I mean, logically it kind of makes sense. I imagine like if you have a data feed for it, you can kind of see like what the order flow is looking like, right? So you can tell right away if it's like people are just hammering the bid or not. What is this?
Chart look clean, but I'm dirty with it. Marcos.
There's no hiding it. Markets are.
They ain't do nothing. Stepping on they zone, they ain't pop out. Hit they stops, now they're green, just top out. Char smoked out, lungs full of loud. We sipping that walk while they margin drown. Zone got marked, I spun back twice. One little whip, and I ended they life. I don't tweet threats, I just pull up right with the size so fat it distort they sight. Private jet math, I be gone by noon.
It's pretty interesting that this Lux Algo website. I don't know if you, like, I'm sure you guys are familiar with some of it because they have a bunch of like free indicators on TradingView, right? It seems like they made some AI tool, some like Chat GPT like LLM hybrid, with like a huge database of trading strategies, and then you put in whatever instrument you want to run the algorithm on, like the AI, I guess. And it kind of like tests them all and then gives you back the data for like which ones are the most effective, and then also automates a strategy you can use to trade it through TradingView. Pretty interesting actually. Curious how effective it is, but how much is this? Might be pretty fun to play with. Wait, it's free? What? That makes no sense. I can try it for free? Huh? We're definitely gonna play with this later, that's for sure. That seems interesting. Leave that open over here. DGNX is probably the best performing IPO in 2025. It already had a forward split and post split. Went from low 45 cents to $40. God damn, that's juicy. EGNX. EGNX Limited. It's given a lot back, but what is this? What do they do? Another ESG company. What the fuck? All these things are like died off.
Do you believe in the math or nah? You just trade on vibes or charts. You wanna follow the flow I mark, or you just jump when the green look large. Me I chill by the VWAP hold. Me I wait while the fib unfold.
Interesting. Seems like it's some software that just kind of helps your company stay within ESG guidelines for like multiple different governments at once. Like it manages the different laws of each for you on your behalf. I guess it must be somewhat useful to doing this. Helps navigate the complexities of sustainability compliance. Interesting. Interesting that is. What's happening here, guys? Is this a dead cat fucking bounce or what? Or what? Are we going to the moon? Going to the fucking moon. We gotta make an account to try this thing out. Is this it? Yeah, it is. You mean invalid setup? What the fuck? What the fuck? I told it to create me a Bitcoin strategy. Let's see what it makes us, right? Time frame. 1 hour. Ticker. BTC USDT. Strategy style. Should we do trend following or reversal slash price action? We'll do reversal. Direction, long only. Built-in exit rules. DTDT, hopefully the next DGNX. I guess they are somewhat similar, although the other one, the DTDT one seemed a bit, like I don't really get what they do. I don't really get what they do. The other one at least it makes sense, at least from a first 2-second glance. Let's see what this AI comes up with. 1 hour Bitcoin reversal long only strategy using built-in exit rules. This thing is slow as hell. God damn. Interesting. I mean, you guys can all try this too, by the way. Apparently this thing has like a 30-day money-back guarantee. You can just fucking cancel it. What is this? 82% win rate, max drawdown 53%. Average winning trade 560, average losing trade 1.6, or no. Average winning trade is 1.6k, average losing trade is damn near $5,000. Oh, I can't prompt anyone, I need to buy it now. Oh, okay, that makes sense. How much capital did it start with, though? A reversal summary. A reversal strategy using contrarian signals with NeoCloud plus trend strength filters. Interesting. Seems interesting. Seems like an interesting tool. We'll say that. What else do they offer with this shit? That's pretty cool too, actually. Interesting. Like a customized alarm. I mean, you guys can kind of do this on TradingView anyways, but in terms of the TPO. Interesting. Definitely gonna be playing with that. Thangity thang. Let's get some food and we'll continue with these interviews. Now we'll leave the music going. Be back before the next 30-minute candle.
Marcos. Wick it up, math, wick it up, tag, limit set, price react, drawn, wick it up, clean, wick it up, zone, chart too slick, I'm never alone, golden pocket got me back on throne. The math is the math. Marcos.
Yeah, Marcos. It's that time again. Rate drop, rate hold. We eat either way. FO, MC mode, I'm locked in live. Pivots, traps, I thrive off vibes. Green light flick when the dot plot slide. I'm front of the with my ops spine. No stop, no cap, just data fed. They read tweets, I rate that thread. Price snap back like Powell said. I'm prepped, I'm lit, I want blood red. Countdown drop, I don't blink once. Hawk or dove, I still eat lunch. 0.25 or 0.5 pop. Market switch, I time that drop. Fed speak bait, I hear that tone. Liquidity flash, I'm in that zone. They panic post while I post TP. Shots bounce Chris Fibonacci tree. Screens up on the yacht, don't stress. SPX fake out, I short that mess. Ops in spaces, begging guesses. I'm in size, no second guesses. You though. FO, MC mode, I'm locked in live. Pivots, traps, I thrive off vibes. Green light flick when the dot plot slide. I'm front of the with my ops behind. No stop, no cap, just data fed. They read tweets, I read that thread. Price snap back like Powell said. I'm prepped, I'm lit, I want one red. They got hobium tweets, I got limit fills. Mask my weapon, no fake thrills. I scalp that wick with deli still. Then chill with the view in Beverly Hills. Jerome talk slick, I already knew. I measured the tape, I mapped that cue. My yellow dash got bounced on cue. Whole room cheered, they never knew. Been up since London, slept in Tokyo. Rate day prince got me moving like whoa, it's Marco's world. They just float. FOMC hits, I'm cutting throats. You do. FOMC mode, I'm locked in live. Pivots, traps, I thrive on vibes. Green light flick when the dot plot slide. I'm front of the wick, my ops behind. No stop, no cap, just data fed. They read tweets, I read that thread. Price snap back like Powell said. I'm prepped, I'm lit, I want blood red. Great day ain't for the weak. It's math, motion, and Marcos. We don't gamble, we execute. FOMC.
I don't know. It's Marcos. No guessing. Just math, brethren. Pixel perfect, lavish. Pixel lines I strike exact. Smoke top shelf while charts react. Math talk clean, no need feet cap. Wrist on beam, trade intact. Pull up slow in the mat, go whip. Entry align, then watch that flip. Luxury drip from fingertip. Math bring life and the life is rich. Dash line yellow, price hit neat. Trade locked in, no need repeat. Wake cap bounce, I don't compete. I calculate what them tweet defeat. Rooftop chill with the loudest pack. They still hope I check that back. Plan so tight, no room for slack. They fade moves, I fade them back. Every chart glow like a chain. Every candle whisper gain. Guess I aimed and rain. One trade feed whole campaign. Pixel lines I strike exact. Smoke top shelf, white charts react. Math talk clean, no need fee cap. Wrist on beam, trade intact. Pull up slow in the mat gold whip. Entry align, then watch that flip. Luxury drip from fingertip. Mass bring life and the life is rich. No drawdown, me tighten rope. P&L stretch like a hit the slope. Them watch stats, I build the scope. Every line I draw give hope. Candle pulse like baseline beat. Blue line bounce then chart repeat. I don't flex loud, I flex elite. Private flight, just me and heat. Pixel lines I strike exact. Smoke top shelf, white charts react. Math talk clean, no need fee cap. Wrist on beam, trade intact. Pull up slow in the mat gold whip.
Okay, I see you, Bitcoin. I see you. I see you. Okay. Put that thingity thing there. We'll move this a bit. Oh, we already have all these. Fuck it, right? Looks like this stuff's starting to send. God damn. God damn. God damn.
Marked up, didn't need to pray. Zone hit once, then it slid my way. You chase green, I just let it play. Fade that wick.
She's probably no longer extend this thing, yeah.
They max long, now the chart look empty. I don't chase, I don't guess. Price tap twice, I collect the rest. POC bounce, they ain't catch it. Value area high, sketched it. You want flash, I want math. You post code, I post path. Marked up, tag that line. You got loud, I got mine. Price came back, I press fine. TP hit, I'm right on time. Marked up, plan too clean. No motion in between. You caught wind.
How should we keep it?
You caught loss, caught still. Sharp move weird, I still glide. They swing wild, I just slide. They up late, I'm ready filled. They post pain, I post chill. V-way pole, I saw early. They call moon, I call birdie. Shot that fade, no assist. Snipe that top, I don't miss. One candle print, I knew that game. You saw pump, I saw flame. You want magic, I want math. You want vibes, I want path. Marked up, tag that line. You got loud, I got mine. Price came back, I press fine. TP hit, I'm right on time. Marked up, plan too clean. No motion in between. Caught with, caught still, caught loss, caught fill. No stress.
I lost the doll.
Just prep them. No credits or no panic. Just prep them. No credits, no panic. Just prep them. No stress, no panic. Just prep them.
all the lower time frame moving averages are crossed. 6 hours crossing. 8 hours got the 12 sloping up pretty aggressively. Interesting. Whatever, all that jumps to noise, right? Who's the fuck what the moving averages? We already know what's good, right? Everybody knows what's fucking good. We're all watching that 94 level. First and foremost. Who's the fuck what no indicators? Okay, let's pause this. Pause the noise. We'll leave the order flow open. Control from the corner of our eye. And put this thing back on.
M1. Is there a specific strategy where at the top of the zone on the demand area, you go heavy first and then less and less, or is it opposite? 5% of the entry and then more and more as you get deeper?
Yeah. So usually, if that's a good area, you tend to see a strong reaction of the area. So back in the day, I used to wait for confirmation, you know, a pattern, whatever it is, and many times I would, you know, the reaction is so strong that would be left out of the trade. So at some point, and if you know, the way I approach the entry is without confirmation. So because if I'm going without confirmation, I start small, and then if it goes deeper into the demand area, I add into that entry. But the overall risk, you know, all my stop loss are below the demand area, and I'm not risking more than the, let's say, 1% risk. So I start small and then I add into it.
So I'm seeing you're weighing a few things. Number one is the cost of, let's say, price comes all the way down to the lowest point in your demand area. So this is ideal. All of your entries got triggered.
Correct.
However, the initial entry had a wider stop loss, so then your overall risk reward is lower compared to if you had one entry with a smaller stop loss compared to this distributed entries. But then on the other side, which you're balancing against is, well, what if it taps the top of the zone and flies? At least I have something in the market.
Correct.
Do you think this is a more worthwhile approach than just somewhere in the middle of the zone have a equilibrium of average stop loss and one position as opposed to maybe 5 things to manage?
Yeah, I think that's something you need to test to see how many times the trade would trigger you and how many times you would be left off the trade. For me, I like being active, so I'm happy going first, and then if it goes, you know, to the middle of the area or to the bottom, to add more into it, just to be, you know, active in the market.
A lot of traders end up frustrated bouncing from website to website, trying to figure out which prop firm is best for them. And that's why I'm proud to bring to you a partner of the show, PropFirm, which is a complete, trusted, and comprehensive comparison website, and with all kinds of more discounts in your future PropFirm purchases. So go ahead and click the link in the description to research the best prop firm for you and find the best prop firm discounts in the industry. And are you managing once all entries are? How many entries would you do actually, out of curiosity?
There's no rule. I mean, let's say if I have these 3 entry points, because I have the top of the area, the middle of the area, and the bottom of the area, could be 3 entries, or could be each one of these entry, let's say 5 trades or 10 trades. You know, just because that gives me more flexibility on managing everything.
What causes that difference between 3 and 5?
Just the amount of the lot size, the overall lot size I'm using, and how much flexibility I need. It's very discretionary.
Is that based on what's in the point of interest, or is that based on how price is reacting in the zone?
It's everything, but it's something you get like a natural gut, you know, used to it, and it's somewhat hard to put into paper. It's hard to explain in words, but when you've seen it, it's very clear to you how to approach that setup. But it would be, you know, 3 entry points or 6 or 9 or 10. It's all the same. It's just
and the trade management, which you said, is actually the key, not the entry itself.
Correct.
I'm curious about this because am I correct in saying to have high win rates? You would therefore probably have high break-even rates of price coming back to your entry, because if you just, let's say, put 10 entries and 5 entries in and you have your targets, a lot of time it can also fail on you and reverse. But then if you're very actively entering, you can have a lot of unnecessary losses or avoidable losses. Does that mean you're using break-even quite a lot?
Yeah, a lot. Yeah, you will see also because you're averaging a lot of your trades. So sometimes if the zone is very, you know, if it's very wide, and from the top of the zone to the bottom of the top, there's a lot of room. Sometimes you take, you know, one that goes back to the top of the zone, and you don't see the reaction is happening, the price action is not there, the volatility is not there. I might just take all the top ones for break even, and I'm only profiting from the bottom ones. You know, so only first entries are at break even, because somewhat, you know, it stays, you know, market starts ranging within the range and it's not reacting as you wished. So yeah, it would be interesting to just pull the stats of the account to see.
And once you have price coming into your area, you're ideally looking for price to come deep into your zone and then quickly react out because you're scalping or session trading. Is there certain things that you see prior to the day or during the day that would increase your chance of this happening? Fast reactions, a lot of volatility, immediate bounce, and actually coming deeper into the zone.
Yeah, so many times it comes on how weak or strong price is pulling back towards the area. Okay, so let's say you have a strong bounce that creates the initiation, the demand level, that's the area I want to be active. So if the market comes on a compression, on a weak channel towards that demand area, there tends to be a strong reaction. But if it comes down strongly, aggressively towards that area, then it might take a while for it to accumulate and then react. So if I see this weak channel coming into the strong demand area, I'm all in because I'm expecting a strong reaction because all demand, you know, supply and demand towards that channel has been consumed. So that's where I take advantage of that strong reaction.
Do you believe in liquidity manipulation, whatever the term we want to use for it, but you know, price building a support level, a double bottom, triple bottom, and then spiking lower to allow price to come higher?
Like institutional manipulation and all of that?
Maybe not necessarily the buzzwords or the conspiracy behind it. More just interested in, is this a price action signature you monitor, trade, or utilize?
Not really. And you know, back in the day when I just started, there wasn't this terminology. You know, the lingo has also changed. There was no ICT. There was no ICT around, not publicly at least. So I think we're all trading the same concepts and same price action. Order blocks, all of that wasn't around. You know, so I think we're all trading the same, just with different names or terminology. Institutional manipulation and all of that. I don't think I've spoke to institutional traders. I don't think they're hunting our retail stops.
It's an interesting topic which I wanted to bring onto later, but it's the idea of there might be certain price action signatures, and if we see it and use it, okay. But then when we try and explain it, that's where it can get a little bit tricky. Because I've had people on the show that says, yeah, the market is heavily manipulated. Others that say, no, that doesn't make any sense. I don't even know where I specifically lie on the explanation. But one thing that I find curious is the retail industry right now, the millions of traders that exist, majority of them in the last few years have moved towards prop firms. And therefore, a lot of the activity in the market from retail traders is on prop firms now. And pretty much all or most prop firms are a B-book environment. It's a demo simulated environment. So then all of these orders that are getting manipulated, they're not in the real markets. They're in a B-book demo environment on the broker or prop firms back end. So then if these orders don't exist, then they're not going to be hunted. Therefore, so it does get interesting there.
But even before props, the default strategy of CFD brokers is also booking. Not only prop firms. So and let's not forget that it's the CFD environment. So it's just a copy of the real movements. It takes millions of dollars to move on the forex market. It takes millions of dollars to move each currency per bit, right? So it's very expensive for an institution to move the market towards a certain area just to do the opposite. So usually what you see is trying to grab some liquidity at a certain level, and a different institution maybe pushing the market to a different activity. I know from institutional forex traders, they don't even look at retail levels or retail accounts. Maybe smaller markets, maybe the stocks one are more easily, you have penny stocks and all that, and you have the big hedge funds and all that might be easier to push a stock higher. The forex market is more, it's harder for that to be.
At the same time, although I do agree exactly.
I saw an interview with an institutional algorithmic trader, and what he was saying about this stuff is that, like, when they see prices, like, let's say they're trying to VWAP a massive order, and the price is going towards a low, like the algorithm, they've coded it in a manner such that it buys less to increase the probability of going lower to get a better averaged out price on like the VWAP curve. And I suspect most algorithms probably do the same, right? Which is what causes those moves in that regard. Makes sense logically, right? Doesn't make sense. Show to the yellow line.
Exactly what you're saying. I do see all the time a very clear demand area on the 1 hour time frame on your USD. Price will come in, consolidate on the demand, come all the way to the extreme, and then during the London Open, just wick through, break the demand area, and then go bullish for the rest of the day. So you just see price wick through the demand area, 5-10 pips, and then went in that direction you wanted. What happens here? What do you do in this case, in fact?
Yeah. What I do, I take the loss. If I had my stop losses, I take the loss, and if I see the strong reaction, then I try to rejoin. Because many times you're expecting
these people are fucking new. This is what I mean, man. Like, this guy's talking about getting into these trades before the sweep. Literally a fucking NPC. Can't take this shit serious sometimes.
To happen, but that one time,
low rank noobs yapping.
I've been there. I've felt the pain of losing thousands of dollars, not profit capital, personal capital or investors capital, and I'm not going that way again. So I set my stop losses, and if I get stopped out and then I have the opportunity to rejoin, I will do that instead of hoping or waiting for the whipsaw to happen.
So all of your stop losses are at the bottom of the demand area.
Correct.
So even if you see M1 breakouts, you could put the stop loss at the bottom of the breakout zone, at the bottom of the consolidation, but you still choose to have it in the demand area. Everything at the demand. So therefore, your risk reward, the lower you get into the demand area, the last entries have a better risk reward. So then you mentioned because you have a flexible risk reward profile. Does that mean you have equal exits for all positions, or do you scale out in a similar fashion?
No. So my exits, both stop losses and take profits, tend to be the same for all the trades.
Okay.
And that's why my risk reward ratio is break even or even negative. But the fact that I don't scale out on my wins is just because that I'm sure you've been there, Walker. You want to ride the trade, you bring your stop losses to break even, and then reverses and takes you out for break even trades. And I think that's what most traders are doing, and most traders are break even or losing money. So I just prefer to bank profits, and if I need to rejoin, then I'll rejoin. But I'm taking full losses, full wins and partial losses. So if I see trades going sideways, not going in that direction I want, I might be taking partial. I'll be scaling out of the losing position. Okay, so I'll be taking partial losses, but I'll be taking full wins.
Your average zone refined M1, the demand area on your USD, I'm guessing like 15-20 pips is the depth of the zone.
Yeah, on the Euro USD could be 20.
So therefore, because you're doing almost a 1-to-1 risk reward, that means after prices bounce 20 pips out of the zone, you're out of the market.
Correct.
Meaning to say, if prices, let's say Asia range is consolidated right above your demand area, London Open happens on your USD, comes into your demand, you're laddering entries. By the end of London session, you're probably out. Like you're not holding the trade for hours or days. It's maybe even 30 minutes, 2 hours. It's around the duration. This is exactly what I'm doing, which is the reason why I'm talking through this. Because I'm a big believer in demand. Sure, it's a very powerful concept. And if you're aligning with the daily time frame, sure. But then there's also a lot of negatives with swing trading that I found because I used to be swing trading too. One of them was if I was entering on M1 time frame and I was able to have a sharp stop loss, but then my exit was on the daily time frame, I had the potential to have a huge risk reward, which seems like a dream, but in reality, in execution, you realize you're up 1 to 10 risk reward, let's say, and you haven't taken a partial. So if your target is 1 to 15, that means you're willing to risk 10% of unrealized gain to then gain another 5%. It's a negative risk reward to hold. So then I went to the opposite end just like you, and I thought, why not just take an exit on the average session movements? If London session on USD average is 25 pips, let me look to exit something around 25 pips, because on the best day, on the worst day, this is the average movement, and then if it traces, comes back to break even, I can get in again, or whatever the case may be. But in this case, partial. At the average London movement, I will take a partial around the 25 pip mark, because then the average daily range might be 50, 60, so I potentially capture the rest.
Yeah.
Do you consider the average daily range alongside your session range?
No, not at all. I'm always looking at levels. So I'm not looking at ATRs, I'm not looking at average range, I'm not looking at that. I'm placing both my stop losses and my take profits at key levels. Because I know the market will fluctuate very easily from key level to key level. Yes. I don't want to ask the market to break those key levels in order to get to my targets, which is what happens to a lot of retail traders. They stop their take profit just above the key level, and they're so close, and the market reverses. I don't understand why. I want my TP to be just below the next key level
To be safe.
Yeah, to be safe. And then I see there's strong momentum, I'll rejoin. That's for me a new opportunity to rejoin the trade. That's a new setup. But I take all my profit at the key level.
And those counter levels in a demand scenario, you're looking to buy, you got in, and now you're thinking about your exit. Is this something you're already predefined based on counter supply zones that we're building into that demand, or is it Asia high, session high, previous day high?
No, usually my exits are from the supply areas on the 5-minute chart.
That allowed you to come into the demand. Okay. And it's just a hard TP level. You're not looking for rejection or anything.
Nothing.
Okay.
Just hard.
And it's not a scale out like your entry. It's one fixed level. Very, very interesting approach. I don't think I've seen someone that is doing it like this, but it does make a lot of sense. Now, the next thing I want to transition towards is the traders you mentioned on the back end that you see. You have data of probably hundreds of thousands of traders, and you're mentioning that the most success is found with people holding trades for a little bit longer.
Correct.
And going for a positive risk reward.
Correct.
Now, this is opposite to your own beliefs and what you are doing in reality. Why do you think this difference lies between your own approach that is working for you and many traders that are profitable on your platform? What is the difference here?
I think taking trading skill to the level that you need to be a profitable long-term scalper, for the long run,
Yeah,
takes a lot of time.
We're gonna brush our teeth and we'll continue this yap session. Very clear this guy's not a very good trader, right? Prop firm owner, but not a very high ranked trader, we'll say that.
You late to the model. The math is the math. Ain't no cap in the graphs. I just mapped that path. Now the risk I splash. The math is the math. Hit TP then dash. Porsche curves new class. I still swing, I slash. No emotions, this side wire. Risk reward, clean, that's empire. They want hope, I want proof. You drop size, I drop truth. Chart bounce once, I fade the rest. Bentley seats in a VWAP test. Everything math, never just guess. Roll the strain, now I hedge the stress. Options stack like commas bill. You chase hype, I chase yield. They go blind, I go still. My edge quiet, but it kill. Math. The math, no fear, just math. They break, I grab, they beg, I laugh. The math, one shot, one tag, that zone, it crack. Because the math is the math, ain't no cap in the graph. I just mapped that path, now the risk I splash. The math is the math, hit TP then dash. Rolls Royce matte black, you'll stop, hit that stat. This ain't luck, this ain't vibes. Structure, steps, it's always been the math. Marcos.
She bounced once, you press twice. Stop, gone. Marcos. Yeah, I got 'em, no chase, no stress. Stop, got tap, now they clean that mess. Didn't say much, I don't need to guess. Place that level, market did the rest. You got, now you tweeting regrets. I sip slow, I collect these sets. You want hype, I want that depth. I don't blink, I prep, then step. Late night zone, marked in gold. Candle touch, then story fold. You said breakout, I said trap. Price came back, you took that slap. Watch your chart, all full of lines. None of them real, none of them mine. Mine just sit, breathe like silk. Yours just scream, mine just built. They press green, I press calm. They want rush, I want charm. They want loud, I want plan. You want moon, I hold land. Yeah, I got no chase, no stress. Stop, got tap, now they clean that mess. Didn't say much, I don't need to guess. Just place that level, market did the rest. You got, now you tweeting regrets. I sip slow, I collect these sets. You want hype, I want that depth. I don't blink, I prep, then step. Price dance wild, I don't flinch. You felt FOMO, I felt inch. Entry slow, exit rich. You saw wick, I saw switch. You want flash, I want rhythm. You want now, I plot with wisdom. They rush in, don't survive. I plant lines, mine come alive. POC shift, I lean back. Value area high, I timed that trap. They got hit, full size drop. I didn't speak, I just watched.
You don't see it when it's quiet. You only feel it when it breaks.
Too late.
Me, I move like a shadow. You move when
I
you
got
should.
no chase, no stress. Stop, got tap, now they clean that mess. Didn't say much, I don't need to guess. Just place that level, market did the rest. You got response. That's what happen when you rush. Cool. You got response. I just faded with a hush.
You came back, same chart, same song, same face. Marco goes first. You got gal, get I didn't learn, just hit send, press reverse, clean with bend. Now you hold me that end. You got gan and new trade, same mistake, same trend. Said you changed, but that's pretend. I don't change, I just extend. I fade the high, you call that moon, I call that trap, you call too soon. You want breakout, I want logic, you want green, I want profit. We came quick, then sweep so cold. You start scream loud, my hell go. Same move hit, same face shown. You still guessing, I still zone. You reload pain, I reload plan. You still press, I still stand. I stay small, you go all in. You got again and again. You got didn't learn, just hit send. Price reverse, clean with bend. Now you hold me that end. You got and new trade, same mistake, same trend. Said you changed, but that's pretend. I don't chase, I just extend. No risk plan, just FOMO thrill. No edge drawn, just hope to fill. You mark noise, I mark still. You bet candle, I build skill. TP tagged and silence hits. I roll out gas, you post fist. One more trade, one more loss. One more time, I let you cross. Same zone hit, same fear show. Same regret in the candle glow. You want hype, I want stealth. You burn fast, I print wealth. Cut you, cut you, cut you, cut you. Again. Same button, same burst, same chart, but worse. Same push, no verse. You fall, I don't curse. You got again, didn't learn, just hit send. Price reverse, clean with bend. Now you hold me that end. You got again, new trade, same mistake, same trend. Said you changed, but that's pretend. I don't chase, I just extend. It wasn't personal. It was bad. You got again. Marcos.
Dash line yellow. They say it's fake. Till they liquidate. Marcos.
So we're back.
Imaginary lines, that's what they say.
We like when Bebo pumps Bitcoin. yeah, I love it. What are you trading? Forex? No, right now I'm trading Bitcoin and Ethereum. I don't trade Forex. Everything but, basically. Everything but Forex. I am market maker. Wait, if anything, I'm the market maker. When I put my orders in the exchange, the chart's fucking moving, my boy. Ain't no joke. Yeah, Coinbase spot volume is going like fucking parabolic right now. Yeah, they're sending it in Asia, right? We talked about this, right? Whenever there's American holidays, you start to see some interesting behavior come out of the Asia region. Coincidence? Coincidence or no? Or no? Or no? Talked about this exact scenario yesterday. Question is, are we gonna make it up here tonight, right? Because we got a TP up here. We got a juicy TP up here. Now we got to be mindful of hedging this thing. I don't know what divergence sits on the 30-minute yet. Okay. 5-minute already reset earlier. Okay. How's all this stuff looking? Okay. Bebo, the COD God. How's everything else doing? Interesting. I'm long Zcash from 522. Zcash. Nice. Nice, getting quite the pullback. Hopefully you don't get stopped out. Grab your stop break even. You can get back in later if needed. Show it to Zcash. How'd your other thing do? Oh yeah, we looked at it earlier. Monad, right? Monad. Interesting. What was the other thing you did? Oh, Avant or something? Pretty bullish for now, right? Pretty bullish, starting to leave imbalances behind, just pumping. Question is, does it carry through or not? Or not? Because these trades are fucking mega juicing right now. Mega juicing. Mega fucking juicing. If we go past 94, it's probably gonna be the biggest trade I ever had. Combined with the ETH one. Not single trade. Oh, but we got some juicy fucking profit right now on this thing. Boy. Trades getting bigger, back getting bigger, just getting fucking jacked. God damn. 5k BTC sell wall 92.5, is there? Wasn't the last time I looked. Where are you seeing that? Where are you seeing that? I see 1.2 at 93. Where are you seeing these sell walls? Let's zoom this out a bit to like 100. A buy wall. I think you got some busted data, my boy. This is the current order book. Aggregated order book. the 1200s for sell up here, and then they're just people have been walking it up all day. Like these buy walls were like lower earlier, and then they like walked it up, walked it up, walked it up, and these two have stopped. This person's like still somewhat moving it up, and then this is like the spot order book. They aren't coming along for the ride so far. They were walking up the price on spot, but then they've left it here ever since. So who knows what they're up to? Yeah, 5,000 would be a huge order. It's pretty rare you see a $5,000 or 5,000 Bitcoin wall in the book. We had one today, right? Today, at one point there was like 4,000 right on the bid. Or maybe my data feed's broken, I don't know, right? It's possible. But I mean, I did check other ones. It seems like they're all aligning with what I'm looking at. You don't know what I'm saying. Shout out to the naked point of control, 886. Pixel perfect. Watch this on a lower time frame, people start rolling over. Oh.
FOMC while I'm the man slinging semi. Ups until I'm calm but deadly. Smoking that Ray Day pack real heady. Mid-print wick, I thread it steady. DXY spike, I load that heavy. Powell speak, they dream confetti. I'm up in size, let's rock, we ready. Candlewick fly, I'm zone, I'm faded. I'm so bark, my stop unbaited. They bought at the spike, got wiped deflated. I wrote that pack, then chart updated. I'm in the chair, back recline. Y'all saw screens, got 5 aligned. Got green on the chart, got red in the sky. That stay stops blowing while I multiply. Penny bottles when my Powell speak. I'm 2 sips deep, still mad for lead. That 25 hit, I preheat. They react, I plan thin feast. Off a perk, sipping lean, got the Henny in me. FOMC while I'm the man slinging semi. Ups until I'm calm but deadly. Smoking that Ray Day pack real heady. Mid-print wick, got threaded steady.
My chart wasn't live in YouTube. Yeah, YouTube's pretty good for that, right? There's so many people that stream just feeds of like a bookmap and whatnot, like whatever asset you want. You just put in like Tesla bookmap and you'll find someone streaming it, right? Or like a ES bookmap. And not as many exo chart streams. That's why I leave it on sometimes when I go to the gym. Whatever, at the end of the day though, like I don't really pay too much attention to that. I mean, like I am mindful of it, that's why I have it open. But you never know when there's spoofs, right? So until the price actually gets there and you see if they're actually getting filled or not, it's like just irrelevant. You know, interestingly enough, somebody had been spoofing the order book this entire way down. And ever since we have bounced from the lows, that person is no longer in the order book. Interesting. Interesting. People stream all kinds of stuff, honestly. Some pretty interesting like tools people stream on here. What a reaction on this thing. Shout out to Bebo, right? Looking at the order book. I see you. Nerding out, learning from your boy. I see you. Taking notes. Interesting. I was checking out the CoinGlass one out of curiosity to see if the thing was busted. My bookmap feed. The CoinGlass free version seems pretty accurate. I mean, they don't have any actual like advanced data on the order depth or anything, but better than nothing, I suppose. And they have a tape on here. Interesting. Curious how well this thing functions when volatility hits. Usually the typical issue with a lot of these free services. Volatility hits the market and they all just crash. Should we continue the nerd out? Should we listen to this prop firm owner keep yapping or what? Or is this clown?
Of skill and a lot of work, and most of the traders that are coming to the prop industry, they're not yet in that stage. And as I mentioned, it requires more management and more patience and more discipline and more screen time. So I think holding that for months in order to scale your account and get into the bigger payouts and all of that, most of the traders are not there yet. So most of the traders I see successfully making payouts and getting to larger accounts are swing traders, which just requires a good signal, a good entry, and then letting the trade go in your favor.
You mentioned earlier that people maybe are break-even traders. If they were to do one account, long-term track record, they might be losing, they might be break-even. But in a specific approach with prop firms, you just simply have the ratio of your evaluation fee payouts, and you might blow an account, you might be down 10%, but it only costs you a few $100s. But your payouts might be thousands of dollars.
Correct.
So in your real P&L in your pocket, you're up, but your equity curve is all over the place.
Correct.
So I completely understand this game. And would you speculate that the traders that you see success in on your books that are getting the large payouts are the ones that are more skilled and therefore better swing traders that you find, or is people that are just better at the game?
I think they're better at the game. If I share with you a little bit of the risk management behind the company, I think that would give a lot of clarity on what happens behind the scene. As I mentioned, back in the day when there was a lot of companies and a lot of competition, the profit split was also smaller with the traders, and it was very easy to go A book with them to send all the trades to the market, and then 50-50 with the traders, and the maximum loss was smaller than today. So the risk management was simpler. Let's go that way.
Interesting. Okay. Just before you get into this, I'm very curious. I thought, and a lot of people watching do think that, well, if you have, let's say, 90% of traders are losing, then you just trade the opposite of what they're doing, and then you have 90% win rates. Is this? And I've just speaking to many, they're like, this is not a reality that you can actually execute upon. Why is that?
First, because the costs are very, very high. When you're sending trades to the market,
in terms of volume of orders,
the LPs charge commissions and fees per volume and spreads. So usually on a lot of props, us included, we sponsor the spreads, for example. Okay, the spread in the market might be different, so that's fine as long as we take it into the business model. We're doing good. But if you want to take all your trades and do the opposite, so the trader is paying a commission, you are paying another commission. You pay twice commission, you pay twice spread, you pay the LP fee, and all those costs make just unprofitable. The whole setup unprofitable. So just taking everything and going against or doing the opposite of your trade, it doesn't work.
Interesting.
This guy, okay, not only is this guy not a good trader, but he obviously does not understand how to use data properly with a statement like that, right? Can't take this shit seriously. Preloaded questions, government pawns. No, it's just a trader interview channel. It's not anything crazy, but the thing is, most people that are interviewed here are not like elite traders, right? They're just people that make money, a living trading, but like there's still a huge discrepancy between a top tier trader and like this guy, for example. Because like the first half of the interview was him talking about trading. I was watching it earlier, and it's very clear to me from listening to him talk about trading, he's not that competent of a trader. Like, yes, he knows how to make money trading, but he's not like a highly super efficient trader. And now hearing him make this statement about not being able to capitalize on unprofitable retail trading signals tells me he doesn't know how to like properly analyze data either. Like think about it. You have a pool of traders, right? Like this is like pool A of like consistently unprofitable traders, and this is like pool B of consistently profitable traders. Whenever they're trading the same instrument, if these people are all leaning one way and these people are all leaning the other, you can make a strategy out of that, a highly probable strategy. But he's implying that you have to like literally counter every single trade that this person makes to make this work. It's not true. You can be extremely selective with it. Like, I'm pretty sure he's just LARPing. He's just saying that for the sake of not, because there's no way he's that stupid, right? There's no way. Ain't no way. I don't believe it.
You mentioned, how was it working back then, and now you're going to say how it changed, I guess. So what was working back then for the props to be able to ebook a lot of them?
So the programs used to be more expensive, and the maximum drawdown used to be smaller.
Okay, so different economics actually.
The economics were different, and the profit split was 50%.
Can we put this thing on the screen? Should we just say you're just roasting these people for a full stream? Just restructure this layout a bit. So I want to be able to see everything still.
So if a trader used to lose money, most of the drawdown was covered by the fee. But when they used to when they money, so we used to split the profit, 50-50. So we did good, and also there's the economics were different. With competition, with when new companies came to the market and the prices went down and the profit split increased in traders' favor, that brought a new challenge to the risk management of the companies, which is a good challenge for us. That made us think out of the box and creatively. Okay. And we thought doing bbook would be the right call. And turns out if a company is only bbooking, the trades will also not be profitable in the long run because you're paying the payouts. But
right.
Let's pull all the traders and sell as collateralized debt. So I'm telling you right now, if I had an exchange that gave me an affiliate code, without a doubt I'd be harvesting people's trade data in the chat. Are you fucking kidding me?
When a trader is not losing, you're saving that money, but you're not making any profit. But when the trader is making money,
just
you're
for
not
the
making
fucking
any money,
lols.
but still you need to pay him. So you're relying only on the fees.
So if the prop firm is relying only on the evaluation fees as their only revenue source, and obviously their biggest expense will be the payouts and their team and so forth, if they were to do this in 2025, it wouldn't be a profitable model.
Yeah, it's not sustainable.
Interesting.
I mean, you may have short-term success, as the hype goes and a lot of people come, but eventually you will face those payouts and it's not sustainable. You need to
so in pursuit of sustainability, longevity, to be able to afford with ease the payouts, what did you have to do?
So it's like not only that, I've seen other interviews with people that own prop firms, and they fully come out and say they sell the trading data to institutions. It's for a fucking reason, right? They wouldn't be buying it if it was fucking useless garbage.
Without going into too much detail, but you need to profile and you need to understand. Today it's becoming a bit easier with AI and machine learning, but to as quick as possible to understand if a trader is going to make for a payout or not, just based on stats. And based on that, you decide if you A-book, B-book, C-book, go against.
And this is on what criteria? Just their behavior and the evaluations?
Yeah.
Okay. And are you looking into other things like age, demographic? A question there maybe is just only on performance.
Only on performance.
And just out of curiosity, swing, scalp, lower time frame, big stop loss, news trading, all of these variables that you see, which ones have you found to be more consistent in terms of any sort of profits?
With all the machine learning, everything is changing also for us, because you let the models work for you. So you don't even have all the details of what the model is doing in order to get
the results. Actually.
Yeah, you give it the results. Before that, let's say 1 year ago, 2 years ago, we still have them, the pool accounts. And then if you have the right profile, again with algorithms and everything, you have the profile of the traders and you have the overall book. You're not looking at an individual trader, but you have the book and you manage the whole portfolio. So when you see the portfolios are performing good, you can leverage those. If they're performing wrongly, then you can go against the portfolio and all of that.
For the last 2 years, a proud sponsor of the show is a top-ranked leading prop firm, Alpha Capital. And for the years that I've been working with them and the thousands and thousands of viewers, and with that being said, let's get back to the episode. When the machine learning has identified a profitable trader that you are in this hybrid approach, A-booking, B-booking, with the profiles you are A-booking, identified by AI. Now you've got conviction in this because of the data that you have, and now you're A-booking these clients. I feel like this kind of approach is probably adopted by many with brokers, with different risk teams. But the difference with broker and knowledge parallel is people are trading their own money. So someone has deposited $5,000, it's their hard-earned money. So the likelihood of consistent behavior is probably higher. Whereas with prop firms, you always have this in the back of your mind. If I pay 500, I've got 500 payouts. I'm break even. It's not my money. So you might be consistent for 1 week, 2 weeks, and then one day you wake up and you think my max daily loss is 3,000. Why not? And then you throw it. And this is unpredictable. This is just human greed or no one can identify.
Where did that come from? In real life, they wife fat and they pathetic. Where did that come from? Damn, you are hating right now, goddamn. Oh. Someone just fucking top long 25 mil on Bybit. Interesting. They opened 25 mil worth of long right as we tapped to 886 and they get point of control. Oh yeah, it's interesting. Interesting time to take a long. Isn't this like the target of the fucking triangle thing too? Like basically. Oh my god. Interesting, interesting. It's always on Bybit too, right? If you look at like the order flow of this stuff, it's always people on Bybit just aping the most ridiculous positions.
Prior. But
Who knows, alright? Could be just hedging a short. Who knows?
Becomes a big issue because if you A-book them and then they have consistent behavior and then one day they change their behavior, it can lead to a damaging amount of loss. How do you navigate this to still have sustainability?
You know, at the end, it's a matter of large numbers. You know, we don't analyze any specific trader, you know, individually. We look at things, you know, more from a broader perspective as a whole portfolio. So yeah, we might have a trader in a profile. We don't know the trader. We just know his trades. You know, we're doing something with his trades, and if he changes the behavior, we might suffer from it, or we might, you know, benefit from it. So we don't know, but we don't look at traders individually.
And in general, machine learning, it's a word I hear around, but truly I don't fully understand what it is or how it works. If you can shed some light upon what it means to be using machine learning for your risk management.
I don't think we're very, you know, the gap between us is not very large. You know, there's the AI team and the data team working on that. You see the models and you just see lines and lines of code just running, and you get the results from those from the codes, and then you try to build models around what them, you know, the codes are
and firms that are.
This guy doesn't obviously work in tech. Doesn't know anything he's talking about. He works for Yield Max. How about a mill on it? No clue. But we're very clear that this person is like. I suspect this person gained their wealth from something else, whether it's like passed down in their family or some other unrelated business venture not related to trading, and now they just trade and open the prop firm because they wanted to do it. Because from talking about trading, he's not particularly knowledgeable, and now from talking about data analysis and even like the machine learning AI aspect, he doesn't know what he's talking about either.
You argue they're all utilizing similar strategies, or do you share information, do you share and collaborate, or each firm has their own way?
Yeah, each firm has its own way. I don't know what's the risk management guidelines of other firms. I trust, you know, they
the
do.
reason I ask that is because I spoke to another prop firm owner not too long ago in New York, and he was mentioning this gamification side of it and how it's becoming an issue because when individuals are trading with pure intentions, that's what it's there for, and that's predictable behavior, and you know you can adapt your risk profiles for this. But when you have organized groups that are just here to exploit the system, just like you have organized crime, you have organized people going to the casino and gaming the system. At least in the casino, you can catch the card counters and the guys with the glasses on, whatever strategies they use, because everything is inside one room, it's inside the casino. In the prop space, they might be buying on your prop, selling on another one, and playing the numbers game. But if you were all to share information, then you could catch the cheaters. But now, if you're all individual components, you cannot find these cheaters. So, and I know it's on the rise. These cheaters are on the rise. What can you do to mitigate this, or is it just cost of business? It is what it is.
It's a little bit of everything. You know, at the Fibers, I'll give you a long answer for this, but at the Fibers, we're always aiming to, you know, to get to the authentic traders. Okay, we work very hard to bring.
I would bet a millionaire told me that went long. Oh, they're talking about the other dude. Oh, look at this. He literally top ticked the long too. It's the funniest thing. I just top ticked the long. 25 mil on this fucking little ding candle right here. Gone down only ever since. Like, what a place to open a trade.
You know, the community and support for traders, and I like to believe that more genuine and authentic traders come to us. We have, you know, we do have this phenomenon of organized groups. We know how to identify them, and usually they don't get into the funded accounts. Okay, we know how to spot them. We know how to identify them. You know, we have a risk team and a dealing team and everything in place in order to spot them. Those who do get to the funded stages, as long as we understand what are they doing, we're fine with it because we know what to do with their trading. The problem comes when, as you said, okay, he's doing something consistently, and then one morning he wakes up and he does something very different. So we do fight this phenomenon of gamers or organized group and all of that. That's our, you know, sadly our large, you know, a large part of our operation goes towards that. And I think we're doing good on, you know, spotting them and stopping them before they go into the funded stages.
So because your firm is one of the first firms, 2016 when it was initially founded, there was only maybe FTMO and maybe a couple others, I don't know.
Correct.
But in your time, especially around 2020 COVID, that's when like every mother and a dog and everyone had a prop firm, and the rise of influencer props. I want to understand, is there anything for us to learn or observe from your experience of, I want to call them real prop firms versus influencer-owned prop firms, where you're sitting with a team and a risk team and you know, you have a full infrastructure, whereas these guys have just some followers online and maybe a tech provider partner. What difference have you seen in longevity, infrastructure, and general business practices?
I think for traders, if I was a trader just coming into the industry, I would feel overwhelmed of the amount of offers out there, of the choice, the amount of prop firms out there, the amount of content, the amount of everything, and it's very difficult to choose which prop firm to work with. I think traders need to they need to get very informed on which prop firms to work with. I don't know many of the prop firm managers or founders, and I want to believe they come with the right intentions into the game, into the industry. Because at the end of the day, what we're trying to accomplish here is what we talk about at the beginning of the conversation. We want to help traders overcome the big challenges of being a trader, which is lack of capital, psychology, pressure, lack of community, lack of information, lack of education, all of that. So we work very, very hard with that. So I think if as a trader you see a company with the right values, which is investing in you as a trader, they might have aligned interests with you as a trader. The traders back in the day, I don't see them a lot today. Back in the day, before the technology providers came, there was a lot of attempts to just do a lot of marketing around the trades, and I think that kind of damaged the reputation of a lot of the industry as a whole. They brought prices down. They make everything more gamey, and risk management challenges around it. But if you go to larger companies, well-known, high reputation, I think you're in good hands.
Yeah, the reason I draw the comparison is because as quick as these influencer ones came, they very quickly disappeared too, and with that, a lot of upset customers and traders. When we are to compare just overall infrastructure, I can see that most people, I want to say, come in with good intentions. There are the bad actors like anywhere, but majority, even the ones that failed their prop firm, they came in with good intentions, but it's just a hard business model, or it's harder than they thought before they started. Which is a reality I'm sure you're aware of, because you've had every high and low in the industry, because you've been navigating for many years, almost a decade now actually. Next year will be 10 years. So with that much time in the game, what have you seen as certain things that you had to do to see how others are, it's a price war to the bottom, it's a gamey, better the conditions of the trader, but in the end, it's harder to be a sustainable business model. And the reason I say this is because maybe 20 or 30% of the guests I've had on the show, they speak bad on prop firms, and I'm a big fan of prop firms. I think they're a great tool, and yes, there's denied payouts, yes, there's people that got scammed, rob pulled, there is these bad things that happened, I'm not denying that, but at the same time, there is people that are 18 years old, living at home, 1 year into their trading, made $30,000, life-changing money. So there is wins and there's losses in this space. Overall, I think it's net positive. But when I speak to these guys that are like prop firms, no, don't do it. It's because they're looking at the pocket of the bad ones. But then if you look at the pocket of the good ones, the top 5 that have been around for many years, it is a different case. For someone that is watching or follows influencers that says, no, prop firms are bad, avoid them, just focus on your own money like the people used to do, what would you say to them? Like, why is prop firm still worthwhile?
Yeah, I remember a lot of videos done around the fibers. Why you shouldn't trade with the fibers? It's better for you to trade your own capital. We used to offer low leverage, and we still promote low leverage than high leverage. It's amazing to see how low leverage traders live longer than high leverage traders. Okay. That's a different conversation. But they used to say, okay, take your money, take it into offshore broker, trade with 1 to 500 leverage, you will make more money than trading with the fibers with low leverage. Okay, that was kind of the point. Okay. I think trading with a prop firm like the fibers or any of the big ones will give you we solve one of the large pains of traders, which I remember myself, which is that, okay, do I withdraw profit or do I grow my account? Okay, because you have the leverage, you have the account, you grow your account by 10%, and now what? Okay, what do you do with that? You keep scaling it, you withdraw your profit, and then you're back to your initial balance. So prop firms, they solve this. At the fibers, every time you reach a milestone, we scale up your account. So let's say you start with a 10K account, you make 10%, we scale your account to 15K account, regardless of you withdrawing your profit. So you can withdraw profits and scale your account, which is not something you can do with your own account, right? So even if you're going to take longer because you have reduced leverage than the 1 to 500, 1,000 you can get on an offshore broker, it's worth. That
looks like a normal guy.
Accounts and withdrawing, that's something you cannot do on your own capital. So that would be my argument for that.
The next one I want to get into is kind of, this might be a tough question, but I'll ask it because a lot of people want to know, is just the overall conflict of interest side of things. Not just your firm, I think every firm has this dilemma where I think back in 2016 people were not so aware. In 2025, I think every prop trader knows that the evaluations pay for other people's payouts. It's a business model. My stance is absolutely fine. I want the prop firms to thrive as a business because then they can afford the payouts. And you don't want prop firms struggling because that's when the denied payouts and the problems come. So if the prop firm is winning, the winning traders are winning, everyone's happy. And the people that are blowing money on these evaluations, they need to reconsider their choices. If you haven't found consistency, don't blow your money. That's individual responsibility. But at the same time, a lot of firms, they will now do predatory practices or slippage or other things that are only there to cause traders to struggle. And that becomes the benefit for the firm, but then to the detriment of the trader. Because there is a underlying conflict of interest. I can look into say, well, brokers do the same, where the winners are paid out by the losers, in the sense of your deposits pay the payouts on brokers. Even when you zoom out and look at the whole market, you can say, well, there's no money created in the market, it goes from winners to losers. So the zero-sum prop firms, zero-sum brokers, zero-sum markets, I understand that's how the world operates, but the predatory practices and the conflict of interest brings an ethical conversation here. So I want to hear your thoughts on this.
Yeah, I think for everyone who's traded with the fibers, we're always trying to give traders the best trading conditions. I told you, we sometimes we sponsor the spreads. You'll trade with us major pairs with zero spreads. That's not real market conditions, right? That we get from our LPs a certain spread and we mark it down, okay? Because we want for traders to have a better position. So even when we're going out to the market on real accounts, we might be losing on the spreads. We absorb that loss, but the macroeconomics, they're still in place. So we never go, I don't think we have a certain thing that goes against our traders. Okay, our interests with the traders are aligned. We don't have any conflict with interest. I told you we don't look at traders individually. So as long as it's not something that we cannot replicate in the market, so there might come traders with EAs that we cannot really make money on the market with those, or emulators, or rollover scalpers, or spread scalpers, or we cannot make money with that. But as long as the traders are authentic, speculative traders, and we know how to manage that in the market, whatever risk management we need to apply, I think our interests with them are aligned. We don't have any predatory practice, we don't have a slippage and all that. We don't need any of that.
The next topic is more future oriented and is surrounding this word regulation. Now, I think it's a very misunderstood term and it has a lot of depth to it, where is what jurisdiction, there's a lot of things that come here, and even the broker industry, which is much more mature, you have the Seychelles and the offshore brokerages, but then you have the regulated ones with less leverage and harder conditions. So people still pick the unregulated option, despite regulated options being there. But I want to draw a parallel because this is from your time, the MyForex funds, the rise and fall, let's say. I actually didn't keep in touch with what happened to that case in the end. In the beginning I did, but just generally how you viewed that situation, how you learned from it, to put maybe measures in place, and just your general.
And there's no way, how old are you? How old are you? Out of curiosity. How old are you?
5 to 10 years with regulation.
Yeah, I like this topic because we are in conversations with the regulators. We have actively approached them and asked them and request from them a regulation to the industry, because I think it's something necessary. It's something that traders and companies will benefit from a regulation in place.
Which
I don't know if this is worth watching. Like, I
CySec,
can't say I really care too much to watch
we've met
this.
them. We're in email communication with them.
I gotta go. See ya. She's just dipping out instantly. Later. Shut the Bebo. Shut the market maker Bebo.
From what I understand from regulators, they are very focused on other topics, crypto and other things they need
bigger
to.
markets.
Yeah, bigger market they still need to regulate. They don't fully understand the nuances of the prop firm industry. And, and I think once they bring a regulation, would be similar to a bank regulation. I'll go into detail with this. When we asked it before that, when we requested from them regulation, they were not willing to regulate us just because there's no retail capital in the game. So what CySec does and you know the regulators, the force regulators do is to protect the traders, the retail traders.
So they don't see this as trading activity because there's no deposit into an account. And how do they view therefore the evaluation fee, which could be seen as a deposit if there's instant funding? Maybe I don't know.
They're not seeing it. They don't see it that way. So when you see CySec, they're fine with brokers doing a B-book, for example, as long as they pay. So what they request from brokers is not bad practices, no slippage, no all of that, and to have certain amount of money in their accounts in place all the time to be liquid and all of that. And I think for the prop firms, once they decide to regulate, they'll request something similar to not bad practices and maybe limiting the leverage you can offer, no more 1 to 100, maybe you need to go down to 1 to 30, something like that, and to have money in their accounts when there's disputes, when there's things to solve. But we haven't heard back from them saying, okay, we're going to regulate this.
So with these things in mind, what was the issue from a regulatory perspective with MFF, my first one?
From my understanding, what I remember is that MFF, they used to, they also ran an unregulated broker. Okay. And that's what triggered the whole case to initiate. I think I didn't follow, same as you, I didn't follow what happened afterwards, but I think afterwards, everything that was not related to the unregulated broker was dismissed. And I don't think they go into the prop firm side of MFF.
Okay. Yeah, from what I gathered, it was kind of not looking into the tech or the industry, it was more looking into a few things that they're doing that could be seen as fraud, maybe. Yeah. I don't know, or bad practices as an issue. Moving into, let's say you're saying the regulators move slow and they have bigger priorities like crypto, which are much larger markets. Therefore, what timeline would you imagine any change to happen in this space?
I hope it happened today. We have offered to them to be part of their process of creating regulation if they need to understand the industry from the inside, to help them understand the industry from the inside in order to set the right regulation, who's not going to destroy the industry, but to help it grow healthier. We haven't heard back from them. They haven't thrown any light of.
Interesting.
Okay, are we going to do this? I have no clue, but I hope it happens soon.
With regards to other large prop firms, I want to speak about the large ones because I see them as they stood the test of time, they're more reliable, they have better practices, infrastructure, and so forth. The ones that are, let's say, top 10, I see a lot of them, they post like, we did 50 million in payouts, 100 million in payouts, and just from what you see behind the scenes, is this something realistic? Because I think anyone can claim anything, but there's no way to prove it because it's not any. Some of them will be through crypto, and I spoke to Justin from FBFX. He said, on the first glance, it makes sense, but then when you look deeper, they can just move money through a wallet and bounce it to their own accounts, and it looks like payouts, but it's just staying in house, just to inflate numbers. So there's going to be tricks in marketing and all of this. But what are like realistic numbers of any big prop firm?
I think within the top 10, there's a large scale and a large difference in sizes. I think number 10 is very, very far from number 1. Okay. I believe so. There's certainly, I can tell you from the fighters, we do get into the millions of payouts every month. So if there's someone, the largest, the large company saying, okay, we pay 10 million, 20 million, 30 million a year, it's credible. If you hear, small companies, even the number 10 or 9 or below that, claiming the same, I don't think, I have no way to prove that, but I don't think those are the numbers. I do know there's some practices of moving the money around to try to make inflate the numbers. Yeah, I don't think those are.
I've also come across two things lately in the last year, which is one is people coming out and saying our funds are real funds, completely A-book environments, and it's not like it's to say your 100K account is $100,000 real capital, and all you have to go through is phase 1, phase 2. When I see this, it seems pretty like okay, but majority of traders lose. So why would you give a trader you just assessed for maybe 3 weeks, give them $100,000, and yes, it's only 10% risk, so it's only $10,000 of exposure, but they paid $500, so you have an issue here, and you A-book everyone. Is this something that causes alarms?
No, it doesn't work that way. At least not in the fibers, because if I have traders with 100K account, doesn't mean I need in my pool account to have 100,000 time each one of the traders trade that. I only need to have enough capital there with the leverage to allow them to trade whatever they need to be able to trade.
Margin, yes,
okay? Yes, is that clear enough? So, and our pool accounts, they have larger leverage than the leverage we're giving them. So they might have 1 to 30, 1 to 100 leverage on their account, and they have, let's say, a $10,000 drawdown to manage. Our pool accounts have larger leverage. Those are institutional accounts, and they have larger leverage. So we don't have to have. Those are large accounts, right? But it's not a 100,000 times each trader. It's just
because it becomes hundreds of millions very quick.
Correct. It's not the case. It's only enough to allow them to trade whatever they're supposed to be able to trade.
I finally have a special offer to share with all of you from the US or my futures traders, which is over 20% of the listeners on the show, and that is Alpha Futures, a leading offer if you are a futures trader. Yeah, I saw it more as buzzwords. People like this idea of like real funds, and I think some firms ran with it. The other one that I've seen the rise of is instant funding. Yeah. Now I think it's also a beautiful tool as well if it's done in a certain way, because a trader who is passing phase 1, phase 2, they make 15% potentially around this area, but they didn't get paid for it, and then they have to go and get paid. Correct. So you can call it evaluation. I think that's a very understood model. Some people might want to pay to skip the process and get instant funding, but then you can also enter into dangerous territory in terms of risk. And the back end, I want to hear if you have any ideas on how that would work. And second is, would this cause any regulatory issues? Because a few prop firms I spoke to, they said we would want to get into the instant funding space because it's an attractive offer, but it looks too close to a deposit in a broker to have access to larger leverage, and you just worded a difference, and that triggers into a broker space.
Correct. So that's the key. If you want to offer instant funding, you need to make sure that the cost of the account covers most of the drawdown you're willing to offer. And then it's similar to our very first model, which we used to do 50% split with the traders, the one-step program. But that, on regulators' perspective, would be considered a deposit. And just to avoid going that direction, we haven't implemented that model. But I think our main concern would be that, like to be perceived as a deposit on a brokerage account. But I think the risk is manageable as long as the payment for the account covers the cost.
And probably lower leverage as well to be sustainable. Moving into, to say, the last 10 years or 9 years in the prop space has been so volatile, so many changes in conditions, prices, participants, even the traders' behavior. And I think a very pivotal year was the year the MT4 crisis kind of happened. What do you see the space going in the next few years in terms of, will you see more people coming, or will you see the price war reaching a floor now and then only the biggest surviving? How do you see the space navigating?
Yeah, I've seen the last years the industry kind of self-regulating itself. You know, I think.
What do you mean by that?
By traders not falling into marketing.
The consumer is smarter now.
Yeah, the consumer is smarter. They understand that if a company is offering 50% discounts every time, there's something fishy here that is not sustainable. So the traders are smarter consumers today, and I think companies the same. You know, companies, even large companies, that they started with very low prices. You've seen them increasing prices just to come to sustainable levels. So I think companies are aware of what's the bottom of the price they can offer. Traders are not willing to pay higher to make sure they're going to get paid. You know, they're getting into a reputable company and not going to a company that just started, even if it's cheaper. So I think that balance within traders understand of the industry and companies understand of the industry and the risk management behind is kind of setting the levels of what's sustainable. I don't know how many more companies can come and make it and stay sustainable, but I think in a couple of years we're going to see this, 50 companies or 20 companies that make it and that lead the industry. And I'm sure the fibers will.
I gather, and you can correct me if I'm wrong, but the advantage the biggest firms have is the new influencer ones, the backing financially they have is whatever they have in their pockets, that they're willing to use. So if you have a drop in revenue, you can still withhold payouts. But I imagine the top 5 firms, they're sitting on millions of dollars or months and months worth of payouts just in reserves. So even if you have a bad month or an issue, like happened with MT4 situation, it's not a crisis, you are prepared. Would that be something true?
It's not only that, it's the fact that you have your own team, you have the data, you can, you spoke with you know the industry, so you know there's technology providers. So it's very easy for someone to buy this technology and start your company. But then you don't have the flexibility or the ways to develop what you need in order to manage risk. So in our case, on large companies that have their own technology, you can develop, like we mentioned, the machine learning systems, the models, the risk management behind, the compliance behind, everything behind. And all of that operation helps you not rely that strongly on your savings or whatever it is. You know how to manage and how to manage the risk management behind changes. So I think something's not doable. It's a lot of effort and a lot of investment in servers and AI technology and the languages, and it's very expensive. So having that sources and that technology in-house allows you to do that and not rely on someone else's technology.
The ending portion of the conversation, I want to bring into it just makes me laugh bringing it up, but you mentioned earlier ICT.
Yeah.
Now, the reason I want to bring this up to yourself is you've seen the trading activity of many, and I'm sure many of those are ICT, SMC traders. I think in your time in the space, you've seen an industry with no SMC, and then everyone's doing SMC. And although there is merit to the strategy and the approach, more importantly, there are certain figures in the industry that have made huge success with these strategies. So then you see the headline of $1 million payouts, and I've spoken to a lot of these guys, and they are amazing guys, but I also know law of large numbers and anomalies do not define the rule. So I want to hear your thoughts on the behaviors of these kind of traders compared to the certain traders you mentioned that are consistently getting payouts. A lot of the viewers are going to be in this category of SMC, ICT traders. Are they a carrot on a stick, kind of chasing a high, or is this something that can really work on mass scale?
To be honest, I don't know who in the fibers is trading SMC or ICT. I don't know what they're doing. Okay, we just look at the trades and we just look at the book, and we're not so concerned if they doing certain strategy or another strategy. So it's hard for me to spot. Okay, if SMC traders are making performing better than other traders, because I don't know what they're doing. I don't know if they're doing that strategy or not. We just see the positions. We see if we can match it with something.
Sure. What about general behavior? So you mentioned trade duration is more favorable for the profitable traders along the whole time. What are the patterns would you say in terms of trade frequency, risk strategies, high risk, low risk? You could also have stop loss size and average asset classes chosen. Trade many things, just trade 2 things. What are the behaviors have you seen in the profitable?
That's a great question, and it's that's very clear to spot and to see and to explain, because we have a very powerful program in fibers, a scaling plan. Okay, every time you hit a milestone, we scale up your account, and we have one of those scaling programs which we double your account each time. So which is very powerful. Traders who commit to the long term and hit 10% a couple of times, they're very quickly managing $300K, $500K, $800K, $1 million. And there's only a few. It's like a pyramid, right? A lot of traders on the base of that, and a very few and fewer advance to those higher levels of funding. And that's where you see the patterns of those traders. And you can see most of them use stop losses, and they deal with those losses. Most of them are not scalping, as we mentioned. They're trading fewer trades and letting their trades run. And if you interview them, because we tend to interview the successful traders, the same kind of conversation we had at the beginning, when you understand the in and outs and the small print of the strategy, that level of understanding, you can have them with them. So you understand they're sophisticated traders. They know the strategy. They know when to perform, when not to trade, and they trade in low leverage. So even if they have that access to 1 to 100 leverage, surprisingly, they're not even close to that. Okay, they're trading 1 to 10, 1 to 20 leverage. So just another side story. Just an outcome. There's some
basically like your boy, right?
Just when they end the evaluation stages, we're not sure what to do with them. Okay, and we ask them for a couple of weeks to trade with lower leverage, and then
are we surprised to hear this? The worst performing traders are scalping the lowest time frames on high leverage. Is this a shock to any of us, or no? You shouldn't be. Should not be. Talk about this shit all the fucking time.
Their behavior, we ask them to perform with lower leverage, so we adjust their leverage to a small leverage, and those traders live longer, make more money, make more payouts. So those higher level traders are also trading with low leverage, because they understand that they need to leave another day to trade.
Yes.
So they don't let those losses to be more than 1%, more than 2%, let's say. And in order to risk that 1%, you don't need that much leverage, right? You just need 1 to 10, 1 to 15, 1 to 20 probably. That's all you need.
With these interviews of the successful traders that you have you noticed any personalities, psychology, beliefs in the markets that have showcased this as a common denominator amongst the successful?
I think it's just the approach to risk management, the respect on risk management, and the mastering of what they're doing. Okay, they long ago stopped chasing strategies, because that's the strategy hopping is a very when you're starting, you go from strategy to strategy. At some point, these traders and yourself, myself, you just stop, you stick to something that makes sense to you, and you tune it into your situation and you master it. So these traders master one thing, one strategy, and that's what makes them successful.
And when you look at the data behavior of the thousands of losing traders, is there something that stands out and says, okay, if traders are just correct this one thing, this would eliminate a lot of losses? Is there anything that jumps out like this?
Leverage. You know, when we, I think it was 2021, we used to have an account with low leverage, like 1 to 6, and you know, it's perceived as low, very low leverage, and there was this demand for higher leverage. We want higher leverage, and we opened the same account with the same program with I think it was 1 to 30 or 1 to 50 leverage, and a lot of people went there, and you could see traders in the 1 to 6 leverage performing better than the 1 to 30 leverage. So
what do you think that is? Is just adjusting to the larger numbers?
Because I think traders, and I've been there, you know, when you take a loss, you take the full loss, and if you take in high leverage, you take a large loss. But when you have a win run in your favor, they tend to cut it earlier. So they take in very large losses, and the leverage allows you to take very large losses. So if you stick into low leverage and you take in small losses, you live longer in order to to recover, to get out of the drawdown, and to make profit, you know, the next session or the next day. And surprisingly, we saw these traders from the high risk program they really wanted going back into the low risk programs and performing better there. So today, when I see a lot of traders not performing well or losing accounts, it's just because they train very heavily, or they train a lot. They're like they're doing they over leveraging the accounts.
So have you found any pattern of the people that tend to lose quickly, or you know, like the people that get through phase 1, phase 2, but you just know that these are likely to not even get a payout to blow the funded accounts? Is there any behaviors there, or any patterns, like do people tend to go more towards the minus 10% and overall lose the account, or is it the max daily loss? They just have a bad moment and mess it up in one day. Is there anything as such?
There's a funny pattern you can see when traders are going into drawdown and they just take a very large trade, and
risk-wise.
Okay. And then that will take them or to the daily loss or maximum loss, or will take them out of the account. And you see the same when they're getting closer to the take profit. So when they're going into profit and they're, let's say, 2% far from take profit, they also take a large trades.
They want it quick.
Yeah, that's a mistake, because you just need 2 more % and they risk a lot and they go down. So when traders get consistent with something, with the lot size, with the risk they take, you see them performing better and eventually, you know, getting payouts.
Makes sense.
When you see traders increasing leverage, reducing leverage, they don't get that skill of consistency, and then it's hard to tell if they're going to make a payout or they're going to lose it. Right?
For me, that screams like dopamine chasing gamblers kind of approach as opposed to a systematic one. I want to end by just giving you the opportunity to either something that I didn't ask that I should have asked, or something that you maybe wanted to share coming onto the show today.
Yeah, I think if we look at the fibers and if we look at the industry, I think prop firms have a responsibility to creating better traders. Okay, and if the interest of the companies is to have, you know, the 5% of traders that make it constantly to and profitable to manage large amount of sizes, there should be in the interest of the companies also to help traders become better. And I think that's something we see companies doing, and it's something we pursue a lot, and creating this whole ecosystem of services, of education, of community, of risk management resources in order to help traders develop the skill of trading and risk management. And I think if more companies do the same, will eventually create better traders, and that will help also companies to deal with risk management and traders' behavior. So yeah, that's a message and a flag we've been, you know, carrying for years, and that's our, you know, core principles, our core values of creating for the traders the whole ecosystem, and not only having this relationship of customer and company, but as a
okay,
partner,
enough of
as a trader,
that.
as a-
Honestly, overall waste of time, right? Waste of time, literally zero value extracted from that. Did we even write a single no about this thing? Nothing, right? The shit we already know, plus a bunch of useless yapping. That's just how it goes sometimes, though, right? That's just how it goes sometimes.
In this
You
monumental
know,
episode,
on
we
the
have
flip
all-time
side,
record
if we had gotten one nugget of juice out of that, would have been worth it. That one wasn't particularly interesting, though. Alright, we'll watch one more and call it a night.
Are you the protectors of this world?
Why did they
Yes, we
sign
are.
out? What the fuck is going on here? They did hedge the longs, by the way. Once they saw these fucking Bybit and Binance people top long the living shit out of that thing, we started doing like a failed auction to Valeria High. So we got our downside protected. Now, like worst case, that thing gets up break even, and we kind of just continue going back upwards. What is happening here? Why is it signed into this account? That is so odd. Oh, it's because when I was trying the Lux Algo thing. Makes sense. Dun, 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 dun.
$3,000 to $1.67 million in just 2 years.
That's right.
What was it that really stood out to you in that 2-year period to make such a leap in profitability in your P&L?
So the first thing you need is an edge. You need a mathematical edge because you need to find a way to extract money from the market. And the easiest way to find an edge is...
I love the statement that you made in terms of systematic trading. Theoretically, a trader could on day one be a profitable trader.
That's 100% correct if they have a system that produces it and if they retain that through sound execution. So those are some big ifs. A lot of people fail at those points because you're...
This guy is a world-class systematic trader, featuring in the top 20 in the worldwide leaderboard in trading performance. With $2.1 million in verified profits, Chris Verma. In today's episode, he explains how traders can be profitable from day one in their journey by using a systematic approach. He also explains how in recent years he has included some discretion into his trading that has allowed him to have 4 back-to-back 6-figure months.
When it comes to selecting the stocks that you're looking at, so essentially your watch list, how are you identifying them?
I think I've seen this guy on Twitter.
Interested in trading long or short, just based on the average volatility that we've seen from our backtests. I want to trade the most.
The number one podcast in the trading space, the fastest growing.
I follow this guy.
Hey guys, before we get into this incredible episode, I want to say a massive thank you for all of your support so far on both Words of Wisdom and Chart Fanatics. We have grown immensely and are still the fastest growing channels in the trading industry. Now, a way to get back to every single one of you, if you want profitable strategies completely for free, go to chartfanatics.com, the link's in the description, put your email in, and every single week we will send you a free PDF with a profitable strategy of the guests that we host. As well as on the website, you can go straight there and you can go through the library of strategies completely for free. Just input your email. On top of that, we launched a Chart Fanatics free Discord community that has already over 10,000 members of traders across the world. We have our live traders from Chart Fanatics live in there. I'm documenting every single one of my trades in there, and we have exclusive discounts, massive giveaways, and so much more just to give back to every single one of you. Let's not forget updates on every episode and things that we are bringing to this industry that's going to change it forever. But for now, the links for that are in the description. Let's get into this episode. Welcome everyone back to the Words of Wisdom podcast, the number one trading podcast in the world and the fastest growing thanks to all of you and our incredible guests. We're back in Dubai, and this guest, I'm super excited to speak to and really dive into his trading journey. He actually took $3,000 to $1.67 million in just 2 years. He's also a top 20 trader on the leaderboard on the Kimpo platform, which is a verification platform, with $2.1 million in verified profits. And not only that, if that's not enough, he has an over 80% strike rate, win rate on his trades. He was a purely systematic trader, now more a hybrid approach that we're going to dive into the entire journey. It's the one and only Chris Verma.
Thanks for having me, Riz.
My absolute pleasure. Thank you for being here, man. We just shot a Chart Fanatics episode, which was really fun. I'm not sure if it's out yet or which one comes out first, but either way, this is going to be incredible. That was incredible. I want to go straight into it, Chris. As I just mentioned, $3,000 to $1.67 million in just 2 years. That's right. What was it that really stood out to you in that 2-year period to make such a leap in profitability in your P&L?
So people only really see that surge when I had profitability during the COVID market, but they don't really see the years of struggle before that. So I had, 3 or 4 major account blowups before that time. I started in 2017 trying to trade, seriously on the short side of small caps. And it took me a good 3 years or so to really kind of learn the risk management, learn myself, my own, tendencies and things, and be able to consistently profit in the markets. So people only see the rise to fame, but they never really see the struggle before that. But there definitely was one for me.
If I'm not mistaken, when you first started in trading, you went down the traditional discretion sort of technical route.
Yeah, when I first started, I didn't really know what I was doing, to be honest. And I think I jumped in too early with too much money, kind of being overconfident about it. And I was doing a lot of random strategies, buying breakouts, and mostly on the long side, but still small caps. I was buying gappers and trying to make money that way. Maybe I made a few thousand, but my risk management wasn't on point, so I'd quickly lose all that money. It wasn't until I started shorting small caps and actually backtesting the strategies using a systematic approach that I was able to find consistency, find profitability, and here we are 8 years later.
Brilliant. Yeah, one thing I mentioned on the Chart Fanatics episode, I mentioned it here again, is you're our first systematic trader that we've had on the podcast. So I'd love if you're able to and then willing to, how would you define systematic trading, just for the audience and myself as well?
Right. So systematic trading basically means you have rigid entry and exit criteria with a fixed stop loss and a fixed profit target. So it's very different from discretionary trading where you're making decisions on the fly, you're reading price action, you're reading the tape, and that will influence your trading decisions as the day progresses. But a system is determined before you enter the trade, so all of your actions are predetermined.
And what was interesting, I love the statement that you made, is in terms of systematic trading, theoretically a trader could on day one be a profitable trader.
Yeah, that's 100% correct if they have a system that produces an edge and if they retain that edge through sound execution. So those are some big ifs. A lot of people fail at those points because your emotions will likely sabotage your progress at some point, and that's something that I had to battle with for years. Like I knew I had a profitable strategy, but I wasn't able to realize that profit because of my own shortcomings. It's usually emotional.
So just walk us through the reality of being a systematic trader. What does that look like? What are some of the steps that you have to take and things that you have to focus on?
I'll bite
to
my
be a
tongue
successful
for now.
profitable systematic trader.
Okay. So the first thing you need is an edge. You need a mathematical edge because you need to find a way to extract money from the market. And we do this through backtesting, right? We have an idea, and the easiest way to find an edge is shorting small caps that are extended. Gappers say 100%. There's a high probability something gapping up 100% is going to come down, and we can confirm that through our backtests. We can gain information from that, see how much is it going to fade, how much is it going to spike. At 10 a.m., what should my profit target be? Where should I be in the trade at? Noon, where should I be in the trade? So we find all these patterns through the historical data, and from that we can find edges and exploit those edges by trading certain criteria, certain stop losses, market caps, floats. These are all things that we look at to refine and improve our edge.
So when collecting this data, you can actually input different criteria.
The thing about this, whatever, I'm not gonna roast this guy because whatever, right? But that kind of approach is just so low fucking rank, right? Is it just fucking me? How are you gonna enter a trade and base it off historical data and not what's happening in the moment, right? I'm gonna set, but it goes down on average 50% after gapping up 100%. Well, what if there's a massive fucking buy wall in the order book 30% down? You're never gonna hit your fucking target. So on and so forth, right? It's just the logic of it is so flawed.
Information and even correlate that data as it gives out and spits out.
We'll keep listening, right?
certain criteria that you need to follow.
Yes, 100%. So what I look at is the main criteria of the entry is 100% gapper, but it doesn't end there. Right from there, you can say I want to short gappers with a low float, high float, low market cap, lower institutional percentage. So all these criteria you'll find from your backtest by running, simulations. We do a lot of Kelly criteria, and we use a lot of mathematical formulas to find the optimal position size. And then from there, you can
Who's this
kind of place your bets
we?
and just let the trade work. You've done your homework, and your edge will come through as long as you don't interfere. So this is where the hardest part is just letting it work. So sitting patiently and letting a trade do its thing instead of trying to interject every step of the way, which I think is like the normal temptation of most people. They want to step in, take profits too early, or if the stock's going against them, they want to cut it too soon. So just letting it work is where your edge will come through.
What sort of platforms do you perform these backtests on?
So when I first started trading, I was using Trade Ideas, which I think a lot of traders use. It's great for alerts, but they also have backtesting. The only issue is that it's limited to 3 months of history. So if you want longer term backtest, I use Polygon, which provides long-term data. So we can run 10-year backtest on a pattern. And
Polygon, interesting. Because I had the same issue. Trying to find data was a pain in the ass. Polygon backtest. Interesting. We'll make note of that. Polygon backtesting. Polygon backtesting. What was the other one he mentioned?
What issues do you perform these backtests on?
So when I first started trading, I was using Trade Ideas, which I think a lot of traders use. It's great for alerts, but they also have backtesting. The only issue is that it's limited to 3 months of history. So if you want longer term backtest, I use Polygon, which provides long-term data. So we can run 10-year backtest on a pattern and an idea to see how it performs year after year, see if there's a consistent return per year, and see if there's any erosion of the edge, because we're dealing with that a lot this year. Some of these patterns don't work as effectively, so you have to add different criteria to it or add some discretion. So this is where a hybrid trading approach comes in. That's what I've kind of done this year.
I definitely want to dive into the hybrid approach for sure. But just to finish off in terms of the systematic trading, is that something then that you automate and have sort of algorithms run, or is it something still that you manually?
I personally still do my trades manually because I like to have more input on the trades and make sure everything I'm doing is in line with what I want to do as a trader. But you can automate some of these strategies. I know a lot of people are having success with those algo trading. DAS, you can use API and automate all of your trades so that you're less likely to interfere. Right? If you have a computer running your system, you're running your trades, you've already eliminated your biggest factor, which is yourself. So I do think automation is a great tool for a lot of traders. It does take some skills, some coding skills, and programming skills to be able to do, and there are some additional costs. But it can be highly profitable if you have a verified edge and then you automate that edge. It's almost like it's printing money.
There's one thing you did mention when it came to systematic and collecting that data.
True.
People should be aware of.
That's why your boy does that.
Being able to make sure they clean that data manually as well, and sort of review that data manually as well, because of different factors that maybe some of these programs won't take into account.
Yeah, for sure. I mean, if you're looking at a backtest over several years, a lot of these data providers, they'll just kind of populate that data and it's not cleaned up. So this is where a hand-tracked database is so much more valuable because you're going through the data each day, you're seeing the patterns, and you're also able to clean up, false triggers if they're not split adjusted. There's so many factors that come into play. That's why I think a hand-tracked database is way better than anything else.
One thing that is also interesting, as you mentioned, there's a lot of mathematical models involved.
Yeah.
Was math sort of like, do you have like a mathematical background, or is that something that you just sort of developed as part of understanding, hey, if I'm going to be using a systematic approach, I'm going to understand and develop these mathematical models I'll be working on?
I didn't have a strong math background specifically. I mean, my background was in pharmacy, but I did do some early level mathematics classes, and that's actually where I learned from my statistics professor in college how to do sports betting, and that's where I started. But I don't think very high level math is required. You just need more functional math. Right? Learning probability, statistics is very helpful in this realm, so you can understand the underlying math and to extract edges from that. We use Kelly criterion, which is a lot of formulas, but a lot of these can be automated online. You don't have to really know the math yourself. Just know where to go to find the answers.
Let's take a break for a minute, there, guys, because I want to tell you about our incredible sponsor, Alpha Prime, the first of its kind in the industry. Now, evaluation firms have been in the industry for the last few years and done absolutely. The links for both will be in the description below. Alpha Capital and Alpha Futures. Use the code RIZ.
It can be outsourced.
So as part of that run-up that we talked about, that $3,000 to 1.67 million, as you mentioned, a lot of people don't look at the before factor, right?
Yeah.
Of the blow-ups and then the sort of learning process. But then a lot of people will just assume, hey, it's COVID, it was easy, right? That's a lot of people try and refer to during that time period. However, at the end of the day, yes, there might have been great opportunities, but the only people who walked away with the profit were the ones who were able to execute effectively, manage their trades effectively to actually make that profit and keep that profit. What's that reality look like, even regardless of the market conditions, to be able to take such a small sum of $3,000 to that sort of amount within just a 2-year period? What's the reality look like of you doing that in terms of how was the sizing, how was your execution, what was your focus like? One thing that we talked about very briefly on the Sharp Next episode, well, actually, no, before we actually started this podcast, was that 6 months into that profitability, you quit your job as a pharmacist to go full-time in trading. So what were these realities? What did that window of time actually look like for you?
Okay. So when you're trying to grow a small account, I started with $3K. You're being a little more aggressive than you would be with a larger account. So I was risking almost half my account on every trade. Yeah, because the dollar amount wasn't too much, like $1,500, right? So why not go for it? And I was already, using smaller accounts from that time period, and I had blown up a few of them. So I was just trying to kind of build a small account and grow exponentially. And that's the beauty of the systematic approach. When we're using a compounding like Kelly percentages, each win that you get, you're stacking it on your account so that your position size grows every trade, right? So let's say 1 month you're trading $1,000 positions. The next month you're trading $5,000 positions. The next you're trading $10,000 positions. So it's all based on a percentage of your account, which is growing exponentially. You're going parabolic. So in a few months span, you can make, in the right market conditions, you can make several $100,000, and that's what it did for me in the COVID market. I was going from like 10K months to 150K months to 300K months, and that was really explosive. It was a great opportunity to trade. Like you mentioned earlier, I don't think it was easier than it is now. It's just different. Right? The patterns are changing, the market's changing, but as long as you're refining your data and your approach, you're constantly staying ahead of the game, you can still find an edge and become profitable and stay profitable.
And what was your psychology like when you're having such huge wins?
Yeah, it was difficult to adjust because when you're trading a certain size and then the next week you're doubling that size, it can kind of create an emotional surge, right? Because the money causes emotion. So your P&Ls are bigger, your green days are bigger, your red days are bigger, and that can result in some like snowball losses if you let it get out of control. And I did experience that a few times when I was on that.
What is with these people all saying this thing? These people are all, I can't take them serious sometimes, man. I gotta take a piss. Like, these guys are so emotional over trading. Like, it's not that fucking serious, bro. It's numbers on a screen. It's really not that fucking serious.
Heat map red, I step in cold. Zone get tagged, then it explode. Chart too clean, wrist too froze. You long high, now your bag got sold. TP hit, I don't even flinch. Price got loud, I ain't moving inch. Wick came back, I dropped that pin. Now you stop loss, paying my rent.
Cookies in the wood, gusher strain. Chart did numbers, I ain't feel pain. He up $5, I blew out range. One big zone, now we ain't the same. Bentley slide with the VWAP mark. Chart bounced back like a go-kart spark. He said mad fake, then the fib went dark. Then came Wick, then came Spark. AP face match chart precision. I don't need hype, I need incision. They want vibes, I want conviction. He post losses, I post liquidation.
Heat map red, I step in cold. Zone get tagged, then it explode. Chart too clean, wrist too froze. You long high, now your bag got sold. TP hit, I don't even flinch. Price got loud, I ain't moving inch. Wick came back, I dropped that pin. Now you stop loss, paying my rent. Marcos. He said he felt heat. I said that's the pressure of math. You don't feel it when you fade it right. Heat map.
Well, out of all these interviews we've watched today, isn't it funny that the only one that was like true was the only one that made like 8 figures or more? All these like low rank traders who make like 1-2 mil and think they're fucking goated, like don't really know shit. Are we surprised? Are we surprised?
I was too emotional for the numbers. But during that COVID market, I had gone through that cycle a few times where I could catch myself before something happened. And I knew that I was getting, past my emotional threshold, so I just dialed it back a little bit. Right? There's nothing wrong with just staying at a steady pace for a while. That's what I'm doing now with my trading. I don't fluctuate my size too much because I'm just looking for steady, consistent profits. But during that time, I was a little more aggressive. But I had gone through that cycle enough times to know what I was feeling and know myself personally, and that's how I was able to overcome it.
And at that time, you were using a system.
I respect that, though.
Yes, I was actually more
I
systematic at
respect
that time
that.
than I am now. So I was following my system, completely with 100% faith, and I was just position sizing based on all my mathematical formulas. And the market was also very favorable. There were so many opportunities in a day. I got 20 trades a day almost. So that was
It's a lot of
allowing me
trades.
to compound my account a lot faster than I would be otherwise. And then obviously the patterns were more favorable back then. There wasn't as much volatility. So it was a little easier to guess the top on some of these shorts, and you weren't dealing with extreme outliers like we do now. So you could get away with a little more aggressive sizing, I think.
And back then as well, you were pure short only at the time.
Yeah, I was purely shorting, pop and drop, something that shot up 20-30%. I would just short it on the front side, and most times it would fizzle out, and you'd be profiting, 15-20% in minutes. But nowadays, the patterns are a lot more difficult, so I look for more backside patterns. I look for the chart to top out and to show where the top is, and then I enter the position instead of guessing. Because now if you're guessing on the front side, you don't know how far it's going to go. You go 100% against you in minutes, and we've seen these patterns on a daily basis. It's extremely dangerous. So I think a backside approach is a lot safer.
So after that 2-year period, there was a period of time when you then went through a 4-year drawdown, essentially, in terms of equity, new equity highs.
Yes.
What was that reality like? How did you handle that? Were there some serious struggles that you faced during that period?
Yeah, it was really difficult. I mean, any drawdown that you're going through is tough. And it depends on the length of the drawdown and the percentage drawdown. So I had drawn down at, I think, February of 2021, where I lost $500,000 in a week. So that was after quite a nice run I had been on. So it wasn't a lot of profits I had lost, but it was just a little demoralizing, right? So your confidence is shaken a little bit. And after that point, I had sized down, right? So instead of being aggressive and trying to get it back quickly, I just sized down. I didn't want to try to make it back too fast. I said, you know what, I'm fine if I grind this back over a year or two. And I felt like by the end of the year, I would have been able to make new highs. But for whatever reason, it just didn't happen for me. And I think I was venturing with too many different strategies at that point. And maybe I've lost a little bit of confidence in my strategy or myself as a trader. I think this is normal. Every trader goes through ups and downs. There's no peak every single month. You're making new highs. That's what we see on social media. But the reality is that, people can struggle. There's drawdowns. Even some of the best traders in the world can draw down for years. But what was never shaken was my confidence over a long period of time. So I just kept grinding. I kept
For
pushing through.
years.
And this year I've broken out to new highs. And it's been, really an evolution in my trading. I think this year I've actually improved my profit factor. I've decreased my average drawdown. The volatility of my equity swings is a lot lower. My stress levels a lot lower. And those are the most important things to me. Like, I'm fine making less money as long as it's more consistent. I know my bills are paid. My family's provided for. That's all I really care about. I'm not looking to make millions a day or a month, So I think my trading now is a lot more efficient.
True.
That was an interesting thing that I think I don't know if you tweeted today or yesterday, but very recently, where you had mentioned that actually in the last 45 months, you had 1 6-figure month.
Yeah.
But in this year, you've had 4 6-figure months. And as you mentioned, you've made some changes. You've made some adaptations. So, we talked about the history now. I want to talk about now. So now you're trading with a systematic / discretionary approach.
Right.
So talk to us about the sort of mindset of making that switch, because they are not polar opposites, but in terms of one is very systematic, rule-based, if it's A, do B, and so on, while discretion is obviously using intuition,
right,
making certain decisions off the fly or off what you're seeing and how the market's reacting. So, walk us through that decision and those changes that you made.
Right. So like I mentioned, this year I've adopted more of a hybrid approach where I'm using mostly a system, but I like to incorporate a little bit of discretion and intuition that I've gained over nearly a decade career and make some trading decisions on the fly that I think would be optimal and increase my edge. So for a beginner trader, I wouldn't recommend this. If you are doing a system approach, I recommend sticking with that system because you don't have the experience to make these decisions yet. But at this point in my career, I feel like if you have that experience and you don't use it, then you're handicapping yourself in a way. You should use all the skills that you have to increase your profitability and your edge. So this year I've incorporated more long trades. So on failed short patterns, let's say I'm shorting a gap rep 100%. If it's holding above the open past 10 a.m., that's a red flag, right? If there's increasing volume coming in, that's a red flag. So enough of these red flags can change my bias. Whereas in the past, I'd just be stubbornly shorting. I'd be short all the time. If this company is, fundamentally worthless, I'm just
That's
going to short.
another thing
That's
about
not
these
necessarily the
people, right? Like, I just, there's something to me about people that can only trade one side of the trade. It's just a fundamental flaw, right? Like, if you can't trade the long side and the short side, like, you have some fundamental flaw in your trading you're not understanding, right? You're not understanding how the game actually works. Like, how can you only trade one side of the trade, right? At least that's the way I look at it. Like, to me, if you can't do both, you are not a complete trader, and you're missing knowledge that you need.
In this market, these things can squeeze hundreds, even thousands of percents against you. And if you're just blindly fighting the short side, you can get run over. And now in this market, I'm more open to taking long trades. I'm easier to cut a short and flip long and minimize the damage and make money back on the long side. I've done that quite often. And
Even if it's as simple as doing what he's doing, right? Where you just take an invalidated short setup into a long.
Instead of just doing a fixed one entry, one exit approach, which is the systematic approach, I'm trying to add more trades in between that. So kind of buying on pullbacks and then hitting back on pops. So if I'm short biased, I'll cover into prior support, and then I'll re-hit those shares if it bounces to prior resistance, right? So you buy support, you sell resistance. And you can do that along the way as it's fading and make more money within a fixed range than if you were to just do a single entry and a single exit. And this also helps build a profit cushion, right? Throughout the day, you're locking in realized profits, which is really helps keep you emotionally grounded. And this also improves your ability to reduce losses. So if a stock is becoming crappy and I don't feel like longing it perhaps, I still want to fight it short, I can recycle shares, right? I can cover into a dip, re-hit higher, cover into a dip that's higher, minimizing the losses essentially, and then hopefully fading that it will fade off later in the day. So these skills have enabled me to reduce my average drawdown and also increase my equity curve, which has more or less been straight up all year.
When you review that, how important do you think, regardless of systematic trading, discretionary trading, whether you use fundamentals, whether you use the tape, how important and would you say that risk management really is when it comes to profitability and even elite long-term performance?
Oh yeah, risk management is everything. Because you can be a profitable trader, you can have a systematic edge, but if you don't retain that edge with sound execution and proper risk management, eventually you're going to blow up. Eventually you're going to run into a 5,000% outlier, and these are things we've seen recently, that if you don't have a stop or you don't respect your stop, or if you revenge trade a short, it's easy to wipe out an account and months of years of work gone out the window in minutes. It can easily happen. So risk management is absolutely everything. This is also why I like to keep my size small. You know, I trade a very small portion of my account now, and it just helps keep my emotions down and my risk management in check. I know that worst case scenario, I'm not going to get emotional, and I'm not going to make a bad decision. If I was trading 10 times the size, then there's a high probability of me making a mistake just based on those emotional thresholds being exceeded on a daily basis. And that's what's happening in the market, because the average volatility of the runners is through the roof. You know, 300, 400% runners is very normal now. But back in the COVID market, very rare. So we're just adjusting and adapting to the market changes.
Is there anything that you can point your finger at as to why we've seen this change?
Well, I think that the average volume on these runners has increased quite a bit. There's more players in the game. There's people trading large accounts now using these algorithms. So there's a lot of different players in these games, and the manipulation has increased as well. So just the difficulty has gone up. I don't think that it's ever been easy. At any point, trading has always been difficult, but it's just different now. So we have different rules, different criteria, and just trying to stay ahead of the game by constantly adapting and refining our edge.
So even as an element of discretion and intuition that you're using, your strategies and edge that you focus on is all still foundationally based on the systematic approach and the data, right? Yeah. So then you're using and utilizing that discretion after that approach has been sort of identified and worked on.
Yes. So I use my system as a baseline, as a guideline, really. And then on top of that, I incorporate a little bit of discretion. I'd say probably 70% system, 30% discretion. And this way I'm able to augment that edge and reduce my drawdowns, try and keep a steady equity curve, and also be more in line with the market conditions. I'm always gauging what the market's doing on that particular day, because the small cap cycles can fluctuate from day to day. And if I see other runners showing a lot of strength, then I might be a little less short biased. Whereas if everything's fading, everything is dropping below the open, then I'm going to be more, confident in my position to hold for further fades. So everything, I usually do like a 30-minute check on all my trades. Every 30 minutes I want to check in, see what's happening, and reassess the trade each step of the way.
When it comes to selecting the stocks that you're looking at, so essentially your watch list, how many per day would you say that you're trading? Are you trading just one specific stock a day, or could it be multiple? And how are you identifying them? Are there certain scanners, certain criteria that then get filtered through? What does that look like on your side?
Right, good question. So I've changed my criteria quite a bit over the years and just tried to stay on top of these runners in the market. So back a few years ago, I'd be looking at maybe 40% runners. Something that's up 40% of the day would hit my scanners, and I'd be interested in trading it. Now I don't even see them. They're not on the scans. I've raised those to about 100%. So unless something is up 100%, I wouldn't really be interested in trading it long or short. Just based on the average volatility that we've seen from our backtests, I want to trade the most volatile plays that have the most volume and the most opportunity. Right? You shouldn't see these wider ranges as being scary or the edges are eroded or anything like that. I just see it as there's more opportunity. And there's some short sellers right now that are having record years, career years, because they've been able to adapt and take advantage of those opportunities. So just being open-minded, not being so stubborn with a certain strategy, certain criteria, always being adaptable to the market. So for me right now, I like 100% runners, market cap like under 100 million, and lower institutional percentage. I don't like anything over like 50%.
And when it comes to the scanners, is there particular ones that you use, and are they ones that you set the criteria for? So then, as you said, you've changed it over the time.
Right. So I use Trade Ideas, and I've used them since day one. They're really good, very customizable, and it's easy to share. So I share my scanner layout with my students in my chat room. You can color code things. You can see if something's a red flag or a green flag right away. You can do backtesting on there. So this is the scanners, and it shows everything live. You can have voice alerts, so you can have it's so customizable. So from there, we just look at the alerts, what kind of pattern
student over the time.
Right. So I use Trade Ideas, and I've used them since day one. They're really good, very customizable, and it's easy to share. So I share my scanner layout with my students in my chat room. You can color code things. You can see if something's a red flag or a green flag right away. You can do backtesting on there. So this is the scanners, and it shows everything live. You can have voice alerts, so you can have it's so customizable. So from there, we just look at the alerts, what kind of pattern is playing out, where we want to attack it, and then set up a game plan from there.
As a systematic trader, what does that look like in terms of pre-market prep then? In terms of how much time or routine-wise, what does that look like for you?
So on a day-to-day basis, it's not a whole lot different. I usually had all my criteria set from the go. It's usually monthly. I'll do updates and review the data, see if there's any major changes in the patterns, performance. So if a strategy, say, is underperforming for a couple of months, I might put it on the shelf, or I might downsize on it, or change the entry criteria, or at least be aware, okay, the strategy is underperforming. We may have to be a little more different with our criteria after we enter the trade. But day-to-day is mostly the same.
Don't know where the market's going next? Stop worrying about your trading. Just get informed on exactly what's happening in the markets and what to expect. From Forex to futures to stock. Now, WOR gets you 20% off your yearly subscription. Let's get back to this episode.
I know you originally, when we were trading, was on the Canadian time zone. I mean, 1 point Vancouver, so like all the way to the other side.
Yeah.
So we were discussing that. That would have been market open was at 6:30 a.m.
Yeah.
Now we're here in Dubai,
yeah,
which is now 6:30 p.m. Or 5 or 6:30 p.m.
Yeah.
So like, how's that transition been for you? Like, what was for the listeners out there who are maybe in the US time zone, maybe even fully over sort of the Vancouver and LA time zone?
Yeah.
what did that reality look like for you? What did that routine look like? What was maybe some of the hardships that you had to face? And then equally, the transition then to living in Dubai, whole different time zone, completely different time of day. What have been the cons of that? But also, what the pros of that been?
Right, so that was definitely a transition for me. And my first 6 months to a year here was really difficult. Yeah, just because of the time zone and also my body. Like, because in Canada on the West Coast, I would start the day at 6:30 a.m. And I'm kind of more of a morning person, so I'm sharper in the morning. So I prefer to trade the first couple of hours of the day and then just call it a day. So now my day starts around noon because I trade pre-market open, which is 4 a.m. Eastern. So by market open, I'm kind of burnt out. So I do have to take breaks, and I cut my day off by noon. I try not to trade past noon because I know like that mental fatigue will just kick in, and I'm bound to make some bad decisions. So I try to make most of my trades before noon Eastern, which is about 7 p.m. here. And yeah, it was definitely a transition for me. I mean, my first 6 months here, I was not doing that well trading wise, but now I've kind of adjusted, adapted, and also learned how the patterns work. Because in Canada, I was never trading pre-market, so I never really knew how the patterns looked or how they worked. I didn't have much data on that either. So it took a few years of live tracking the data, my own performance to refine everything. But now I actually prefer trading pre-market because the patterns work a little better. There's more time for them to fade off. So it's almost like an intraday swing trade. If you place a trade at 4:30 a.m. and you cover it near the close, you're getting so much more time for it to work in your favor. So it's actually more beneficial to trade earlier in the day.
And so when you were trading at 6:30 back in Vancouver, what were some of the hardships that you had to face, or some of the things that people out there should keep in mind if they're having to trade that time?
So if you're trading, you don't really have much pre-market prep. So you're just kind of jumping into the market right at the open. Whereas now you have the benefit of reading the price action, reading the market sentiment, having a better bias going into the open with more information. Whereas back in the West Coast, I was just jumping in right at the open. And with the systematic approach, your entry criteria are more or less the same, but you have less of a bias, less information because you haven't been watching the market as long. So you may want to wait and not trade right at the open, wait maybe 30, 40 minutes, get more information what's happening with the market sentiment, and then start placing trades. Don't just dive in right away.
Would you say that in terms of your watch list and your scanners, is that something that's being sort of looked at and identified the day before, or is it happening sort of just pre-market?
Everything is live. So all of my scanners are based on live price action and what is running. So I've changed my criteria, like I mentioned. I only look at runners that are over 100% now.
Yeah.
So I look to short them, but I'm not going to jump in on the front side. This is one of the major changes I made this year. I don't short front side anymore. So something is showing a lot of strength and it's still clearly making its move higher. I'm not trying to guess the top because right now, if you guess, the volatility and the ranges are so wide, there's a high chance that you're going to be wrong. Way wrong.
This guy's been trading for 8 years. Just realize that now.
Right now, their decision of when the top is likely been placed. Right.
How hard has it been to make these investments? Or has it not been hard?
It's been difficult. Like I mentioned, my first 6 months when I moved to Dubai was really tough. Just the time zone and my own body and
oh
patterns I
my
wasn't used to
gosh,
either.
man!
So it was almost like I had to relearn trading again. I had to relearn the patterns, relearn the time frames, and then all my databases were kind of reshuffled too. So it did take some time. It was a bit of a transition period, but I feel like now we have some better footing, better information, and more live trading experience. Right? I've been trading pre-market almost 2 years now, so I have a bit of personal performance that I can lean back on and say, okay, I know what's likely to occur because I've seen it before. So it is a transition period, but I feel like I'm a better trader now because of that.
What was it like in terms of psychology-wise? After all these years, having positive P&L, but then having to, as you mentioned, like almost relearn everything from scratch.
Yeah.
Now, how did you handle that? Did you have any doubts as well during that period?
Yeah, definitely. I mean, whenever you're in a drawdown, that's the main thing. You have doubts, you lose confidence, and I think this is where a systematic approach can help you a lot because you go back to your databases and that regains your confidence. You say, okay, this strategy is continuing to work. I should just stick with that. Whereas during that drawdown period, I was venturing out with too many different strategies. Excuse me, and I was doing too many discretionary trades without the proper foundation. So that kind of resulted in me having those sideways P&Ls. I was still making money, but not as much as I wanted to. I was doing maybe 20, 30K a month, but I was really wanting to get back to that six-figure level. I think 6 figures a month is a benchmark that you should have as a professional trader. And getting back to that level this year has been great for my confidence and just kind of reinforcing the patterns that we're trading now, reinforcing all the discretionary decisions that I'm making on the fly. Knowing that it's working allows you to have more confidence in them going forward and to continue doing it.
Whereas well, that statement's ridiculous, right? Like,
if you're producing an edge.
Why would he put such a statement out there? For most people, that's such like such a far goal, right? Like, there are people that make like 300 grand a year trading. It's perfectly fine. This guy's saying 1.2 mil a year. A bit of a weird statement to make.
Great transition for me.
It must have been, psychologically very difficult. As you just mentioned, seeing that sort of sideways action. You're still making money.
Also extremely subjective, right? Because if I was making that, I'd be fucking pissed. I'd be fucking salty as fuck. The goals vary from person to person so much. It's just a weird comment to make.
Okay, that means losses, right? But in reality, it's equity drawdown, meaning that you've reached an equity high, but you haven't had a new equity high in terms of your P&L for that 4-year period,
right?
Which can still feel like drawdown, no doubt. And you probably tell yourself, I'm not making progress. But what was the reality in terms of during that 4-year period, income-wise? How were you still able to, because you're a full-time trader, like paying the bills, still living your day-to-day life while going through this 4-year period? 4 years is a long time, right? Even 4 days in the markets feels like a long time. So 4 years is an incredibly long time. So pushing through that, what was your mindset to push through that? To continue on to eventually make all of these adaptive changes and steps to then lead to obviously new equity highs and some real big changes in your trading this year.
Right. So going through any kind of drawdown is difficult, and that 4-year drawdown was tough for me. And technically it was a drawdown, but I wasn't losing money. I was just
4 years. That's a long time.
I still felt like I wasn't making the same amount of progress that I was in the past and what I had been accustomed to. So that did take a bit of adjustment, getting used to smaller, daily P&L size. Your monthlies like 20, 30K versus 100K, but it's still enough, to live a good lifestyle. I think that adjusting your lifestyle and not overspending. I obviously had a large profit cushion that I could lean back on, and I wasn't, extravagantly living, flying, business class, first class everywhere, and all these things. And also living here in Dubai, there's no taxes, so that helped a lot as well. But it was a transition. If you're used to a certain lifestyle and you have to kind of downsize and downgrade, it is difficult. But that's part of trading. Not every day is going to be a record day, or you're going to be breaking into new highs. So just having a steady lifestyle and expectation of your profit and your income is realistic, and also having backup income is recommended too. And a lot of guys ask me, "Oh, Chris, should I quit my job if I've shown some profitability in 1 or 2 years?" And I say, be very careful with that because maybe losing that stability will cause your trading to go downhill. So just having that backup, I think, is highly recommended. And I think for me, it just took some time to rebuild my process. I knew that eventually I'd break to new highs. I wasn't too concerned with how long it would take, but now that I have broken out, I feel like I can just consistently make this kind of money and live a comfortable life.
Did you at a point in your trading career have the misconception that trading is kind of just linear, like it's just once you've got it, you just continue to go up and up and up?
No, I don't think I ever fell into that because I knew that, you know, you're always a product of your edge, your execution, and the market conditions. You can have the best strategy in the world that has a strong edge, but if the market doesn't agree, then you're not going to make money. So you cannot go into the market on a day-to-day basis and expect to make money like you would a regular day job. So this is kind of a disconnect that I think people need to
Disagree,
appreciate if you
right?
wanna become a full-time
Disagree.
trader.
People like this, like, and this is the other problem of if you're like a short-only trader, long-only trader, or whatever, breakout-only trader, you can't trade all the market conditions, right? You should be able to handle like low volatility ranging. You should be able to prepare to take breakouts to the upside. You should know how to take trades to the downside, so on and so forth, right? If not, then you run into this exact situation where you're just like capped yourself and now you're screwed waiting for the market to align with your strategy as opposed to being adaptable to what the market's doing.
You have to be able to accept a drawdown, and you're going to be in a drawdown the majority of the time, right? But as long as you're looking at a large enough time frame and you're making consistent profits and you're able to, you know, pay your bills and support your lifestyle, I think that's all that matters.
Definitely, and I think it is very interesting because when you look at all the actual successful traders, you will see in their journey they had, you know, losing months, losing quarters, losing years, and that's actual losses, and not even just in terms of equity that they've actually lost for that period of time.
Yeah.
Let alone, of course, drawdowns in terms of the equity side of things, which I think a lot of traders have a false expectation in trading. I had it for sure.
Yeah.
I thought once you're consistent, then your trading becomes not easy, but like it is like just an upward curve from there. You'll have losses, of course, but never anything crazy because you've learned the skill.
Right.
Where reality being that market conditions change. That's a big part of it. It's like you might see profitability for a year, 9 months, 6 months. Convince yourself of that mindset I had, and convince yourself that you've got it now. And all it takes is a change in conditions, and that conditions change could be based on so many different factors, right? Like, what are the key condition changes you notice within the small cap world? You know, you know how we see themes, you know, and so what's in play in the money flow, whether it's around crypto or stocks. Does the same translate to small caps as well?
Well, small caps is kind of like its own little world. It's like a bubble. So the patterns and the cycles, they do go up and down. Like there's strong cycles, there's weak cycles. But I feel like this year the markets have changed quite a bit, and the patterns have changed quite a bit as well. We're seeing extreme runners, right? A few years ago, an outlier would be like maybe a 500, 1,000% runner. But now we're seeing 2,000, 3,000, even 4,000% runners. So the volatility of these patterns has increased, and I think it's because of the crowding on the short side. There's a lot of people who want to short sell these stocks because they know there's a mathematical edge. If you short them, they're likely to go down. So you have more and more people trying to extract that edge with the same types of patterns, same kinds of entries, and also using the wide stops. So I think this is where the manipulators are trying to extract that liquidity by ripping these stocks further than expected, hitting people's stops, you know, getting those liquidity events, and that's why we're seeing these extreme outlier moves. But it doesn't mean that your edge is negated. It just means the patterns have changed or mutated in some way. You have to change your entry criteria along with it to stay ahead of the game, and that's what we've done the majority of this year to stay profitable. Is just leaning towards more of a backside approach.
This is we keeps referring to.
And let the stock form, the chart form, and then you enter your positions, and that way you're reducing your risk. You know, you're reducing that frontside volatility, and you can still profit on the backside phase with less drawdown.
From a systematic approach perspective, when a market changes, how do you then collect data on the new things you're identifying within the market? Do you have to really try and expand the amount of data sort of search you're doing to then find similar conditions that may have taken place? What does it actually look like?
So that's a good question, but also a difficult one to answer. So what I do is I look at the data every month. I try to look at month brackets and see if anything has changed. And there could be outlier months, but it's not going to cause me to panic or completely discredit a strategy just because I had one bad month. I'll look at the history of the performance of the strategy and say, okay, it's had 1 or 2 months drawdown before, but it quickly recovered and broke to new highs, so it's not a cause for concern. If it's underperforming for 3 or 4 months in a row, then I might start making changes like downsizing or changing my entry criteria or just changing my time frame that I'm willing to take the trade if it's not working right away. So I use what I call a 30-minute rule. If I enter a trade, I want to be in the green within 30 minutes because that's confirmation that it's working, it's following a typical pattern, and it's going to continue fading in my favor. If after 30 minutes I'm not in the green, then that's a red flag, right? If there's more volume coming in, that's a red flag. If it's holding above the open or making new highs, these are all things that I consider to change my bias. And at that point, I might cut the trade, I might start recycling shares, or I might just cut it all together and flip long. So this is one change I made this year, that I am open to doing long trades, especially if something is showing extreme strength. You don't want to continue fighting it on the short side. This is what I would do in the past: revenge trade, continually shorting because that was my only bias, and then having these wipeout red days, and a month of profits would be out the window. So instead of doing that, I'm open to longing the stock, even though it's fundamentally a worthless stock. It doesn't mean that it can't keep going up in a short time frame. I'm not going to swing trade it for a month, right? But I might long it for a couple hours or a quick scalp on a dip and then sell a pop, and then that way I'm not fighting the trend short. I'm just trying to be more nimble and less stubborn on the short side. I think that will save a lot of people a lot of headaches.
Why do you feel like
that comment, right? Like the whole idea that like a stock has to be has a fundamental reason to go up is not true, right? We know this. It's just momentum, just plowing one way or the other. And that applies for everything. That applies for every stock, right? At the end of the day, like quant funds, we're trading momentum. We're trading the physics of the price movement, right? The fundamentals are just fucking. You can trade them if you want for longer term investments, but when it comes to the short term shit, it's kind of irrelevant.
Long previously.
Well, mostly from the data, right? There's really no way to quantify a long strategy and have it produce an edge because the natural price action for these stocks is to go down if they're extended. If you look at the monthly chart of most of these small caps, they're all downtrending. So why would you buy these stocks, invest in these stocks when they're not good companies and likely to lose value? So that was my thesis before on long trade. Why should I do it if there's no edge? But the time frame in which you do a long trade is more important. You can hold a long trade for a minute and have an edge if enough short sellers are panic covering or if it's breaking over the highs and it's likely to keep squeezing. So now I'm just more open to seeing these patterns because I am doing more discretion and I've seen these patterns play out. And also the profitability. I made some decent money on some longs. So it just helps confirm that pattern is profitable in these markets.
In terms of discretion we talked about earlier, it comes down to experience, intuition as well. Again, comes down to experience. If you were to sort of describe that experience level, like how do you lean on experience? How did you develop that experience? Not just from a timing perspective, how long you've been in the markets, but equally, the number of trades you're taking, the reviewing of those trades if that's taking place, etc. How do you build yourself to a point where you can start to lean on your discretion, lean on your intuition?
So I think after about 5 years of trading, you probably built up enough screen time where you can trust yourself a little bit making some discretionary calls. And as a system trader, you're kind of relying on the system, right? Even though you may see certain patterns and know what's happening with the price action, you're disregarding that because you want to follow your system, right? You have one entry, you have one exit, and you don't want to interject along the way. That's part of a systematic approach. At a certain point, you may interject after you have some experience and start tracking it. This is what I did. Every decision that I made, I would track it versus the system to see if I was under or overperforming that benchmark. And I would see that I was actually making more money and more consistently because I was not having those outlier red days by following the system, right? I might cut a loser short and it continued ripping, so I saved myself some money, right? Just because I saw a few red flags, like the 30-minute rule, the 10 a.m. rule, rules like this that I follow, and just doing that has saved me a lot of money. If you're a beginner trader,
Bailey 2781. What's the indicator on the side? This thing? The VRVP, visible range volume profile. Visible range volume profile. And this is the bottom's volume by time, this is volume by price.
I would lean towards the system a little bit more because you haven't built up that screen time, that repetition of seeing the patterns working to trust yourself. You still need to put in the screen time and the years of work, in my opinion. So following a system is best for those kinds of traders. But for me, this year, I've really leaned on my own discretion a lot more. I've had a lot more conviction in my own calls. And being profitable helps too, right? If your equity curve is going up based on your own discretionary calls, then you're going to have more conviction in that. If I was losing money doing discretionary stuff, then I'd probably cut it out.
What was it like making that transition to start trusting your intuition and your experience a bit more after being so systematic? Because it feels, I imagine, I'm not a systematic trader, but I would imagine it would feel wrong almost to make that leap and that sort of change, no?
Yeah, I mean, at first it was a shock because I was so used to just following the system, and anytime I felt the urge to interject or do something, I'd be like, no, I can't do that. You got to follow the system, right? So it is a bit of a shock at first, but I kind of got over that threshold. Just started doing it a little more, not too much size, more practice, and tracking it helped too. So whenever I would track my own discretionary calls versus the system, I would see that I was doing quite well. So that gave me some more conviction. And just practice doing it more and more. Now I have more faith in myself, my own calls. But like I said, I'm still 70% system. I'm still relying on that system to give me that kind of backbone to make sure I have an edge. But I'm just trying to augment that edge a little bit, reduce my drawdown, and smooth my equity curve a little bit more. So that's where the 30% discretion comes in.
I love that. And you mentioned already, like, beginner traders should start systematic.
Yeah.
Do you feel like that should be the case really across the board? Like, you see a lot of traders come in trying to use technicals and learn technical patterns, and obviously using discretion.
Yeah.
Some people might come in and actually use the tape or order flow again, but using discretion. Do you think actually a lot more traders will probably have a better experience getting into trading? Maybe develop actually a deeper understanding when it comes to statistics and probabilities by going through a more systematic approach from day one?
I think this kind of depends on your personality and what style of trader you are. So for me, I'm a very math-driven guy. I like numbers. I like analyzing databases. So it just made sense for me to go towards a system approach. But I think that from a profitability standpoint, it's easier for a beginner trader to use a system because it gives you a guideline, like kind of a blueprint of what to do. If you're just doing discretionary trades from day one and you're on your own, you're making decisions without really a lot of experience, maybe you have a mentor or somebody that can guide you.
Agree.
I think a system kind of protects you from yourself more than anything. Because when you're a beginner trader, you're going to make mistakes. And if you have that system that you can fall back on and also to build conviction when you're in drawdowns, there's just no other feeling. If you're a discretionary trader, you're all on your own. So you better have some serious experience and a large profit cushion of years of doing that you're profitable. Otherwise, you're going to lose conviction quite quickly, I think. So that's where a system can help you.
One thing we discussed on the Chart Next episode, I wanted to touch on, was in regards to, even though, let's say you create these systems, which you have, and you could, a trader comes to you and you could give them that system, that data, that model, right?
Right.
But even though you've done that work and you collected that, and it's all backed by probabilities and statistics, so it's all valid. How important though is it for that trader to essentially do that work themselves, replicate that process,
right?
To be able to not only trust
You know,
the data.
that was a good question you asked him about that, because in reality, that's a pretty good, probably good suggestion for most people, right? Like if you don't have a background in math or statistics, approaching trading as a beginner of figuring out what, like, you learning that to learn how to do some kind of mechanical system is a good way to kind of get a fundamental feel for these things if you don't already have that foundation. That's a good question. I liked it. Like that.
But be able to actually execute upon that data.
That's so important. So any person that comes
and also the other idea behind like the ability of like knowing how, like if I were to hide this chart from you, right? Just kind of put this on a hide. And they tell you to come up with like a way to make money using like this plus like a moving average or something. Right? You just oscillators and moving averages. You should be able to come up with some kind of system of doing this, right? And it doesn't have to be these specific indicators, but like without being able to see the actual chart, you should have understand a way of doing that. In my opinion. Because that way you understand the math behind things. Instead of just relying on like looking at a candlestick chart. It just makes you that much better of a trader. Because then you can do both, right? You can use the math and look the price action that you're looking at.
Through my chat room or my community, I always recommend to start their own database. Even though we share our Excel files openly, just because I have data and it's tracked and it's back tested and everything, it doesn't mean that someone else will have the same conviction in it because they've not built it. They've not lived through it day by day. They've not hand tracked it. So by doing it yourself, you can build so much more conviction in it. And then also you can personalize it, right? Just because I track things a certain way doesn't mean someone else will appreciate it or be able to see the same way.
True.
So I think having your own database.
That's why I track
having
everything
your own
too,
edge
and I
will
track
create
chart
true
data
success
as well.
as a trader, not just following somebody else. or
Building up a
using
repository of chart
challenges
data.
don't have to do anything at all. Seems too good to be true, right? Well, at propfirmtrader.com, that is exactly what is possible. You are buying propfirm challenges anyway. Well, at propfirmtrader.com, not only
Big
do you get the best
agree on
prices,
that
you get to
one.
compare your propfirm challenges, but by code PFT at checkout at all your favorite firms and also we're touching on when we're looking at some of the charts is that there was one particular day, for example, where you were recycling trades, right? And it was almost 3 to 4 hours of like real focus. It was on the 1 minute chart scalping. Can you talk to us about the reality of you being able to do that? How do you do that effectively? How do you do that? What are the tolls that it also takes to be that super hyper focused for such periods of time, which most people just generally would probably struggle to do, especially in this society that we live in now with the brain rot content that we're getting and these dopamine hits that we're constantly getting, our attention span being so slow and small. Are there certain things that you have to do to allow yourself to focus and then sort of efficiently operate at a very hyper focused level for a long period of time?
Yeah, scalping is definitely a high performance sport.
You know, and I'll say this, right? We'll kind of segue this with the interview that we watched before this, where the prop firm guy was saying that most of these scalping traders don't make it. The most profitable ones are the ones that are doing like a bit more of a swing trading approach. That's another drawback about scalping, is that you have to literally sit here on the 1 minute nerding out nonstop for your fucking entry. Whereas when we're doing it the way that we do, you're waiting for like a medium time frame level to get approached, you get your fill, and then you're chilling, right? We've been in the same long for how long now? Almost a fucking week we've been in the same long. I don't have to sit here fucking nerding out, caffeined out the wazoo, grilling the chart non-stop, right? You have time to do this, right? Sit here, fucking watch interviews and nerd out on whatever it is. So like a lot of pros to moving away from scalping, on top of being mathematically more reliable.
Compared to anything else like that. So I think that if you have a structured lifestyle outside of trading, it's going to help you. If you work out often, if you have a healthy diet, healthy lifestyle, it's just going to help you be more focused, be able to perform at a high level for hours on end, and also years of experience. I've been trading for a long time, so I know what the tools are. How long
That's not even fair. We won't say it's mathematically like more viable. They are both viable in that regard. But in terms of reflecting the consensus of what the market wants to do and catching juicier moves, it's more reliable.
I need to take a break and just kind of pace myself. If I'm in a trade that's like really stressful, it's burning my mental capital, then I know myself, I'll cut the trade and I'll say, okay, I need a break. Or I'm making bad decisions, or if it's late in the day, that's why I don't trade past noon. I know that I'm not going to perform at my highest. So knowing yourself, knowing when you're kind of getting that mental fatigue, that's when you need to cut the trade instead of continuing to force trades and making bad calls. So
because of that hyper focus, how many sort of stocks are you trading at the same time? Are you trading multiple at a time, or you just you narrow it down to just one to focus on?
I do trade multiple stocks at a time. I have about 8 charts up at one time.
Wow. So what sort of setup do you have?
I've got like a 3-monitor setup, so like a large wide screen monitor and then 2 side monitors.
And then does it allow you to split the charts onto those different monitors?
Yeah, so I've got like 1 screen for all my scanners, 1 for my main charts that I'm focusing on, and I have about 8 other charts that I'm just kind of keeping an eye on. Gotcha. And I like to use like the 3 and the 15 minute time frames, just so I can see a shorter and longer term time frame on the stock, see what it's doing. And from there, like I'll have my level 2s. I'll have about 4 level 2s up at one time, so I can trade up to 4 stocks at one time. It is a bit of multitasking, takes some practice to get used to. But once I have my level set and my line set, then I kind of have an idea where I want to attack the stock, where do I want to take shares off covers. But I am keeping an eye on generally like the market at all times.
So just dive into that a little bit. In terms of starting out, do you think traders should probably get more specific? If they're more beginner, sort of really starting out in their journey, should they really probably maybe trade less stocks to begin with to be able to try and focus and maximize on them?
I would say it's better to trade less strategies. Like if you focus on one strategy, say a gapper short, there could be 5 gappers on one day. I wouldn't say just take one of them. Right? I would say take all of them, but just focus on one approach so that you're not doing, okay, I'm doing gappers here, then I'm doing long breakouts here, I'm doing swing trades here, I'm doing crypto here. Just try to focus on one thing so you can master that, hone in on that completely, and then once you've gained some experience, some profitability with that, then you can venture out. But I think a mistake that I made when I first started trading is just doing everything, wanting to learn everything at once. Yeah. When it's better just to focus on one thing, master that, and you really only need 1 or 2 good strategies to make money. You don't need to learn everything. So
very true. And then off the back of that, how do you handle the execution, the management, the taking profits, etc. when in 4 different trades, for example? Right. How do you make sure that you're making the right decision on the right chart and the right trade, and hopefully not make mistakes?
Right, so it is a bit of multitasking, and this is something that I've practiced over years, just repetition every day that I'm trading. I trade quite a long time. Like I start at 4 a.m. Eastern, and I usually trade until noon. So that's quite a long work day, and every single day that I'm there. So I think keeping the charts up, so you can see multiple charts, multiple time frames, keeping your level 2s up, and then having a game plan going into the trade as well. Charting.
I'll say I don't know if I agree with this methodology, right? I don't know. To be trading multiple names in the same day, monitoring level 2 data for all of them in the same day, along with everything else you have to be monitoring at the same time, like if it's sure some people will do it better than others, but at the end of the day, even if you're like the absolute best at it, you are splitting up your mental capacity multiple ways, right? And if you're going to be taking 4 gap up short setups, why don't just scale into the best one, right? But maybe he does it as like a way, like to be fair, maybe he does this as a way of like diversifying his risk. So like that way, like if one is wrong but 3 are right, then you're still juiced that day. Or even like if 3 are wrong and you manage to risk, the 1 covers the 3 losses and you still end up in the green. So a bit of a 50-50 on that one, but interesting that he does it that way.
Maze using trend lines, then you can decide where you want to attack the stock. And at that point, I'm not forcing trades. I'm just letting the stock come to me at my levels. Whereas using trend, you can see multiple charts, multiple time frames, keeping your level 2s up, and then having a game plan going into the trade as well. Charting key levels, like using EMAs, using trend lines, then you can decide where you want to attack the stock. And at that point, I'm not forcing trades. I'm just letting the stock come to me at my levels where I'm likely to make a decision. I'm not just randomly forcing trades to get action. I think that's important too. It's important to just sit on your hands. If the stock's not doing anything, you don't have to, right? Just wait for it to come, present an opportunity, and then take the action.
Would you say one of the benefits of the small cap stocks in comparison, say, to the large cap and equities is that there's less correlation? So, for example, when one trade might be hitting a trend line, it doesn't mean that all your small cap stocks are going to be in a similar position, moving in a similar way. They're all individual.
Small caps is kind of like its own bubble. So the market can be up or down or whatever, and the individual small caps will still do whatever they want. They're highly manipulated in that sense. But the manipulation is predictable. So you can play off of that if you've seen these patterns before, you have the backtest. And I feel like there's way more inefficiency in small caps. Therefore, you can find quantifiable edges, and that's where the system is derived. It's hard to create these systems with large caps, Forex, larger markets that are more efficient because there's just not as many opportunities to identify.
Yeah, that was one really eye-opening thing when we were going through the charts on Chart Fanatics, seeing how many charts and stocks were going from, say, $1 to $6, $1 to 10, even going from 80 cents to $1.60. But we're talking in the space of sometimes hours, sometimes minutes, which is crazy to think because they're the sort of numbers that everyone's chasing in crypto, right? When they get into crypto, they're usually trying to invest into a meme coin or some sort of cryptocurrency that allows them to gain, let's say, 10 cents, go to $1. And they normally want it to have invest. They normally end up back holding for years and it never happens. So it actually shocks me that more people aren't actually looking at small cap stocks. It seems like they are now, right? But it was actually eye-opening to me because I was like, wait, this has been happening day in, day out, year on year, and it's getting even more crazy, as you say. Is there a benefit, you think? I think we talked about this, but is there a benefit for more people getting involved with small cap stocks?
Well, I think some people will be against it because the patterns are going to change. That just means you have to adapt. I think it's a great opportunity for those who are prepared because there's going to be more money in the markets, and with the recent PDT removal, there's going to be a lot of new traders. So I think that if you're prepared, if you're ready, and if you're open to the challenge, you can definitely make some good money. And there's a lot of short sellers who are having record years right now because they're open to those changes.
Were there any hurdles that you really faced about when it comes to adapting and changing? Was there anything that was really restrictive and held you back from making adaptations? Because as you said, some people might be fearful of that, or they'll be against it, should I say, because of changes that they'll have to make.
Well, I think if you have a profitable strategy that you've backtested, it's hard to kind of shelf it because the market has changed. So you feel a little bit defeated. You put all this work into creating the strategy, and then all of a sudden the edge is eroded, then you start from square one again. But I feel like the true edge that a person has is the ability to find new ones, not just relying on the same one over and over. Like I was doing sports betting for years before I was trading. Like over 10 years I was doing that. But I had to give it up because the edge was gone. The sports books had adapted. They had become way better at identifying opportunities, and so that dried up. So I moved on to trading. So the ability to find that edge in a totally different market, I feel like, is my personal edge. And every trader has their own. It may not be in small caps, maybe large caps, maybe crypto. But the traders with a true edge will never fear, a change in the market sentiment because they're always going to be able to adapt and stay ahead of the game.
Do you think edge erosion is much more prevalent in small cap stocks than elsewhere?
I think it can occur in almost any realm. Like I said, in sports it can happen. I know a lot of successful poker players that were not making money after a certain period of time that eroded. So whenever there's an opportunity, it has to remain the same. If the market changes, if the dynamics change, if people change, then the edge can change too. And I don't like the word edge erosion as much as I call it edge mutation. The edge is still there. You just have to find it in a different pattern, right? These are still fundamentally poor stocks. The end game is still zero. The time frame may change. The entry point may change. The stop loss may change. The way it gets there may change, right? The patterns. But ultimately, there's a dilutive effect on these stocks. If you short them at any point and you hold them for a year, you're likely going to make money. But we're all doing these intraday. So when everything is kind of congested in that time frame, the patterns are distorted. You have extreme volatility that we're not used to. So you just have to be more adaptable than in years past.
When it comes to small cap stocks, like in futures, for example, or even Forex or even crypto, like you'll normally find people trading the same tickers, the same stock, the same crypto, the same pairs in Forex consistently. Like me, for example, I've been trading Euro USD on Forex for 3-4 years. That's it. In small cap stocks, is it a case where you might have something that might be in play for a couple of days, maybe a week, but then is it quite consistently changing of stocks, different small caps are hitting the scanner and getting on the watch list, and therefore you're not really trading the same names consistently? Because as you said, the majority will end up, the end goal is that they go to zero.
Yes.
So is it a case where it's quite a lot of, I don't know what the right word would be, but essentially just changes, like constant changes of those stocks?
A little bit of that, yes. I mean, you'll have stocks that'll be in play for years, and eventually, like every few weeks or few months, it'll have a volume date. And I know these stocks, and I call them Hall of Famers because I've seen them so many times. And I say to my guys, oh, that's a offer. We know we're going to make money on this because I shorted it 20 times in the last 10 years, and every time it fades. Or, oh, no, this one's crappy. Like, we have a history of the stocks, and we know, okay, which ones are difficult, which ones are easier to trade.
Interesting.
Over time, a lot of these will become delisted. They'll go to like the pink sheets.
Interesting.
OTCs, and they won't be on the listed exchanges anymore. The price will drop so low, they won't be in our price range. So eventually they will fizzle out. Like I look at some of my tickers from 2018, they're not listed anymore. Right. So there is a changing in the stocks, but the games remain the same. The end game is to pump it up and then dilute it.
Because essentially, really, it's not really about the stock at all. It's about the market mechanics and the market sentiments. And then those patterns end up looking extremely similar each time.
Well, a lot of these stocks are not even real companies. They're just shell companies. And the main way the company derives income is from the stock. Right? They're diluting shares. They're pumping it up. So the patterns are all the same. And we're just trying to play off of those patterns. It's just a vehicle for money exchange.
Got you. And in terms of you do the statistical data beforehand, right, which collects the models and that data, which you're then framing your trades off. That's like the foundation. So after you've executed and you've exited the trade, P&L-wise, whether it's a win or a loss, as part of your process, do you then review each trade to then make sure, one, that you actually execute per the system, and then two, like just to review the actual data around that trade, performance-wise, Is that part of your system as well, part of your process?
Yes, 100%. So tracking your progress as a system trader is so important so that you can see how you're performing versus the system, how your discretionary calls are performing versus the system, how your execution is. So I would grade my execution on a scale of 1 to 100 every day and say, how well did I follow the plan? I don't do these things as much anymore because it's kind of more ingrained in my mind. I can just feel when I'm not doing well or when I'm not feeling well. But in my beginner years, I definitely tracked everything, and that helped me stay on course because I would see, oh, my execution is dropping here. I need to get that back up. Or my performance versus the system is lagging behind. I need to match the system. So it just helps you stay on course.
Was there any correlating factors that would really stand out to you when those would take place? Like when you would see your execution / your performance versus the system?
Oh yeah. After green days, after winning streaks, I would find myself getting very reckless, not following the system, maybe a little overconfident, just taking too many random trades, and I would see that my execution was dropping. But it's being able to see that because I tracked it that helped me get back on the execution, right? If I didn't track it, then I wouldn't probably notice that things are slipping.
Yeah.
So being able to see that in your database, that will help you stay on track.
Sometimes I think that traders do things backwards. Like they will come in discretionary. They'll come in without actually any data or edge.
Yeah.
With the mindset that eventually, they'll be able to rely on. By doing that over and over, they'll find the right winning system. A lot of strategy hopping taking place during that.
Yeah.
And then eventually it'll work out. When in reality, based on our conversation, just generally reflecting, really traders should do it the right way around, which is build your statistical model, build that edge. Through that process, you will build your intuition, you'll build your discretion, to be able to lean on. Wow, because I know loads of traders who are doing funding challenges in futures and forex, or just trading personal accounts in whatever realm, but they actually have no edge. Like they don't, if I was to ask them, hey, what you're trading, like, what's that backed on, like, or how much data do you have on that? And they'll be like, what do you mean? Like they don't journal, they don't do anything.
Yeah.
And these are people who've been trading for years, and not even people who are just like a few weeks in or a few months in. They're like, I'm talking traders who've been doing it 4 or 5 years, and they're still doing that. And I think at that point, it probably comes down to more of a gambling addiction than anything else.
Yeah.
Which is unfortunate. Sad. As we're coming towards the end of the podcast, I wanted to just ask some kind of fun
I mean,
questions.
agree or disagree, right? Because the thing is, sure, right? We should be collecting data on everything. But at the end of the day, if someone is just sitting there with like fucking 2 EMAs in their chart and they're just brute forcing trade after trade with no data collection, they're gonna learn over time, right? Most likely, they're gonna learn over time what to do, not to do. Not nearly as efficient, but.
Hopefully not. But in terms of like, okay, what are the worst trading advice that you've ever received?
That I've received.
Or seen, maybe, out there?
I think most like mainstream trading advice is that you should have like 3 to 1 risk to reward. You should have like a 40 to 50% win rate, and anyone using a wide stop is a reckless trader, and that's exactly what I use, right? So in my early years when I was promoting my systematic approach with a wide stop, it met a lot of resistance and a lot of people saying I didn't know what I was talking about and not to follow him or things like that. My approach from day one has always been let the data guide me, let the mathematics guide me, right? Math and numbers don't lie, but people do, opinions do. So I feel like as a beginner trader, you're just bombarded with advice that's just rehashed advice from whatever guru, but none of it is really proven or backtested. It's just commonly accepted trading wisdom. So my advice to any new traders is backtest, prove it, right? Whatever you do, make sure you prove it mathematically and have conviction in that. Otherwise, it's just fluff.
And one thing I think we did mention earlier, but backtest wise, it's an automated process, right? So it's like you're able to code and put in inputs of what you want the data to show you, and then it automatically will pull this data for you. And obviously, you will then manually remove things if necessary, or edit things if necessary based on discrepancies that may not have taken into account. Just because in the I don't know about futures, maybe futures as well, before X-based backtesting is mainly done like bar replay. Like where they'll go back 3 months, but then press play and pretend it's live. If that makes sense.
Okay.
Which is an entirely different thing. But even in that process, like collecting data is cool, but it's not as reliable because that's where a lot of people say they don't like backtesting in the way that I just described it, because people will create a false narrative based on, oh yes, my backtesting results from me doing that bar replay was X, but then for a lot of people they're just pressing they can't pause the candle in real time, while yours is actual physical data taken from the market.
Yes.
That can't be disputed. Right? Just to give that clarity to the audience. But in terms of actually, you reminded me of a couple of points I think would be important to highlight. One being, as you mentioned, you use quite wide stops, and the reflection though, however, that you mentioned on the chart next is that a profit factor should be the most important thing to focus on.
Right.
So let's dive into that. Like, why should that be the most important thing to focus on? Why do you think it's wrong that a lot of traders focus on risk to reward and stop loss size?
Right. Like I mentioned, I think it's common wisdom that you should have a tighter stop loss, better than 1 profit ratio, like 3 to 1 risk to reward. But if you were to trade that style on these small cap shorts, you would have negative expectancy. You wouldn't retain your edge because you need a wide enough stop to allow the manipulation to occur, allow all of the games to occur, and then eventually the stock will fizzle out and you're making money. If you're using a tight stop, you wouldn't have the same profit factor. You may not even make any money. So for me, a wide stop is mandatory, and the wider the stop is generally the better, which is worse advice in terms of the trading wisdom, the common trading wisdom. Most gurus will say, oh, don't listen to this guy, he doesn't know what he's talking about using a wide stop. But that's essentially what is required to make the strategy work. And yes, you will eat a loss. That's a big loss from time to time, but the probability is low. When you look at how often it occurs, maybe it happens 10% of the time, but your winners are enough and more frequent enough that it can cover that occasional loss, resulting in a positive profit factor. So this year my profit factor is about 1.6, which is a lot higher than in years past. And that's because of some of the discretionary calls that I've added.
And in terms of that, handling those outlier losses, even though they don't happen frequently, they actually happen the opposite, very infrequently.
Yeah.
In the past, have you been in positions where, even though they happen frequently, the size of the trade is so large that it creates quite large damage? And if so, like, how have you changed that now moving forward to even when you have these outlier losses, they're not debilitating or taking away a lot of hard work and a lot of consistency away from you?
Yeah, I would say that's probably the main reason why people fail with this strategy is the oversizing. And also just not thinking that a wide stop loss could occur. If you have 100% stop, you just think, well, it's probably not going to happen. I'll just add some more shares here. I'll just go all in. But eventually it will happen. And the probability, and sometimes they happen more than once a day. I've had multiple losses in one day. But because I've had conservative sizing and I respect my bankroll management, I've been able to stay in the game. A lot of traders, they can make money doing these short selling strategies, but eventually one of these runners will wipe them out because the risk management's not there, or they're just too greedy and they're trying to oversize. That's why I think a conservative approach is the best. You don't need to hit home runs every day. Just add up the base hits, and you can make a consistent, profitable future for yourself.
You mentioned earlier the Kelly formula, which is a mathematical formula. Could we break that down in as simple terms as possible?
Okay.
But equally, I know it refers to being able to dynamically size as well. So how has that changed maybe for you this year, if it has changed size?
So Kelly is something that I don't use anymore actually, because I'm just using a fixed position size.
Interesting.
Yeah, I just use small position size every trade because I'm not trying to grow a small account anymore. I'm just trying to consistently bring in income every month. But if you are growing a small account, then the Kelly criterion is very useful because it will tell you the optimal position size based on the setup and the edge, and everything is mathematical. So it's actually a formula that I learned in my sports betting career, and I relied on that heavily. But a lot of my students, they use it, and I've had several students this year take small accounts over 6 figures using the Kelly criterion, and it's just a compounding effect of growing those winners and position sizing optimally so that you can take your account parabolic.
So you're saying now, though, you're using a fixed risk?
Fixed, yes.
Is that fixed in terms of just throughout the entire year, or do you dynamically size based on P&L growth?
I actually changed my sizing based on the day of the week. Okay. So earlier in the week, I'm more conservative because our data is not as strong. Like Mondays and Tuesdays, we see more stronger bullish price action in small accounts. But like Wednesday to Friday is a bit more calm, so I size up a little bit more. But I'm still within a fixed range. I'm not trying to like grow exponentially. I know some people who are really pushing the limits, and that's great. But I think for me personally, I just don't want to deal with the stress.
Yeah. How important is that in terms of, because you seem like a very calm person, you know, even being here on the podcast, like how important is that to you? Has that always been the case, number one? And then two, how important is that for your trading to be able to perform?
Well, I think keeping your position size small will help you remain profitable. Because if you're pushing your profitability, if you're pushing your size, you're more likely to make an emotional mistake, at least for me. So if I'm red on a trade, it's going to be a small red position. I'm not going to be freaking out. But if I'm in, half my account and I'm red on the trade, then maybe it will cause you to, do something else, interject or make a mistake. So for me personally, I trade small size and I'm fine with that. And I might slowly size up, but I'm not trying to go parabolic or take a small account to 6 figures like some of my students. Once you've reached, I think, like a large profit cushion, you can kind of just go on cruise control and just make a steady amount and just pay your bills. That's worse for me.
And if I'm not mistaken, each year, do you reset your account?
Sort of. I mean, I like to take profits once I reach certain levels, whether it happens at a certain time frame or not. Like, I'll reach an account balance and then I'll wire back out.
Gotcha.
So if I reach like a 500K account, then I'll wire out 100K. Gotcha. Start at 400 again. Work it back up to 500, then wire out 100K. Just kind of do that. Pay yourself. I think it's important to pay yourself so that you make the money real when it hits your bank account, and pay taxes if you need to, and also reduce your emotional liability. Because I found that the more buying power you have, the more ability you have to sabotage and trade recklessly. So it's good to keep yourself in check, keep your buying power in check, and that way you'll last in this game.
One thing you're very much known for, and I commend it a lot, is your transparency. You've documented your journey very transparently in terms of, yes, the highs, but most importantly the lows. The reality of facing drawdowns, having losses, having a losing day that you've had to fight back and get to, even just if it's break even, right? Recovering that loss.
Oh yeah.
Like, what's been the mindset behind doing that? Because we've talked about it, and people know it as well in terms of social media is pretty much used as a highlight reel 99% of the time.
Yeah.
And that's where probably a lot of that misconception comes in that we talked about earlier of consistently having new highs, consistently pushing the boundaries, having record P&Ls almost all the time. So why take that stance and that position of being so transparent and showcasing the bad times, the bad side of trading people as well? And what's that been like for you as well? I know you mentioned earlier about having, because you were sharing about your trading early on, people would be like, listen to this guy, etc. What's it been like for you to do that as well?
Well, when I first entered this space, it was the same in 2017. Social media, you're only going to see the outlier successes, right? You're seeing people green all the time, and whenever people are losing, they're very quiet. They don't share those experiences, but everyone's going through it. So I felt like it was kind of an unspoken topic, and no one was really discussing it. So from day one, I've been transparent. I never, intended to have a large following or a chat room or anything like this. It just happened organically because I was so open and people kind of gravitated towards that. And I think it's very relatable, right? Because we're all going through the same things. Even as an experienced trader, I've gone through drawdowns, I've gone through stressful periods where my strategies weren't working, and I've gone through, emotional ups and downs, and every single one of us is going through that. So just being open and honest about it, I think people kind of resonate with that, and it's just, I don't know, it's just been my deal since day one. I've always kept it 100%, and I always will.
When you went through that period of drawdown or the lack of new equity highs, and we talked about the frustration.
Yeah.
Was there an element where you're looking and comparing on social media to how these people are doing record numbers? Was that an element to it?
Oh yeah, comparison is always an issue when you're in this realm because you're seeing people posting P&Ls and winning trades and losing trades. And I get this question a lot too. And I always say just focus on your own journey. Right? There's always going to be noise around you. There's always going to be someone trading bigger size than you, making more money than you. And there's going to be people making less money than you. It doesn't matter, right? So just focus on your own journey. Ultimately, for me, are my bills paid? Am I supporting my family? That's all I care about. If someone else is doing well, that's great, good for them. But their finances has nothing to do with me. So just focus on your own journey, and eventually you'll make it.
Have you, through social media, one of the positives is that you can connect with other traders. You be able to mastermind, learn from other traders, even just through interaction on X, for example.
Yeah.
Has that been something that you've ever interacted with or benefited from?
Yeah, for sure. I mean, I think if I never created an X profile, I wouldn't have met so many great traders over the years. And recently, so few people have come through. Tim Sykes came to Dubai, and it was nice meeting him. He kind of got me into trading because I saw one of his YouTube videos back in the day, and shorting penny stocks. Like, what is this all about? So I had to take a look, and if I never saw that, I probably wouldn't be here. So it has been nice kind of collaborating and connecting with other people on X.
Do you think people trading crypto, forex, futures, options, even, and maybe doing it unsuccessfully, for a long period of time, do you think they should take a look at small cap stocks?
Well, if they're looking to adopt a systematic approach, like a proven strategy with a mathematical edge, then yes, I think everyone should have some kind of backtesting. Even if you're not really a data person, you can still benefit from backtesting. Backtest your own trades, right? Save your charts, see what you're doing wrong, see what you're doing well, how you can improve. It's all about refining your edge, whether it's on an Excel spreadsheet or on a chart. Everyone should do some form of review to improve. Otherwise, you're not growing. If you're not growing, you're dying.
Let's say, it's an interesting one actually, we'll finish up with this question. But let's say it's 2025 now, you're back with $3,000, right? What would you do today to essentially get, what would you do today to sort of follow a similar path of profitability? Not saying you have to do the 1.6 million again, but just generally, you starting today with $3,000.
Yeah.
What are you doing? What steps are you taking in order to have a profitable journey and a great start to your trading career, if you will?
I'd more or less do the same thing. What led me to profitability will probably do the same thing again. I would be more aggressive with the account. I'd probably start using the Kelly criterion, more compounding, because right now I'm doing a fixed stake. I'm just kind of cruising right now. But if you have a small account, then you need to be more aggressive. Otherwise, the dollar value that you're trading is just too small. You need to push it. I'd probably do more backside trading like I am now. I would cut out probably the discretionary trade, just focus on the system approach. If I was like a beginner, if that's what you mean, I would follow the system. And that's what a lot of guys in my chat room are doing. I've had several students take a couple thousand into 6 figures this year just following strictly that system approach, and I applaud their discipline. Sometimes I look at that and I think maybe I should follow my system more, But I've reached a stage where I accept my decisions and I'm fine with the discretionary calls that I make. So
I know I said that was the last question, but just another one quickly. It's like we mentioned at the very beginning, you had 4 back-to-back 6-figure months this year.
Yeah.
And I don't feel back-to-back, sorry, but you've had 4 6-figure months.
Yeah.
After having obviously a really tough period in terms of like sideways action and not having these new equity highs, did you feel any sort of sort of ego coming in, sort of having to catch yourself, any bad habits seeping in after seeing such success in a short period of time again?
There is that element that whenever you're coming to a lot of money really quickly, it can change your emotions, it can change your viewpoint on a lot of things, maybe your spending habits. So I try to keep myself kind of level and grounded. I think that just comes from experience because I've been through the ups and downs so many times. I know what it feels like on both ends of the spectrum. So nothing's really new for me. If this was my first ever 6-figure month, then I might be more likely to make a mistake, overspend. Like I knew guys who made a lot of money during COVID and they just blew through it all. So I think just having a conservative approach from day one will always keep you kind of level-headed.
Chris, thank you for being here today and sharing so much with
For
us. Everyone at home, drop a comment with your biggest takeaway from this episode. Make sure you check out Chris's links. I will be in the description below.
Not bad,
Check it out.
not
Hit like and
bad.
subscribe.
Better than the
Other
last
episodes
one,
are
we'll
on
say
screen. Check out
that.
systematic trading.
Better
I'd
than
say
the
is a big takeaway
last
from this
one.
episode.
Also interesting
Check
to
out.
learn about this Polygon thing. Don't agree with the whole thing about, like, I mean, obviously, yeah, you have to pay yourself trading, but like, if you really want to grow your account, you should be compounding your wins, right? You shouldn't be just taking it all out over and over and over. I guess in his case, I mean, he's self-admittedly said that he's not comfortable trading larger size, so fair enough, right? At least he recognizes that and acts on it accordingly. Can respect that. But I wouldn't follow that advice blindly. You're kind of just nerfing your growth rate doing that. If you're trying to reach like a high-level endgame. Overall interesting. Did we make any other notes about anything on that? Oh, the other interesting thing that he mentioned, which I found quite fascinating, was the idea that like there's like low caps that like pump cyclically, right? So every few weeks or like months it'll pump, and then the ones that do this also have like specific behaviors. Like one of them will like tend to trap people more often, and other ones like fade after like a certain percentage move. Interesting, right? Even though we don't trade low caps, it is interesting. Also, the morning session thing was like an interesting bit of discussion as well. Worth it, right? So worth it watching the interview. Got a little bit of interesting juice out of that. Also, a lot of stuff we didn't agree with, but usually how it goes, right? I'm not gonna agree with everybody and everything. You know, the one thing I really disliked about that guy a lot was the fact that he's like a short only trader, right? Because like there's just so many issues with that. Like we already talked earlier about the idea that like when you're short only trading, you're like limiting yourself to certain market conditions and certain kinds of setups. But not only that, when you're like a mechanical trader doing just that, you're not paying attention to contextual data, what's happening in the moment, right? So, a bit inefficient, in my opinion, but what do I know? Anyways, in terms of the trades, you'd have everything hedged. We're about to do a juice box and get out of here. Kind of just throw this bitch up on the screen. So kind of just leave these like this for now. Got the ETH long going, juicing pretty hard so far. We'll leave it hedged for now. Same with the Biddy one. I think I'll probably shave a little bit just to kind of have the stop up here and kind of make like won't be perfectly hedged, but good enough for like a downside move to capture most of it. Now we'll just do a juice, a box, and wrap things up. I'm just gonna quick look at some of this data, see if anything changed. That top longer is still sitting there. One thing I will say though is that we have a lot of shorts opening up here right now, so we'll restart to rip on them, right? Also, it wouldn't be the first time that we've seen this. Like someone opened some like massive long on Bybit right at the top, and then just a bunch of shorts piled in, and the spot market just sends it flying. Almost as if someone knows there's about to be a large spot order executed and they long it to capture on the perp juice. Potentially. Yeah, in terms of a juice box, I mean, that's nothing we talk about, right? I guess just give us some thoughts. Also get a look at the lower time frame liquidity. 85. Same box as before, right? But the low time frame is looking like what? $885. Yeah, okay. Lower that a little bit. Boom, 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 boom. I mean, for the longs, hard to say. It's probably gonna be like this, like 886 golden pocket, right? Kind of rotation to grab the liquidity. Also, I think yesterday's VWAP was like around there, right? Like coming up like through that zone somewhere. Yeah, so it's gonna be like printing somewhere in this region-ish. Basically, like I'll be looking for like a bullish retest of the Valley area high in this zone. In terms of this fib, what's it looking like? Yeah, just like kind of stacking golden pockets right here. Clean up those single prints, grab the liquidity. Don't know if they give it, if they give that though, because there is like a bit lower time frame liquidity here. And might just be like a 382 and rip kind of thing, right? If we even go from here, it might just start bouncing and going again. So kind of just leave those kind of ideas written. I like golden pockets. Liquidity grab. Yeah, I mean, obviously look at the data. Plus, whenever you get an extended move like this, like the oscillator is gonna be like primed to have like hidden bull divs. So, how's all the CBDs looking? Not the greatest. They can go down a long way. The coin margin contracts will have them. But the USDT, USDC contracts, not as much, so... Yeah. Other than that... Okay, obviously all the stuff we talked about below, like these lower levels we already discussed. Also, just keep this in mind, right? I got like this is like a newer level we need to be watching. If we come down to like sweep just this garbage, clean the poor low, after like rotating back through value, we do have an outside day. So yeah, be mindful of that, right? I just say like the previous day at value rotation, and then everything else you already discussed, right? All lower levels have been discussed previously. So nothing new to address in that regard. And in terms of like a long from above, hard to say because at this point it's hard. It's like late. It's late, right? We've had multiple opportunities to get in on this move on the way up. So now, what's like the higher time frame looking like? Like the only thing I'd be comfortable suggesting from above would have to be like kind of what happened back here, right? Like this, like if you pay attention to like this, there's a bit somewhat similar what's going on here. Like we blasted up, barely had any pullback, then blasted up into the next value zone, which is like this kind of thing. Like this 94 level we've been watching. So essentially, you want to be seeing this kind of thing, where we like come up, consolidate, which is like this. And then we come up to that level, and then they retest it and just rip. So it's going to be after this 94k liquidity grab. Because these two zones are the most probable to be reversing. And in terms of getting an entry right now, you're a bit late. So you want to flip these levels if you're trying to get into a long from above here, because like quite likely we reverse or at least see like a more meaningful pullback, right? Like let's say we do bounce, go straight from here, we might just like do this, right? And then come back and like retest this like high time frame failed auction we've been looking at. We talked about on like the daily, which is like this thing. So like come up to here, ding, and then come in and retest this. So kind of keep that in mind. What is say bullish retest of the liquidity grabs above? Bullish retest of the liquidity grabs above. Or wait for the pullback after grabbing liquidity above. Bullish retest of the lower levels after grabbing the high time or the higher liquidity. So a lot of different options here, a lot of different ways to play this thing. But at this point, yeah, a little awkward, so you're a little late, right? We're how far off the lows at this point? Like $10,000, $11,000. Fortunately. Kind of the same story that we had here, talking about like shorting the low. Don't want to be a top longer, don't want to be a bottom shorter. In terms of the short, I mean, you missed like the initial setup, right? Like this 886 naked point of control grab, and even if you waited like on the lower time frame for like this kind of thing to start playing. If we do start to confirm and lose these levels, so you can get in on that. But first of all, it's gonna be the higher levels, right? Like that we've been talking about these higher levels for a while now. Like the higher time frame levels above have been previously discussed, so nothing has changed there, right? In that regard. I would just say be mindful of the order book and the squeeze, right? We've talked about how there's potential for a pretty crazy squeeze here. So if you see that like they're walking up all these orders again and again and again, probability of squeezing is going to get way higher, right? Because they're going to defend every one of these moves. Especially with how aggressive people are opening shorts again. You know, we talked on the way down, people were getting a little too comfortable shorting the bottom of these moves, and well, now people are like getting filled on these shorts a little too aggressively. Like here, for example, like a bunch of shorts open right here, right? And they haven't closed; they're already underwater. On top of the people that have taken shorts here and haven't closed at all. So be careful with that, right? Don't join a potential sinking ship. Unless there's a really strong edge, obviously. And from below... Probably be starting to do like a bit of like a low, like if this thing starts to like confirm. Thing is, I'd give it a bit more time. If we start to do like a 30-minute thing up here like this, like you can entertain that, right? So we'll kind of just leave that written on there. Kind of like the 30-minute failed auction starts forming. Speaking of failed auction, it's like literally the song. What are the chances? What are the fucking chances of that? And if not, it'd be like the bearish retest of the zone that we were looking at. Most likely. If we like come down, grab this liquidity, and then bounce the golden pocket and do the bearish retest at the value area high, and start heading lower. Essentially, like losing these golden pockets in single print after grabbing them all. Kind of just say bearish retest of like 89k. Because if we do start heading down from here, like the VWAP's gonna be coming in too for the day. Just like that. At that point, you're gonna be doing like a bearish retest, like into the previous day value or high, into the VWAP, blah blah blah. Typical shit. Keep in mind it's a holiday tomorrow, right? Let's not forget tomorrow's a low volume holiday. It's Thanksgiving. So potential to see very little movement here. We might just start sitting sideways right here. Potential to see some manipulation, right? Low volume movements. And Friday's a half day as well. So interesting times ahead. But that should do it though, right? Kind of got everything covered here. We've already been talking about all this stuff all week, along with these newer, lower time frame scalps. Yeah, so let's get rid of that. Let's get rid of this. Other than that, nothing to really yap about, right? Kind of just sitting sideways here doing fuck all. Yeah. Anyways, excited to see how the week plays out, right? Excited to see how these trades continue. For now, it is time to call it a night. So a chat shout out and get out of here. I'm done yapping. Shout out to NASCAR All Out. Been a minute, so shout out to him. We'll just ignore these fucking bots spamming in the chat. Shout out to Harris Kamal. What else we got in here? Shout out to Bebo, the COD God. Shout out to Mr. Debo782. I think that was it, right? Other than, oh yeah, shout out to Bailey2781. Couple new faces. Shout out to these people. Yeah, I'll be back tomorrow, usual time. Kind of continue on the grind as per usual, just nerding out on whatever it may be, whether we're looking at charts, doing TA, planning out trades, learning random stuff, watching interviews, whatever it may be, trying new tools, backtesting, blah blah blah, right? Endless amount of shit to do when ranking up in this game. I'm out here. So tomorrow I will see you all later. 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 Don't get got.